the Nifty is just scared of touching that 26,000 levels, right? Yesterday it was, I mean, for the first time over in a year that it closed above that 26,000 levels. But today we opened below the 26,000 levels, and right now trading around 0.4, 0.5% lower on the Nifty 50, at around that 25,900 odd levels. The Bank Nifty also almost in tandem with where the Nifty 50 is down, but not in tandem, slightly doing better than the Nifty 50, but still down by about 0.3 odd percent. Let's try to pull up the Nifty 50 heat map and see as to what are the counters that are actually putting that pressure. You have of course Dr. Reddy's on the back of that regulatory update that has come in, down by about almost 5%, HDFC Life down 1.6%, Bharti Airtel, Sun Pharma, Power Grid, all of these counters down by about 1% each. You have Tata Steel, Max Health, Infosys, M&M, all of these counters as well down by about 1% each. But something that's doing well, L&T on the back of good earnings, up 1.3%, Coal India up 0.8% as well. You have Shriram Finance, Maruti and Geo Finance in the green. And kind of keeping the Nifty in check. But let's try to pull up the sectoral heat map and see as to what specific sectors are buzzing in trade today. There's PSU Bank, which is, in fact, all the sectors in the red. The top loser there is Nifty Pharma right now, followed by Nifty Healthcare, Nifty Metal, and the defense also down by about 0.6 odd percent. And the least downtick is being seen in around PSU banks, oil and gas, as well as something like a Nifty Energy as well. But let's try to pull up the advanced decline ratio as well, because that is important to see. A lot of stock-specific action happening in the broader end of spectrum on the back of the earnings. You have around 850 odd advances versus that of 1,500 odd decline. So Puneet, I think the bears have taken the charge right now for sure, at least till the hour, and that's reflected in the broader end of spectrum as well.
Well, right, and we have seen that consistent global macro impact also on the Nifty as well as on the broader market as well. So today, at least a lot of individual movers, as you highlighted, Mahima, the mid cap and the small cap index as well, if you can pull up very quickly, down 0.4%. The small cap as well, it has been in momentum with the mid cap, but doing slightly better, but down still 0.33% as well. The BSE 500 really quickly, you will see a lot of individual names, as I mentioned. Something like a Web of Global is up almost 12%. Five-Star Finance, second day in the running. Yesterday, the stock ended up over 5 to 6%, and a similar trajectory to Blue Dart as well. So strong earnings are being rewarded by the market on the second day and the next days as well. Something like India Cement as well, while the numbers weren't that great, it has come up almost 4.5% on the losing side though. Something like a Vodafone Idea, Dr. Reddy's, Mahima just highlighted, Lakshmi Organics, and something like an Ixigo as well. That's arguably a key stock that's been under pressure throughout the day. Mahima spoke about to the management as well. A loss in this particular quarter is something that investors haven't liked at all. But to talk more about this queries as well, and do start sending them in, the WhatsApp number flashing on the top of your screen right now. You can also call us on the number that's mentioned on the bottom of your screen as well. But to talk more about this and a lot more in terms of answering your stock queries, I'm now being joined by Avinash Gorakshakkar. He's the founder and head research at Avinash Mentor Research Services, as well as Kush Bora, founder at kushbora.com. Gentlemen, good morning and thanks so much for joining in here for Ask Profit. Kush, let me come to you first, because we are seeing some pullback again on both the Bank Nifty as well as on the Nifty 50. You have been highlighting that the Bank Nifty, the strength seems to be there. What should investors do right now with something in the Nifty 50? Because we seem to be starting to be away and now again below 26,000. What should investors do if that's how we end today as well?
Sure. Hi, Puneet. First, very good morning. Hi, Avinash, and a very good morning to all the viewers. I think this is a consolidation phase, and for now, it seems to be a healthy one. Yesterday, also, we spoke about how the PCR had at one point in time, hit 1.22 territories, close to overheated territories, and even the RSI was back to 70 to 73 levels from where the Nifty, sort of saw profit booking last week. I think this is a healthy consolidation after a good up move that we've seen in the last month. For now, as long as the support zones are held, and that is 25,700 on the Nifty and about 57,500 on the Bank Nifty, as long as those levels are held, I think this will remain a buy on dips kind of a market. Yes, 26,200, not even 26,000, because we're very close to that, and that seems to be the pivotal level right now. But 26,200 seems to be that glass ceiling which the Nifty just doesn't want to break right now. So with that as a target, any dip closer to the 25,800 mark and on the bank nifty just below 58,000 should be taken as a buying opportunity. And just on a lighter note, it doesn't help that you and Mahima are both wearing shades of red. So yeah, maybe that is also contributing.
I hope that's not the thing. We'll stop wearing these colors then for sure, Kush. All right, moving on to the queries for the day. The first query is from Mr. G.R. Reddy, who is writing us from Hyderabad. He's holding NMDC Steel, 1,000 odd quantity, bought at the levels of 60 rupees, and saying that he's lost almost 25% of his holding down. He's incurring a loss of around 17,000 odd rupees right now. Wants to know as to what should be the next course of action for him. Can I buy more to average out? Is the question that he's asking. Kush, I know averaging out is not something that you generally suggest, but what's the view like where charts are concerned for NMDC Steel?
Absolutely, Mahima. So here too, the view remains the same. Don't average out. The stock has fallen from grace. 75 was the high that the stock made some time back. Quite a bit of fall. 32 was the low from where it rebounded. The stock actually was showing strength and was about to give you, a rounding bottom formation breakout above that 49 level. But that's precisely where, the rally has fizzled out from. And yesterday and today, the stock's seeing a very sharp gash. Volumes also picking up. So my suggestion would be you could at best continue to hold with a stop loss at 39, because if that level is broken, the recent rally that started and the recent uptick that the stock was starting to see will fizzle out and the stock would go sideways for a very long time. So 39 is the stop loss level. Definitely don't add more. But if this 39 level is broken, then you're better off exiting and switching to some other names.
Got the view, Kush. And Kush, I'm also going to be keeping a close eye on what you are wearing as well, starting tomorrow. But the next query, we have another caller coming in as well from Vijayawada. Harsha is dialing in for a stock query. Harsha, very good morning to you and welcome to Ask Profit. What's your query?
Yeah, I'm holding IndusInd Bank stocks of almost 40 of them at a price of 1,300 rupees per share. I bought them for long term, but I'm still having losses right now. So should I still hold on to them for long time or sell them off in losses?
Definitely.
I think my loss is 35 to 40.
Definitely, Harsha. And, it has been, there has been some challenges in terms of the management, which has now moved out. A new one has come in as well. Harsha, just a follow-up. Do you have any other banking names in your portfolio right now?
Yeah, I still have Woodcourse Bank and a couple of small finance banks, and I have ICICI, Axis, and HDFC.
Okay, got that, Harsha. So, Avinash, let me come to you because the challenges of IndusInd Bank and on the fundamentals have been well known. But would you suggest that you would be giving some time to the new management? It's a reputed name under Rajiv Anand that's come in. So that Harsha can recover some of the losses. He's bought it at 1,300 rupees per share. What would you recommend? And a very good morning to you and welcome to Ask Profit.
Yeah, Puneet, good morning. I think as far as IndusInd Bank is concerned, I think there could be a little bit of pain for maybe the next couple of quarters. Rajiv Anand, who presented the Q2 numbers, clearly indicated that, in the next, say, 2 to 3 years, they want to build a very strong bank. And I think, most of the negatives are now built into the price. I don't think you're going to see a very big negative surprise in the next couple of quarters, although profit growth trajectory would take a little more time. But I think one thing is very clear that with the new management, with the complete overall of the management team, I think, chances of another fraud happening are quite remote. So I think most of the damage is already incurred in the price. For the investor, I can only tell him that rather than booking a capital loss, stay invested for some more time. At least the next 12 to 18 months are very crucial. And hopefully the bank starts putting up a reasonably good show. I think the markets would definitely, re-rate the stock. So it's not that everything is lost. But in the near term, the momentum will entirely depend on the next quarterly, at least 1 or 2 quarter numbers. So I think rather than booking a loss, he should hold on. If he has a contra view and he can take the pain a little more, I think he could even average a little bit. But I think stay invested and have the kind of conviction here. All is not lost.
All right. Okay. All is not lost for IndusInd Bank is the view that Avinash has, and maybe average out if you can. All right. The next question is from Sanjay, who's writing us from Bengaluru and asking about Motherson. He's holding 150 odd shares, bought at the levels of 93. Wants a short-term view, a 3 months view on the charts. Kush?
Well, I think the entire sector has benefited and recently seen a good uptick. I think here too, my suggestion would be to continue to hold, because after that brief flash in the pan kind of a movement, the stocks have gone sideways. Samvardhana Motherson is no exception to that. I would suggest a hold on Samvardhana. However, there is a stop loss that you should have in place close to the 101 mark, maybe round that off to about 100. But overall, there is consolidation, which is healthy. Medium trajectory is up. But if it, in case the markets go sideways or the stock corrects, then 100 is the level where you want to hold up. This up move, if it continues, you could see levels of 112 and about 118, 119 kind of territories coming. But this would be a slow and steady move because, as I said, the momentum trade is already done on this one. Now, consolidation with an upward bias is the most likely move.
Okay, all right. So that's with regards to where Samvardhana Motherson is concerned. We've got our next caller. Dheeraj is calling us from Hyderabad. Dheeraj, hi. A very good morning to you. How can we help you today?
Good morning, ma'am. My query is regarding APL Apollo Tubes, ma'am.
Okay.
I'm holding 120 shares at 1776 rupees, ma'am.
Okay.
So I would like to know both long-term and short-term view for this counter. What sort of targets could I expect, and should I stay invested in this counter or should I shift to some other counter is my query, ma'am.
So Dheeraj, when you bought this counter, was it the fundamentals of the company that you saw or did you see the technicals?
Actually, yesterday they posted their results, ma'am.
Right.
They posted a good result, and the targets were given like around 2040. Some brokerage firms have given the target prices at 2040 and 2050, ma'am. So at in how many months could I expect at least 1850, 1900 levels, or should I add it at lower levels, or should I shift to some other counter is my query, ma'am.
Okay, Dheeraj, got your question. I take this up with Avinash then. Avinash, UBS also has today, kind of maintained by and hiked the target price for this counter to around 2,200. Your view with regards to this counter and whether he can continue to hold or maybe switch to some other counter?
I think, Mahima, looking at the Q2 number yesterday and the fact that second half is typically a much better period for the company, I would suggest, the investor should give in some more time. I think clearly with the infrastructure kind of, spending by the government, private capex going up, APL Apollo definitely should benefit, and they are one of those players who have been very innovative, very cost conscious. So I think they would definitely benefit from the overall growth in the volume opportunity. My sense is that this is a well-established management. A lot of funds as well as ultra HNIs are already invested here. And I think looking at the traction in the business, I think one needs to give in a time frame of at least 12 to 15 months. So I think, if the investor can typically keep this kind of time frame, I think he should obviously get a reasonably good risk reward, from the current level. So I think it's better to stay invested at the current level.
Got the view, Avinash. We have another query on WhatsApp coming in on something like an forging, if you can pull up the stock. Now, Lalita from Chennai has actually bought in at 673 rupees per share. So she's currently facing a loss of almost 36,000, bought 100 shares. And she's asking if we can, if she should hold on or average it down or sell. So Avinash, let me come to you again on this one, because both Bharat Forge as well as something like Ramakrishna Forging have been under pressure because of challenges in the US. Would you recommend holding on to something like an Forging because of the steep correction that we've seen in the stock? Does this mean that it's a good time now to average it out, or what would you recommend?
No, I think, Forging is a very large player in the domestic commercial vehicle market and, of course, the US market also. I think some amount of underperformance on the commercial vehicle side and the US market side has actually resulted in a little bit of disappointment on the numbers side. But I think, at these levels, I don't think further negatives could come in. And I think, the market should obviously look at this stock, at least what happens in the next couple of quarters. So rather than booking a loss, I would suggest it, that at least wait for the third quarter to come out. And thereafter, one can take a fresh review. But I don't think one should book out a loss. Keep the faith here. And I think, this is a very good company in terms of the product range, in terms of the machined kind of activities it does for its client. So I think at these levels, I think it's better to stay invested for the next at least 3 to 6 months and then take a refresh review later.
So hold on, don't book your losses. What Avinash is recommending, at least for Forging, it's an interesting counter to say the least. Has been under pressure over the last year because of fundamentals. But we have another caller coming in right now from Hyderabad. Ravi is dialing in for a stock query. Ravi, a very good morning to you and welcome to Ask Profit. What's your query?
Yeah, very good morning. Yeah, I have a query on GV Vernova T&D. So currently I'm holding 18 shares brought at 3170.
Okay.
Just want to know, does the stocks go upwards? I mean, will I be able to recover the losses in next 3 to 6 months?
And Ravi, are you okay with averaging down a little bit right now and buying into it? If is that something that you will be open to doing?
Yeah, if the stock has the potential to go upwards, I'm ready to do that as well.
Okay, Avinash, let me come to you. And we have been actually getting a lot of queries on this one because sometime around May, it was one of the most favored stocks of a lot of retail investors. What would you recommend on something like a GEVTND?
See, I think clearly, it's an MNC company, and I think, if the investor has a time frame of at least, 12 odd months, then I think definitely a bounce back is possible. They operate in a very niche space. The opportunity is very large. And in fact, recently, I came across some news reports saying that the government is planning a very big push for power, especially for power distribution and transmission. So, I think definitely this company could benefit if some regulatory and some benefits are offered by the government. So I think, it's better that the investor takes a slightly longer period instead of 6 months. If he can hold on for the next 12 months, I think hopefully something could happen for the better. I think better that he holds on rather than booking a loss in the short term.
Okay, all right. So that's the view with regards to G Varnova TND. But the next question is from Hari Krishna, who's writing us from Andhra Pradesh, asking about Tata Motors, the Tata Motors PV segment now, passenger vehicles company now, bought at the levels of 981. Wants to know if you can hold or sell. Kush, your view on the charts?
Well, from a very near-term perspective, I think there is some healthy consolidation that is going on. As per the split price, which is 409 right now, you are already seeing some sort of an uptick from the 390 level, post the demerger. I think you could continue to hold on, but don't expect a very big upside or rather a very fast one at that. I would suggest a hold from a 12-month kind of a perspective. This could be a steady up move. But I would be surprised, if there was a very sharp vertical rise on Tata Motors. So on the whole, the structure looks positive, but more of a positional bet rather than a momentum play.
Positional bet on Tata Motors is what Kush Bora's call on that stock. But the other one's on L&T. Now, Ekam Barai from Hyderabad has been, is writing us a query on the stock. He's bought it at 3,570. So it's on a decent profit. So good one on that, Ekam Barai. He's holding 25 shares of the company and asking if he should re-enter the stock right now or should he take some profits. Avinash, let me come to you because a decent set of earnings on Q2 as well for the company. What would you suggest for something like a Larsen & Toubro?
No, I think, Larsen & Toubro typically should be a core investment in your portfolio. And I think the best part is, the investor has entered at a reasonably good price. Yes, numbers for Q2 have been reasonably good. Typically, the second half is a period where more project ramp up and order execution happens. So I think, if the investor can keep the faith alive at least for the next, 12 to 15 months, I think definitely looking at the infrastructure opportunity, the kind of defense business they do, there's a lot of scale up opportunity. And plus on a consolidated basis, I think, most of the IT companies like L&T, Mindtree, which are part and parcel of this group, I think clearly we would see a better performance from these companies also. So the consolidated picture could look much better, Puneet. My sense is it's better to hold rather than booking out some profits now, because the risk reward, at least over the next 12-15 months, could be much better.
Got the view, Avinash, but we have another calling in from Bengaluru. Shiv Kumar is dialing in for a query actually. Shiv Kumar, a very good morning to you and thanks so much for joining in. What's your query?
Good morning, sir.
Good morning, Shiv Kumar. Go ahead.
Yeah, I would like to know about HDB Financials. I hold around 100 shares at the IPO price of 740 rupees. It's not showing too much of movement these days.
Right.
Though it comes from a very reputed parental company.
Yep.
I would like to know its fundamental prospects in future.
Yeah.
Whether I can hold it for long term or should I switch on to some other NBFC companies like Bajaj Finance or something.
And Shiv Kumar, do you hold any of the other financial names and what was the rationale before entering HDB? Was it largely basis of it coming in from a strong parentage?
Yeah. It comes from a strong parentage was my first and the basic reason to enter into this. And I generally apply for IPOs rather than secondary market. And I hold on the shares for a very long time.
Got that view, Shiv Kumar. But Avinash, let me come to you because we've seen 2 quarters now of results which have been weak for the company in the commercial vehicle side. Do you expect some recovery, or do you expect that we should switch out from HDB, buy something else in the NBFC space?
No, I think, see, clearly, my sense is that typically SDB is really a stock where I think you need to give in some more time, because obviously the commercial vehicle segment is a large business component for them. And I don't think you're going to see a very big dramatic increase over the next couple of quarters. So, the performance of this company can only improve only after this financial year ends. So if the investor wants a switch, then I think, there are smaller banks like Federal Bank, which I think would do better. Federal Bank has now got funding from Blackstone, plus they are doing very well on the on the MSME, or maybe on the NRI and the SME kind of side. So my sense is this could be a much better opportunity if the investor is looking for the next 6 to 12 months. SDB Financial is a good company, but as you rightly mentioned, the next couple of quarters are going to be challenging, and therefore there's unlikely to be any major upside, at least in the short term.
Okay. All right. So that's with regards to where HDB Financial Services is concerned. But moving on to the next query, Krishna Chaitanya from Hyderabad is asking about Piramal Pharma. He's bought at the levels of 257 and he's holding 1,000 odd shares in his portfolio. Wants to know if he can hold or exit in loss. Kush is sitting on a loss of over 54,000 rupees. What should he do?
No, I think you can continue to hold. Because yes, while there has been a sharp correction, in the stock over the last, almost for this calendar year, I think there is some bottom formation attempt that is very clearly in place. 180 is the threshold that the stock has tested not only now, but even the earlier part of the year, and attempting a rebound. So it's already seen, some, downside. But now there is a consolidation, mild positive bias coming in. I would suggest a hold on Piramal Pharma with a stop loss at 180. However, what I would also suggest is, don't wait entirely for your buy price to come in. Once the stock heads towards 225 and perhaps even 245, 250 closer to his buying price, you should start exiting, because there is a considerable supply pressure and resistance at the 250 mark. So yes, he could continue to hold, but start exiting at slightly higher levels.
Okay, all right. So now it's the time for first rapid fire round for Ask Profit. Avinash and Kush, you both know the drill. Try to keep the answers as short as possible. The first one is from Snehit, who's writing us from Hyderabad, asking about Bank of Maharashtra. He's bought at the average price of 59 and 1,050 shares is what he's holding. Hold or sell is his question. Kush, on the charts?
Hold, keep a stop loss at 55.
Bombay Burma is the other one. Suman from Kolkata is asking if he can hold for the next 3 to 5 years. Avinash?
Yeah, you can continue to hold.
Okay, Canara Bank is the next one. Arijit from Kolkata has bought 131 shares at the levels of 127.5. Wants to know if he can continue to hold or not. Kush, on the charts?
Oh, absolutely continue to hold. Keep a deepish stop loss at 120.
Laurus Labs is the other one. 904 rupees per share is what Jovan from Punjab is currently holding. Avinash, would you recommend to stay invested?
Yeah, continue to hold.
Okay. Akash from Calcutta is asking about Adani Ports. He's bought at the levels of 1457. Should he continue to hold or not? Kush, on the charts?
Yes, continue to hold. Keep a stop loss at the 1400 mark. On the upside, it could head towards 1495 and 1550 as well.
Of course, we're a standard disclaimer. The channel that you're watching is also part of the Adani Group, and so is the stock we spoke about. But MCX is the other one. Mohammed from Dubai is asking if it's a good time to enter. Avinash, would you recommend, given the current challenges of the company?
But I think it's better to wait for some time. Avoid buying now.
Okay, AB Capital is the next one, and this is from Snigdha, who's writing in from Delhi. She wants to know if this is the right time to make an entry. Kush, on the charts?
No, I would suggest a hold rather than a fresh entry.
HEG is the other one, Kush. Short-term view, bought at 510 rupees per share. This is Sunita from Hyderabad asking the question.
Yeah, you could continue to hold. If you want a fresh entry as well, then it's not a bad idea. 545 is the deepish stop loss. On the way up, second targets of 625.
Okay, MCX is the other one. Jaya Krishnan wants to know from a medium term if she can continue to hold or maybe average out. Kush, on the charts?
MCX, no, don't average out, but yes, you can hold stop loss at 8900.
All right, okay, so that brings us to the end of first, of course, edition of Rapid Fire on the Ask Profit. But viewers, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
Welcome back. You're watching Ask Profit. Now, the stock that we're putting a spotlight on right now is LRC Housing Finance. Overall, I think what the street is not liking is probably the muted PAT growth, which is due to higher provisions and sluggish loan growth of around 1.3% in the first half of FY26. Overall, home loan growth has been at around 5%. There is also a technical write-off that has taken place. But in fact, I spoke to Tribhuvan Adhikari, MD and CEO of LIC Housing Finance, on the quarter gone by. Take a look. My first question to you is that the AUM growth has come in at around 6% and disbursements were largely flat this quarter. Just wanted to understand as to what are the factors that are kind of holding back the loan growth, especially in the home loan segment?
Well, Mahima, honestly speaking, yes, the book growth is at 6% at the end of the quarter and was expecting it to be slightly better. The disbursements also are flat, as you rightly said. Largely because of, rather, I would say, a very subdued performance in the construction finance space or the project loan space, as we call it. We have not been able to show any growth in that. And partly the book growth has also been muted due to the pressures we are facing in terms of BTs, the transfers out because of the repricing. As you know, in the banks, when the rate cuts of overall 100% basis points have taken place, because banks are linked to the repo rate. So there was an immediately repricing of the new loans as well as the existing loan book. But we are, our rates are dependent on our PLR, which is not linked to the repo. So we had to take a conscious call on how far we can reduce it. We did take a call in the month of April to reduce our book by our lending rates by 25 basis points across the book.
Right.
So there was a pressure on rewriting and others, so which probably took off 1.5% of the loan growth. What we expected to be closer to 8% by the end of this quarter, but landed up at 6%.
Understood. With regards to the home loan, individual home loan, disbursements that grew around 3% YOY, but QOQ that's grown around 20% odd. How sustainable is that? Just want to understand that, or is that just a seasonal thing?
No, Mahima, it is not a seasonal thing. See, if you look at LIC Housing Finance over the years, Q1 and Q2 are muted in terms of disbursements and our business is concerned. Yes, Q2 is better than Q1, but Q3 and Q4 are the 2 quarters where we really show a good growth, better growth than Q1 and Q2. And these are the 2 performing quarters for us. So the home loan book, the retail loan book has been doing, I would say, satisfactorily. I would not say excellently. I would say satisfactorily. Yeah, the growth we are aiming for much more than that, but it is holding up. And we are hopeful in Q3 and Q4, the retail loan book will do even better. So that way, that is on the basis of that, I am, I would say, confident that the guidance of 10 double-digit growth of the loan book, which we had given at the beginning of the year, we'd be able to meet that.
Kush, on the charts, do LIC Housing suggest getting into the stock right now? Do you recommend that?
No, I'm afraid not. It's been consolidating for a very long time. Plus, there is an underperformance, relative to the other names as well. Look at a Campion Homes; it's done phenomenally well. Even a Repco Home, for that matter, has done well. So when the sector's doing well and the stock's not, it becomes a little difficult to pick that as a choice. And anyway, there are multiple resistance zones. 595 being the first one. On the upside, 615. So multiple resistance factors. So I wouldn't suggest, picking up LIC Housing Finance right.
Got the view, Kush. But we have another caller coming in from Kolkata. Surya call कर रहे हैं हमारे साथ एक question के लिए. Surya, very good morning. क्या है आपका सवाल?
गुड मॉर्निंग अभियान.
बोले सूर्या, क्या है सवाल आपका आज?
सर मेरा क्वेश्चन है तुम्हारा पुश बड़ा सकता है.
हाँ जी. कौन से स्टॉक पे है?
वो एचबीएल इंजीनियरिंग लिमिटेड.
एचबीएल इंजीनियरिंग
मैंने लिया था.
हाँ,
मैंने लिया था 156 रुपीज का 65 शेयर लिया था. तो मेरा क्वेश्चन यही है कि अभी मैं मतलब होल्ड कर सकता हूँ 1 से 2 साल तक. तो मैं क्या मतलब अभी सेल कर दूं या फिर और मतलब होल्ड कर दूं?
सूर्या जी, आपका प्रॉफिट तो बहुत बढ़िया है, आपने बहुत सही दाम पे लिया था. बट मैं ये सवाल कुछ से देता हूँ. कुछ 156 पे लिया है सूर्या जी ने. क्या आप रेकमेंड करेंगे अभी थोड़े प्रॉफिट्स बुक करना एंड देन टू स्टे इन्वेस्टेड इन द काउंटर? वुड दैट बी योर सजेशन कुश?
पहले तो सूर्या जी आपको बहुत 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 बधाई इतना अच्छा इन्वेस्टमेंट करने के लिए, और उससे ज्यादा उसको होल्ड करने के लिए. जब स्टॉक इतना ऑलरेडी अच्छा रन अप कर गया है तो इस पूरे प्रॉफिट के लिए आपको बहुत बहुत बधाई. अब देखिए, मैं इसको दो तरीके से उत्तर दूंगा. पहला ये कि अगर आप सिर्फ टेक्निकल बेसिस पे बात करें तो स्टॉक थोड़ा ओवरहीटेड है. यहां से थोड़ी प्रॉफिट बुकिंग आ सकती है और हो सकता है कि स्टॉक यहां से 880 900 के लेवल तक स्लिप हो जाए. तो थोड़ी प्रॉफिट बुकिंग इन लेवल्स पे बिल्कुल वाजिब है, तो करना बनता है. ये एक व्यू है टेक्निकल पर्सपेक्टिव से. दूसरा, अगर आपने 156 पे लिया है और अब तक होल्ड कर रहे हैं तो मुझे लग रहा है कि आप लॉन्ग टर्म इन्वेस्टर हैं, और जैसा आपने अपने प्रश्न में भी पूछा 1 to 2 years की होल्डिंग पीरियड है आपकी. तो मैं कहूंगा अगर बहुत ज्यादा ट्रेडिंग में नहीं पड़ना चाहते तो डेफिनेटली इसको आप लंबे समय के लिए होल्ड कर सकते हैं. तो दो व्यू है. इट्स नॉट अ बैड आइडिया कि आप थोड़ा सा पार्शियल प्रॉफिट बुक करें और फिर निचले स्तर पे ले लें. और अगर मान लीजिए आप ट्रेडिंग बिल्कुल नहीं करना चाहते तब बिल्कुल बने रह सकते हैं. अभी भी इसका जो मीडियम टर्म स्ट्रक्चर है ये इंटैक्ट है. आउटलुक इसका अभी भी पॉजिटिव है.
अविनाश, आई वांट यू टू कम ऑन दिस कि आर यू लाइक, आप क्या कुछ से सहमति रखते हैं इस व्यू पे?
आई थिंक डेफिनेटली पुनीत, ये शेयर ऐसा है कि अगर आप 1.5-2 साल पकड़ो तो यहाँ से भी अच्छी बढ़त मिलेगी, क्योंकि सी द बिजनेस मॉडल इज वेरी स्ट्रॉन्ग. काफी अच्छी ऑर्डर बुक कंपनी के पास में है और ये डिफेंस एरोस्पेस जैसे सेक्टर को केटर करती है. और जिस प्रकार से अभी इलेक्ट्रिक व्हीकल्स का ग्रोथ हो रहा है तो कहीं ना कहीं एचबीएल इज वेरी वेल पोजिशन. मुझे लगता है कि अगर आपका टाइम फ्रेम लंबा है तो आपको शॉर्ट टर्म में देखना नहीं चाहिए. और मेरे ख्याल से ज्यादा अपना जो कैपिटल है वो एक बार आप निकालिए और बाकी के शेयर्स आप कम से कम आराम से 1.5-2 साल पकड़ के रखिए. आगे भी ग्रोथ पोटेंशियल इस कंपनी का काफी सिग्निफिकेंट होगा.
Both technical and fundamental, analysts have suggested to continue to hold and maybe even buy going ahead. All right, the next counter that we're talking about is ITC. SR Satish is holding around 1,200 odd shares, bought at the levels of 422 since the last 1.5 years. Wants to know as to what will be the future growth aspect for this particular counter. And if he wants to shift to some other counter, which sector and stock would that be? Avinash, I'll come to you on this one. What's the view like?
I think, see, today ITC numbers are there, so we'll come to know what are the numbers for Q2, and I think what kind of commentary. See, I think ITC is a compounder stock, Mahima. I think you cannot expect multi-bagger returns here, but I think if the investor wants to take a call on some other sector, then I think, the PSU banks present a very good opportunity. I think something like a Canara Bank or a Bank of Baroda, PNB, these are stocks which have been largely ignored for a long time. So maybe not the entire quantity, but some part of the portfolio, if you can convert and shift into these PSU banks, I think that could be a better opportunity because here the alpha would be significantly more. ITC is really a great business, a great company, but I think in terms of the risk reward, I don't think any significant upside is possible. So, some amount of capital shifting will actually add a little bit of alpha to the overall capital, which the investor can put by booking out some profits from this company.
Right. Makes sense, Avinash. So thank you so much for that view, of course. We've got our next caller. Manav is calling us from Gurugram. Manav, hi, a very good morning to you. How can we help you today?
Hi, good morning. Good morning to everyone. So today I have a query on Eternal.
Okay.
So I have been holding on to these 80 odd shares at an average price of 260.
Okay.
So I have no difficulty in holding on to it for another 18 to 24 months of period. So is it okay? So if I hold on to it for this amount of period or maybe more than that?
Okay. Manav, you saw the fundamentals of the company while buying the counter?
Yeah, I saw and I was expecting a good Q2 result, but somehow that was also running back of my mind. So I want to get a view on if I can get a view on the Q2 numbers as well.
Right. Got it, Manav. I'll take this up with Avinash there. Avinash, I think for Q2, I think the three things that the street was kind of concerned about was one thing that the kind of inventory shifting model that has happened that was not factored in completely. Secondly, their dark store guidance was also slightly raised. So there'll be more pressure going forward when it comes to profitability as well. And the third thing, food delivery growth has been a concern in the past couple of quarters as well. Your view with regards to Eternal?
See, I think in the short term, these challenges will continue, as you rightly pointed out, Mahima. But I think, if the investor is looking at a slightly longer term horizon, at least the next couple of years, then I think, Eternal is definitely a well-placed player in the food delivery app business. My sense is Blinkit is also taking off pretty well. So clearly in the next 1 or 2 quarters, growth may not be great. There could be some margin pressure. And the second quarter numbers were not all that encouraging. But since the investor has invested at a lower level, I think his margin of safety is pretty good. So I don't think you're going to see a very major panic sell-off, because of any negative surprise. But yes, I think growth may possibly come only if the investor stays invested for the next couple of years. So I think, if he's not in a hurry and he wants to generate long-term value, I think it's better to ignore the noise in the short term and stay invested for long term.
Got the view, Avinash, but the next query is coming on a defense play, Apollo Microsystems, and our viewer has booked a 170% profit. Madhu is writing in from Hyderabad, and she's asking if she should hold / add more, so not looking to sell. But, Kush, let me come to you on this one. Would you recommend taking some profits on this counter or buy into it right now? Any view on Apollo Micro?
I would actually look to buy into Apollo Microsystems. The stock has seen, a sharp round of profit booking, but then the rise on this was even sharper. Vertically, the stock had moved from 170 all the way up until 350 level. So some profit booking was definitely par for the course. I will actually look for buying opportunities. In fact, if you see the last couple of months data, the volume accumulation on the upside was massive, and the profit booking that you're seeing is on the back of low volumes, which is suggesting that the weaker hands are being shaken out. So it's not a bad idea to nibble into Apollo Microsystems, the current profit booking that the stock is witnessing. Positional stop on this one comes close to the 250 mark, but up until that is held, I think this upward trajectory could well be intact, and I won't be surprised to see the stock head to about 320 and then the recent swing high of 350 in the coming months' time.
Very interesting, Kush. So definitely, Madhu, hold on to it is what Kush advises. And, congratulations on spotting this one early and on gaining the 170% as well. But we have another caller coming in from Guntur. Lakshman is dialing in for a stock query. Lakshman, a very good morning to you and welcome to Ask Profit. What's your query?
Yeah, very good morning to the panelists. My query is related to Finotex Chemicals. I bought the shares around 330, quantity of 450 rupees. 450.
Yeah.
So there will be a corporate action coming up. Split and bonus.
Yeah.
Because of that, there is any pressure on the share price because it will come down as comes around 25 rupees like that.
Correct.
Will it be a penny stock or I want to know the fundamentals whether I continue this count or not.
Yeah, I guess, Lakshman, it won't be a penny stock because of the bonus, but is there any rationale before you entered the stock? Because the chemical space had some challenges over the last 1 to 2 years in terms of pricing. So
only 1 year back, yeah.
1 year back, okay. Avinash, let me come to you on Finotex Chemicals. What would you suggest for this counter, and given that there will be a corporate impact, and well, what do you recommend to something like Lakshman in this space, or would you want to switch into another name as well in the chemical space?
No, I think, see, clearly Finotex is a specialty chemical player, largely operating, for the textile space and plus other sectors. See, I think typically now, since the investor has entered at a slightly high level and the bonus adjustment is going to come in, I think it doesn't make sense to panic and get out, because that would entail a big capital loss. So I would say that, let the bonus adjustment happen. And I think obviously to some extent, the average cost of the investor will also come down. But I would prefer that, he stays invested for the next 12-15 months. This is a good business. According to me, the second half for this company could be significantly better. And I think FY27 could also take off. Hopefully, the textile space is one where once we get little bit of clarity on the US tariff deal, then I think things should get better. But I think overall, they have a very good, strong bouquet of specialty chemical products. So I think stay invested and don't book a capital loss. I think at least the next 6 to 12 months hopefully should be better for the company.
Okay. All right. The next question then is from Wahida, who's asking about two defense counters, that is BEL and HAL. She wants to know as to what will be the right entry point to make an entry into these two counters. Kush, your view with regards to HAL and BEL, if this is the right time or maybe wait for some time?
Yeah, so BEL, she could consider entering now or maybe slightly lower, close to the 404, 400 mark. That's a support zone. My profit booking, but the stocks tested those levels multiple times and then rebounded. HAL, I would wait for some time. There's a double top formation and that is being broken down. So the stock could perhaps see some continuation of this profit booking, where 45, 50, 4600 could be the levels that the stock could test, and there it could become an interesting buy. My suggestion would be, even if she does consider an entry in some of these names, mind you that the momentum is not something that you're playing for. These are again more positional bets. They've had a consolidation period, and that could continue for some more time. So with just that caveat, about 400 to 404 zone on BEL as an entry point, and 4550 to 4600 on HAL.
All right, so that's with regards to these two defense counters. We've got our next caller. Govind is calling us from Hyderabad. Govind, hi, a very good morning to you. How can we help you today?
Hi, good morning, ma'am. Good morning to all of you, ma'am. Actually, I can looking for Blue Jet Healthcare for long-term investment, ma'am. I can thoroughly checking the levels, and then quarter results all are very good. Actually, with high growth trajectory there. Is it right time to enter, or any weakness or none?
Okay, and this is from a longer term perspective, I believe, Govind.
Yeah, 2 to 3 years, ma'am. Actually, I can hold 2 to 3 years.
Okay, all right. I'll take this up with Avinash then. Avinash, your view with regards to Blue Jet Healthcare, and do you think this is the right time to make an entry into this counter?
Yeah, I think numbers have been pretty good, and I think if the investor has a 2 to 3 year kind of time frame, they operate in the specialty space, in the CDMO space, and I think very clearly very strong bandwidth from the management. So I think they have generated a decent amount of value since its IPO. So my sense is in the next, say, 2 to 3 years, this could be a good positional bet. And I think instead of 3 years, even if the investor can hold on for the next 2 years, FY27 and 28 should be a lot better. So I think definitely one can add at the current levels and even do an SIP here.
Got the view, Avinash, but the next query is coming in on Sgility, and let's pull up the stock because it's firing up in trade today post its stellar quarter two earnings for the company, up almost 11% now at 56 rupees per share. Our viewer Satyan had bought it at 45 rupees and he's asking a long-term view on the charts. So let me go across to Kush real quickly. Kush, a stock that's done very well for its investors since IPO price of 30 to 31 rupees. What would you recommend in terms of Sgility? Stay on for some more profits on the upside?
So there's definitely momentum, and there's definitely volume-backed momentum. There's a breakout above that 55 mark today. So the stock's definitely in an uptrend. However, given the kind of run that you're seeing, not just today, and I'm just adding the last 15-day session where the stock's moved from 44 levels, it's not a bad idea to book 50% and then hold the rest with a stop loss around the 50 mark. You could well continue, or rather consider an entry at those lower levels. But for now, with the kind of momentum the stock is in, it's a good idea to book partially and then buy back the same quantity at lower levels.
Avinash, a very quick view on Sgility. Do you track the stock? How did you see the quarter two numbers?
So I think numbers have been pretty, solid. I think even the second half seems to be quite encouraging and better. In fact, that is why the market is very excited about the company. My sense is that, if the investor has a time frame of at least 12 to 15 odd months, then I think the scale up opportunity for Sgility is very large. I think they operate in the healthcare space, very strong traction from their customers. So I think keep hold to the stock. I think, see, rather than booking out, at these levels, the risk reward possibly going forward in the next, say, 12 to 15 months could be levels of 65, 70. So he could definitely get a better risk reward. The stock is a slow mover, normally does not go up every day by these kind of percentages. But obviously, if the numbers come in much better than expectation, then I think the stock will be re-rated even from the current levels.
Okay, all right. So that's with regards to where Sgility India is concerned. We've got our next caller. Ashish is calling us from Kolkata. Ashish, hi, very good morning to you. कैसे मदद करें आपकी?
गुड मॉर्निंग एक्चुअली मैं 20 जून से 20 मई से कोल इंडिया होल्ड कर रहा हूँ. कोल इंडिया मेरा प्राइस है 403.45 पैसा. तो फिर इधर पे मेरा 1305 क्वांटिटी है. तो रिसेंटली कोल इंडिया 402 तक गया था, तो उसके बाद फॉल हो गया. तो मेरा जो है मैं फंसा हुआ कोल इंडिया. अभी अनाउंस हुआ है तो इससे थोड़ा अपसाइड हो रहा है कोल इंडिया. तो क्या कितने दिन होल्ड करना पड़ेगा कोल इंडिया और इसका नेक्स्ट लेवल क्या होगा?
ठीक है, ओके. आपकी क्वेरी समझ गई मैं आशीष, और मैं ये खुश से सवाल ले लूँगी. कुछ कोल इंडिया, व्हाट आर द काइंड ऑफ लेवल्स एंड सपोर्ट एंड रेजिस्टेंस स्पेशली दैट यू आर वाचिंग ऑन द चार्ट्स, एंड व्हाट ही सेइंग इज कि 402 हिट करके वापस नीचे गिरा है, तो वो 403 हिट नहीं कर पाया. तो विल इट बी एबल टू हिट दैट एंड मे बी इवन क्रॉस बियॉन्ड दैट 402 और 3 मार्क?
तो आशीष, देखिए, मेरा सुझाव यही रहेगा कि स्टॉक ने ये जो 400 का स्तर है, ये पिछले 6 महीने में 3 से 4 बार टेस्ट किया है, लेकिन उसको क्रॉस नहीं कर पाया है. मीडियम टर्म स्ट्रक्चर जो है इसका, ये भी कंसोलिडेटिव टू माइल्डली नेगेटिव है. अब कल हमने इस स्टॉक में बहुत ही शार्प फॉल आते हुए देखा, और उसके बाद हम आज एक माइल्ड सा रिबाउंड देख रहे हैं. तो स्टॉक में एक नियर टर्म रेजिस्टेंस है 388 के आसपास. बट अगर ये क्रॉस होता है तब भी मैं कहूंगा कि 400 के आसपास फिर से इसमें आपको एक रेजिस्टेंस फेस करने मिलेगा. तो क्या वो लेवल क्रॉस होगा, मुझे लग रहा है थोड़ा सा मुश्किल है. तो मेरा सुझाव रहेगा कि फिलहाल इसको जो रीसेंट लो है करीब 375 380 के जोन्स का, उसके आसपास स्टॉप लॉस लगा के आप होल्ड करें. अगर ये ब्रेक होता है तो और नीचे स्टॉक फिसल सकता है, बट 400 के आसपास आते ही एग्जिट कर जाएं. प्रॉफिट की एंटिसिपेशन ना रखें. जो फिलहाल लॉस हो रहा है वही रिकवर हो जाए तो कॉस्ट टू कॉस्ट एग्जिट कर लीजिए, वो बेटर रहेगा.
Got a view, Kush, but next query is on Ganesh Consumer Products, and our viewer Rajesh Patel from Indore actually has bought it at 322 rupees per share. Stock's currently trading at 286. He's asking we should book loss or wait right now. Kush, would you recommend doing that?
Ganesh Consumer, is it?
Yes, Ganesh Consumer. Our viewer has bought it at roughly around 322 rupees per share. Stock trades at 286.
We need very limited data, recent listing, so I'm afraid I'm going to have to pass this one.
Avinash, did you by any chance look at this one?
Clearly, it is a recent IPO, and I think as of us are aware, IPOs have been priced to perfection. So I think, this is a very normal kind of reaction that post the listing stocks have underperformed. So I think, it's better that the investor at least waits for the next, say, 6 to 8 months. We could see quarterly numbers coming out from this company, possibly in the December quarter. And overall, the business is growing quite rapidly. In fact, Motilal Oswal has been one of the key initial investors. So my sense is that, this is a good growing business, but I think we need little more clarity on the earnings and on the management commentary. So till that time, it's better that he holds rather than booking a loss in the short term.
All right, so that's with regards to where Ganesh Consumer is concerned. We've got our next question from Bhav, who's writing us from Gurgaon and asking about good stocks to make an entry into from the next 3 to 6 months perspective, and also a specific one on 5-star, whether it's a buy, sell or hold. In fact, he's also saying that he really appreciates all your presentation, Puneet. So, of course, he's a great research analyst. But Kush, your view on what Bhav has to ask.
Yeah, well, let's start with 5-star. The stock was consolidating, good rebound, near-term momentum, picking up. mild resistance around the 665 mark, which is the 200-day moving average. So on the whole, I think despite the kind of up move, the risk reward ratio to high levels of 900, 950 is still very much positive. So I remain constructive on 5-star. Positional stop at 590. Now, as far as this other query goes, which are some of the good stocks to buy? I think GMDC is one of them. We've reiterated that on the channel multiple times. Also adding to the list is, a Canara Bank and JK Tires. So these are some of the stocks that, look good. And we've discussed, as I said, time and again, all these stocks on the channel as well. So he could well consider some of these names for, a 6 to 12 month kind of a time horizon.
Got the view, Kush. But viewers, it's time for a second round of the rapid fire. Kush as well as Avinash, you know the drill. Please keep your answers as short as possible. The first one's on Bondada Engineering. Viewer Murli from Bengaluru holds at 465 and asking for a 12-month view. Avinash, your quick view?
Yeah, continue to hold.
KFin Technology is the next one. Ashok Pai from Bengaluru wants to know the right entry point to make into this counter. Kush, your view on the charts?
I think closer to 1080 is very good, consider an entry.
Chambal Fertilizer is the one. Avinash, would you recommend holding on to the stock?
Yeah, continue to hold.
Okay, Sunny's question is the next one. He's holding Ola Electric 10,000 quantity bought at the levels of 56. Wants to know for the next 6 months what are the charts indicating. Kush, your view?
I'd suggest an exit, but if he does want to hold on, a strict stop loss at 48.50.
Hindustan Construction is the other one, asking for a long-term 1-year view. Avinash, your view for Ayan?
Yeah, continue to be positive.
Okay, the next one is on IRFC. 189 shares bought at the levels of 197. Hold or sell from a longer-term perspective. Avinash, your view?
No, I think continue to hold. I think it's a play on the railway sector, so continue to hold.
Okay.
Crompton Grease is the other one. Kush, would you recommend holding on to this one as well?
Well, the structure is very, very, it's a little low. I would suggest a hold, but with a stop loss at 280, a very strict one at that.
Okay, Paytm is the next one. Srikanth has been holding since the IPO price. Whether he should hold or exit if it reaches the IPO price. Avinash, your view?
Yeah, I think if he's got a 2 to 3 year view, I think he can continue to hold.
Polycab, a long-term view. Avinash, at 5,900, our viewers bought it.
Yeah, here also I think the stock looks quite promising from a long-term potential. Continue to hold.
Chambal Fertilizer is the last one. Nagashri from Dubai is asking this question. Is bought at the levels of 574. Hold or sell? Kush, on the charts?
Yeah, Avinash has just given a hold on this. My view is a little different. I would suggest, an exit out of Chambal Fertilizers from a near-term perspective.
All right, okay. With that, it's a wrap on this edition of Rapid Fire as well as Ask Profit. So, Kush and Avinash, thank you so much for taking out the time and giving us all those insights. Viewers, as I said, we're completely out of time on this edition of Ask Profit, but know your company on the other side, so do stay tuned.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets. and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can.
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandnani and you are watching NDTV Profit. Our special segment KYC is there and the company on the radar today is Sgility. Of course, on back of earnings, it's buzzing in the street as well. Brokerages are upgrading and interestingly, numbers have been on the stronger side. But the key questions in our segment we are going to be asking about the companies is what would be the margins triggers, going ahead. The street wants to know. Of course, the earnings is very important. But apart from that, there are other things also which we should be watching out for. The second question would be what led to the guidance? Of course, Varsha was hearing the con call as well, and there was a revenue and EBITDA guidance upgrade also. Outlook coming in on the broad path, the acquisition was there, and where the cash deployment would be. It's a product-based companies, whether this will be an AI acquisition or another inorganic acquisitions, that is something which we will be watching out for. Also the debt reduction plans, of course, from IPO itself, debt reduction has been there, but will that be complete by FY27? That's the street question which we are looking out for. The outlook on the US healthcare system, what are the important benefits or the impacts which could see, and the demand trends in client additions. A lot of moving factors going ahead for this company, Varsha, but what's the entire detail about the company itself? Where does the company actually stand?
Well, thank you for that, Sharad. Let me explain in a very easy way what does this company do. So basically, this company takes over complex or non-medical tasks that are essential to healthcare but are very, costly for US companies to handle. So, for example, for payers, that is health insurance. So there are two clients for Sgility. One is health insurance companies, and the other one is, hospitals and doctors and clinics. So for payers, that is health insurance companies, what Sgility does is they handle the claim process, then ensuring that claims are validated and paid accurately. They also provide data management services in onboarding and verifying their health providers in payer network. For hospitals, what they do is they manage end-to-end management of financial operations from pre-service insurance verification to post-service building. So basically, all the back working is been done by Sgility Healthcare, and that's the product-based company that Sharad was talking about. So it's nothing but the non-medical task that doctors, clinics, all health insurance companies that couldn't do is hand over to Sgility, and that's the basic business model of this company.
Well, that's a very interesting and a very simplified way. Thank you very much, Varsha, for that. But our viewers are waiting for what are the key parameters that will be judging them, this company on the KYC itself. Let's just go through the parameters and then we will go into the income statement first. Of course, balance sheet, cash flow, return ratio, shareholding, street cred, and valuation and outlook. These are the 8 parameters where we will be judging the company in our show KYC. First of all, income statement. That's something to look at. Numbers are pretty good. Varsha has also picked up some numbers over here, and if you see the overall data itself, it's not very big because it was recently listed last year itself, but overall the growth numbers, the revenue jump, that's been significant. EBITDA margins, they have maintained. EBIT margins, you could say flattish, but on the higher side at 26%. But look at the PAT numbers, that's what the street actually likes. 590 crores in FY24, FY25 it was 810 crore rupees, and the main reason for the stocks buzzing in today's trade as well is the Q2 performances. The performances came overnight. There was a 25% year-on-year growth coming in. Revenue, EBITDA also, the story remains same. Slight dip in margin, but still at a healthy levels of 26%. But here as well, second time, net profit takes the cake. Almost 84% up on a year-on-year basis, and the margin trajectory itself that has been good, and we could say it's kind of stable at 26% plus. So from my side, the income statement, this would be a thumbs up. Nothing much to be concerned about regarding this income statement. I'm sure there's something in balance sheet. What you're looking at?
So, a very interesting case when it comes to Sgility's balance sheet, and one of the reason, why the net profit, there's been huge spike in net profit is because of lower interest costs. Because if you see their balance sheet, look at their balance sheet, their borrowings from FY24 from 1,934 crore has been reduced to 690 crore. And they want to go debt-free by FY26. So overall, if you see, the highlighting factor in balance sheet is nothing but the reducing figure of borrowings, and that's the reason why we have given a thumbs up. Nothing much to be added, when it comes to balance sheet, because this is the only thing why we have given a thumbs up. And when a company had come with an IPO, they had clearly mentioned that they want to, cut down their debt, and the IPO proceeds are being used to cut down the debt. And by FY26, by end of FY26, you'll see this company may go to debt-free status, and that's where from FY25 to FY26 you will see a huge spike in net profit because of the reduced interest cost only. So thumbs up from my side when it comes to balance sheet.
Well, that's a very interesting point Varsha made. But cash flows, Varsha, looks kind of optically very strong. Operating cash flows have jumped up from 973 crores to almost 1214 odd crore rupees. PAT has also been a good number, and Varsha had stated earlier that this number might go up as well as the interest costs come down as company pays out its debt. Cash flow to PAT conversion, that has slight dip has come in if you compare that with FY24 itself. Net cash flows, there is no clear trend as such, but interestingly I would just like to point out that in this FY25 itself, there hasn't been much in the net cash flow segment. So net it's neutral. It's not very superlative as what we saw in the income statement or even the balance sheet, but from my side it's going to be a neutral rating going ahead.
Right, talking about the ratios, let's see what that number pans out to be. From in FY24, if you see, the ROC was around 47%, which has increased to 55%. Now this is on the back of the strong financials that the company has seen. So again, because of the good, rather increasing income statement, you're seeing this number go up, and one of the reasons why we have given a thumbs up when it comes to return ratios.
Well, that's pretty interesting. So till now, I think we did 4 parameters, and I think 3 of them they have done really well. What matters is numbers, what matters is earnings, and the company is showing. But let's look at some other numbers also. It's very important. And shareholding numbers we crunched, me and Varsha together, and over here not much history because it's just been 14 odd months since the company has been listed. But look at the numbers. Promoters, of course, they did sell their stake, but FIs lapped up. They have doubled their exposure from 3%, now it's at 6 odd percent. And interestingly, where the promoters did a sell, DIs lapped it up. Look at that. That's a double exposure going up. 7%, now that has gone up to 15%. We understand flows in the institutional part, but even the retail has not, left behind in the race. They have also almost double, you could say, from 7% to almost 12% in the shareholding pattern. And this is just a change happening in just 6 months. So that you can see how important this important number is there, which is flashing on your screen. So from the shareholding pattern perspective, I would like to give a strong thumbs up as well for Sgility.
Talking about the street cred, there now, if you see, we have given a thumbs down because company has not given much returns to its investors. The year to date, if you see, the return has been mere 1%. The last 6 months, company has seen 21% of returns, and in last 1 month it's 19%. I'm not saying that this is a very bad number, but not exciting number, to be said. So overall, we have given a thumbs down, considering not an exciting returns that the company has given.
Well, that's true. When the returns are not exciting, what happens? The valuations turn a bit favorable. And that's what's happening in this stock as well. The price to earnings, the EPS numbers, there have been, slight jump coming in, but the P numbers, that's what I'm looking at. FY26, the numbers state at 31 times its price to earnings ratio, and for FY27, this comes in at 25 times. It's largely net in line with what the peers are having in the mid-cap product IT space. And a strong up moves is coming, at least in this space as well, because there is a hedge if you compare that with big service IT company players as well. From my side, it's a neutral rating. Nothing much to talk about, especially regarding the valuations. Let's give it more time, and then maybe we'll have some more information on that.
Yeah, onto the outlook, which is the last parameter when it comes to the KYC ratings. Overall, if you see, the H2 and Q3 and Q4 for this company will be very good. So they are expecting this strong momentum to continue in H2 as well. Now, the important point, and maybe one of the reasons why the street is excited, because that's showing into the stock price, because they've increased their guidance, their revenue guidance to 21% revenue growth from 20% in last quarter what they've given, and they've also increased their adjusted EBITDA guidance to close to 25%. Debt to equity, debt will be fully repaid by FY27, and synergies is also expected when it comes to their broad path clients. So overall, Q3 and Q4, considering a strong quarters for the company, they're expecting this strong momentum to continue. And overall, the outlook, considering the deal wins, considering the broad path synergies to the business, considering the revenue increase in revenue guidance, we've given a thumbs up when it comes to outlook. So overall, outlook, from an outlook perspective, it's a good one.
Yes, and we did have a problem while we were discussing that what are the negatives for this company, and of course most of the parameters actually stood out. And just to get in our viewers who are just tuning in now, the most important thing is let's just revise all the ratings which have happened in the KYC segment. 2 thumbs up coming in, income statement and balance sheet. Cash flows largely neutral. The information is also on a limited basis. Return ratios, Varsha had pointed out, they are on the positive side. Shareholding also, we have given a +1. Street cred, not much returns coming in for shareholders who are holding the stock, say after the listing. Valuations still on a neutral basis. And lastly, outlook. That is what the street is cheering, Varsha. That overall there is a strong momentum coming in. So from our side, 6 out of 10. That's on the higher side we generally give when we have a KYC rating, KYC right? Ratings. So I'm of course new to this show, but Varsha is quite helping me a lot in this segment. But there's another person who will help us a lot in this segment, and that's the management of the company. Joining us, we are having Sarvabhauman Doraiswamy Srinivasan. He's the Executive Vice President and the Group Chief Financial Officer at Sgility. Good afternoon, sir. So first question, of course, would be the street is asking, is the second quarter numbers, but more than that, it's the con call. In the con call, you had stated that there is an increase in the guidance for the revenue and EBITDA. There is a slight increase in both sides. What led to this? What are the factors that led to you increase the guidance going ahead?
Yeah, firstly, thanks for having me on the show. Like we said on the earnings call, the synergies that we worked with BroadPath, the improved operational performance. In the last few years, the company has been consistently investing on new gen technologies, and AI has helped us improve our profitability significantly by almost 100 plus bits in terms of the operational performance. What we do is core to our clients' operation. So it's not a discretionary spend, which means we are fairly in a, I wouldn't say a risky, but in a recession-proof sector where our revenues are stable. We are not a fast-moving company. We are a slow, steady, gradually moving up company. You can expect sustainable results. And from a margin perspective, the new wins that we have done gives us the confidence to have a better set of numbers going forward or in the near term. So in our business, H1 is fairly softer in the sense like though it has grown year on year healthily. What we see is the open enrollment season that comes up, and with the acquisition of BroadPath, Q3 we expect a lot of work on the open enrollment season. So Q3 is likely to be significantly a good quarter compared to Q2.
Understood. Hi, Mr. Srinivasan. This is Varsha this side. You were expecting some dilution in EBITDA margins because of the BroadPath's integration, considering BroadPath being on the lower margin profile. But still, there's been increase in margin. So just wanted to understand the levers behind the margin improvement.
Yeah, BroadPath acquisition at the time we said that it will dilute by around 100-120 bits because it's predominantly an onshore delivery, and our onshore delivery in our business, the margins are primarily determined by from where the business is getting delivered. So the offshore being the highest margin generating companies, while the onshore will be slightly lower. So BroadPath is all onshore. So the weighted average will pull it down. But with our operational efficiencies and the technology has given us good performance in the offshore businesses, and our margins have improved because of operational efficiencies and good cost management.
Well, a very interesting point made for these acquisitions as well. But speaking of acquisitions, Mr. Srinivasan, there is a significant cash balance also in the company's books as well. And I always ask a product company, and I always asked Varsha also, that in the entire space, largely it's not about buybacks. That's what we heard from a lot of players in this product space. Are you looking at some more acquisitions? Because there's a lot of cash, coming up in the company as well. Or would there be any way to reward the shareholders, or are you looking at for expansion? And because AI is also the important keyword as well for you.
Yeah, we make slow and steady progress. M&A has been our core to our business. In the last 2 years, we have made close to 3 acquisitions, and we always look for niche capabilities in the sector and also access to mid-tier clients. So acquisitions are always on the lookout, and the company would want to plan its cash prudently. We have debt on the balance sheet. We have a repayment schedule. We would want to clear that out soonest. And as a small step towards giving back to the investors, we have started with a very small dividend, but that's more to show the intent of the company. I'm sure we would want to reward our investors as well, but company's intention is to invest in the right areas and grow forward and take the momentum that's there in the market and use the opportune moment. And that's why we would want to conserve cash for our M&As, repayment of debt and stuff like that.
Understood. Also, Mr. Srinivasan, now you're expecting to be net debt free by FY27. Just wanted to understand how this is gonna impact. Of course, this is gonna impact positively to your PAT, but any target number that you've set for yourself with respect to PAT margin, considering the lower interest cost or zero interest cost by FY27?
See, you can do the math yourself in terms of once the interest goes out, what's the PAT will be. But we have not really set out a target. But what we would want to do is invest strongly in technology and new age technology, invest more on client relationships and expansion into the sales. And how do we grow? Because we feel that for our business, the margins are healthy and of course, aided by AI and other technology that we use as part of our operations. And we would want to reinvest back into the business and take the momentum that's available in the market today.
Understood. Also on to the broad parts revenue, because I believe the broad parts revenue would be higher in Q3 and lower in Q4. Is the trajectory to be same? Will you see impacted broad parts revenue when it comes to Q4?
Yeah, broad parts revenues will not be as high as Q3, but Sgility's organic business has a good Q4. So from a market, the street may not see the difference, but what we think is Q3, Q4 are going to be healthy, and our H2 overall will be definitely better than H1 in that sense. So it's a seasonality that we have. We have a pattern in the business, and Q3 growth largely driven by Broadpath and Q4 by Sgility. Of course, Sgility Organic also has Q3 growths.
So basically, Mr. Srinivasan, to just kind of make it more simpler for our audience, there is a hedge happening. One is Sgility's business model, and of course the new acquisition which you have taken in. So you are trying to actually remove the lumpiness which we see in a year. So in order to do that, maybe the merger and acquisition which you might have in the future, they can help you out in your H1 numbers. Am I right?
Yeah, it could. It depends on which target that we are pursuing. But broadly, in this industry where we operate, the open enrollment season is somewhere between October and January. So that's where there is a spike in margin. But otherwise, what we do is core operations. The revenue is likely to be stable. We are looking at newer areas of supporting our clients. So the growth has never come from taking wallet share from others. It's doing more newer areas and newer capabilities that they have never offshored. So that's the key focus. It's newer capabilities is our focus.
Mr. Srinivasan, what will be these new areas which you were talking about? It's a very stable business model. You had pointed out earlier in the IPO as well in today's interview also. But just give us some more flavor about these new areas, what it is, which are the categories, where some inquiries are coming, where you might be building a product around it. Can you just give us more light into it? That will be very important so that the future outlook of the company comes in our show.
Yeah, traditionally, most of our companies in our space, we have been doing a lot of administrative work. Now there has been a significant focus on the clinical space. So if you look at a dollar premium, almost 70 cents of that premium, 70 to 75 cents of that premium goes towards the medical care or supporting the medical care. And the balance 20 is towards profits, other expenses, and all the administrative cost, including IT. This is for a payer organization, I'm saying. So we are now trying to get into how can we help support using our AI into the medical space as well. In the sense, like, for example, if there is a prior auth coming in and it's an unstructured document, it's a medical record of 70, 80 pages. So we have deployed AI technology where it can cull out relevant portions that are required for a particular surgery or a treatment, and then it compares it with the insurance policy that that person has taken, and it helps the nurses with all relevant data fields available on a single screen to make better decision making. And then the more you click on, you just go and validate what the AI has done. So the machine learns by itself, it improves efficiency, broadly bringing the average time taken to solve a problem. So thereby, the resources that we deploy in are the cost is lower and hence resulting in margins. So we are trying to get more into the clinical areas. And Ramesh yesterday on our CEO on the earnings call explained about 4 or 5 use cases of Gen AI. So we are trying to get more into the clinical space as well.
Understood. And sir, on to the So we all know that US healthcare is going through challenges when it comes to rising cost or shrinking margins and growing regulatory complexity. How this is impacting Sgility as a company?
See, rising cost has always been a challenge in the US, and so it would always be an opportunity for Sgility because when my clients wants to take out costs, then obviously companies like Sgility become the first choice. In the sense, the more proven expertise, deep domain expertise that we have got, sometimes we understand more than our clients in the way they operate their systems. So it's because the team has stayed together. We have done a lot of good work in deep operations, and we understand and tell the client as to which are all the areas that a technology, when deployed, can be very effective. Rather than a company going with a set of AI developers to say, hey, what's the problem that you want me to solve? And we don't ask those questions. We know where those can be deployed, where it will work, where it can be more effective. And we help our clients. And we don't charge upfront on an IT development. We try and solve it and reduce their operation cost. And the gain share model is worked between us and the client.
And Mr. Srinivasan, you spoke about clients. The client addition trends, how is that actually panning out? Will you be adding more clients in your new areas, where you're looking at, or the client stickiness continues for your old business as well?
It's always a wish list to add more clients, but in this space, it's not very easy to add clients. The sales cycles are very long. But obviously, our client relationships are very strong. We have multiple touch points at multiple layers. We have touch points with our clients. So obviously, the existing clients will continue to grow. That's our intent. We want to grow, and I can't say no to a business from my existing client, or I don't want to say no to an existing client. And yes, we are wanting to add more clients in the mid-market segment. We are trying to come up with a BPaaS opportunity that, again, Ramesh explained yesterday, where we want to take up the entire operations of a mid-tier or a smaller player and do an end-to-end service for them. So we are trying out newer areas.
Well, that's very interesting. We're trying out new areas, and of course, we can say Sgility does have some agility. But thank you very much, Mr. Srinivasan, for joining us and talking about your company and its growth and future plans going ahead at our show at KYC.
Thank you.
Well, moving on, that's it for the show. Thank you very much for joining us, and thank you very much, Varsha, also for the information and the help for this company as well. Keep watching NDTV Profit.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you are doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We we unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
That's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है
Markets volatile for the day on Dalal Street. Nifty holds 25,900. Sensex sheds over 450 points. Metals, FMCG and IT top laggards. Trump slashes the tariffs on China to 47% from 57% after high-stakes meeting with China's Xi Jinping, says dispute between China and US has been settled. Helmet and two-wheeler accessories manufacturer Studs Accessories launches its IPO today. Price band set at 557 to 585 per share. Airtel, Vodafone and Indus Towers are in focus after the Supreme Court's AGR judgment was released. The order restricts any relief package only to Vodafone Idea, not other telecom players, making it negative for telecom peers like Bharti Airtel. Good afternoon. You're watching Markets at 12 and I'm Nisha Podar. Let's take it straight to the markets, which is a volatile day of trade and weakness seen in the market clearly. Nifty 50 has given up on the 26,000 levels at the current moment, down by about 140 odd points. If you really look at the contribution for Nifty 50 at the particular moment, L&T, and there are only a handful of counters and heavyweights which are really contributing or are in the green. Larsen and Tubro is having the best day when it comes to the Nifty 50 components. Coal India is also doing well, BHEL, SBI. So if you really look at the theme, the PSU side also to some extent is one space which is doing much better in terms of the sectoral breakup for the market as well today. It's the energy space as well as the PSU space. Those are the two important pockets which are slightly better than the negative sentiment that we are seeing and the markets being under pressure. All right, so that was about the market, but remember we are in full swing in the earnings season, and let's take it to one important company which has really given its results. So Fino Payments Bank is in focus. The company is down more than 2% in today's trade, that particular counter, after company announced its Q2 results. Ketan Merchant, who's the CFO of Fino Payments Bank, joins us now on NDTV Profit. Ketan, it's always a pleasure speaking to you. First of all, give us a small roundup of what were the highlights of this particular quarter for you, and then we'll take it forward.
Anisha, my pleasure as well, speaking to you always. I think I'm not going into the results. Results are out. We have had a benign revenue and a profit. However, there are a lot of good silver lining which has come across, which I can say. This particular quarter, we've had our relative highest, one of the highest quarters for our CASA acquisition, which is a very important aspect. So we opened, more than 9 lakh new banking accounts for our customers. That is a real big thing for us. Our CASA revenue has increased on a quarter-by-quarter basis, or rather a YOY basis, by 21%. The renewal income, which we go with in our CASA, has increased by around 36%. We've had some moderation coming in our digital business, which is an important aspect as well. That is largely driven by some of the ecosystem and regulatory challenges. But as we speak today, we're expecting a good amount of recovery coming in the H2 in the digital business as well. One more aspect which is been a bit slow for us is in our transaction business, wherein again some regulatory impact has done that off. If I have to summarize, despite a moderated revenue, there are our margins have increased by 5.75%. So that shows our focus on the profitability and how it all will work around as well. Our EBITDA has, on a YOY basis, has grown by 8%. However, we've got some incremental depreciation coming, which is impacting the PBT and PAT.
Right. So that's the synopsis and the key highlights, Ketan. And, one important thing that really stands out for your performance is EBITDA margin at 15.4% versus 12.6%. And that is aided by the evolving product mix. Can you give us more details on this, and how sustainable is this margin going forward?
Yeah, thanks. That's a very pertinent point. As I said earlier, our transaction business, which is the lowest margin accretive business, is going down in a disproportionate manner. Yeah. That is getting replaced by our CASA business, which is increased in the revenue mix to the extent of now 40%. Digital remains in the range of 16% or so. So that is one of the reasons why our margins are increasing. As regards to sustainability, we are bottom line focus, and we expect margins to be, this elevated level to be largely in range bound as well. However, we're expecting a better profitability coming on account of the operational efficiency as well. So we expect, and typically for us as well, H2 is better than H1. This time also we are expecting H2 to be relatively more better than H1 on a profitability basis.
Right. When we talk about the profitability, that definitely has seen a ramp up and of course the efficiency also that you mentioned. But we are in a digital age and the new age aspect is very important. Now your revenues, Ketan, have been impacted by the drop in the digital and transaction business. Give us a little sense on that and the future outlook on how this is going to really impact your performance going forward.
On our transaction business, this is our legacy business, and anyway, we were not expecting too much of a growth out there. So the fallout there slightly more than what we anticipated, but it is not a matter of concern for us. On the digital space, yes, that is the domain which is growing, and we are also at the helm of in terms of our digital place. Here, I'll just give some statistics. Whilst our revenue on a YOY basis for the quarter has reduced by 20%, on an H1 basis, it is grown by 16%. Here, the logic and the reason is we've taken a very risk-calibrated approach. There is too much happening on the ecosystem and the regulatory aspects out here. So from an outlook perspective, as I earlier said it across, we want to believe that the bottom has been reached and there is a very steady recovery happening on a gradual basis in Q3 and Q4 and going forward back to the digital aspect or the digital space.
Right. Going forward for the next quarter, Ketan, or the present quarter that we are in, what are the key aspects and the guidance that you would say give for this performance?
Whilst we've not given a formal guidance in terms of the numbers, but I can give you what would be the key drivers out here. As I said, our CASA momentum in Q2 has reached its pinnacle in terms of number of accounts opened. We expect that momentum to continue. And just to, so that we give a perspective, CASA for us generates the highest margin of 54%. So that will continue to be the growth driver for us. Second aspect, which we are in that phase of recovery, is what I was telling about digital as well. Both in Q3 and more in Q4, we expect that recovery happening on digital. So both of these taken together, which contribute, or rather, which are considered to be the high margin products or margin of around 44%, are expected to grow further or have a recovery. So that should be the focus areas for us. As I said, we also manage cost very tightly. So our profitability in H2 is expected to be better as compared to H1. Typically on a cyclical basis also, there is a skewness towards H2, but this time on account of all of these measures taken together and efficiency, we expect enhanced profitability coming in H2 over H1.
And when we talk about your NIMs, that slipped to 4% versus 4.1% on a quarter-on-quarter basis. Ketan, what caused the compression and have they really bottomed out now?
So the NIM is also essentially a function of how the market has been, the interest rates have been going across. I think all of us know that if you look at how the market has gone over last, or if I take a YOY basis, there may be an impact of around 100 basis point which we've come. I think, we managed our ALM better in a manner that we've not allowed a higher compression happening, where the industry is seen a higher compression. We've been reasonably able to maintain it at a 10% of what the industry is seen. We have a very distinct advantage out here in terms of our cost of funds. We have our average deposits have grown by 36%. We have a 2,300 crore liability book, and that cost of funds is around 1.9 to 2%. So this is our advantage going forward, depending upon how the rates come through. But we expect this NIM to be slightly improved as well in Q3 and Q4.
And how achievable is the vision target of sub -1% NNPA for the company?
No, I think, we are in the payment bank space, so it may not be too much of a relevant for us as we do not currently have any avatar of lending. So, we're not looking at too much of a NPA kind of a scenario for us.
And your MSME and business loans form really 23% of the AUM. And how are the other segments performing? And is this what your focus area would be?
So for us again, rather than MSME loan side, we have our corporate liability side. Where we are attempting to generate our liabilities across this thing. So we are making a strategy, and more so, in the new avatar, as in when we get the license, how will we build our MSME book across the liability as well as asset. So it's more into the strategy pipeline as compared to any challenges which the industry currently would be facing on MSME.
All right. Thanks so much, Ketan, for joining us on the show with some, understanding on what lies ahead for the company. And that's how the shareholders can view the company as well. Thank you so much for joining us on NDTV Profit.
Thank you. My pleasure, Nisha.
All right, moving on then. Sharks aren't just hunting for startups anymore. They are really swimming straight onto Dalal Street, as we have seen in the recent past. From Cure Pharma to Boat, the Shark Tank stars are now making waves with their market debuts. Let's dive into how these shark stocks are really performing post their listing. Sharad is here to give us all the details. Sharad.
Sharks are moving away from tanks to a sea called Dalal Street. The sharks have arrived at Dalal Street. But how is Dalal Street treating the sharks? Let's go one by one. IPO size, all the sharks are under my lens. Of course, these sharks have been active from 2021 itself. Namita Thapar, their IPO size of Cure Pharma, that was roughly 1950 odd crore rupees. There was fresh issue aspect as well as OFS aspect. Eternal 2021, the IPO had come. Over here also we see it was a 9,375 odd crore IPO size. Honasa Consumer Ghazal Alag 1,700 crore IPO size. Of course, it had both the components of fresh issue as well as open for OFS. And Piyush Bansal recently almost 7300 crore rupees IPO size coming in. And this IPO pricing also is about the street is actually chattering about. But recently even Aman Gupta's Boat has filed a smaller size IPO, but a 1500 crore IPO size coming in from Boat as well, which is called Imagined Marketing. Listing price and current price. Let's see how the performance has happened over the year. Honasa is still trailing. That's the main important part. Not much data for Cure Pharma, but nevertheless, it's flattish here. But the one who takes the cake, that's of course 54% return coming in from the listing price as well when it comes to Eternal. But Honasa Consumer, there is a change in business model, and because of that, the numbers have been on the lower side. That's coming at 15%, and two sharks are waiting, and these numbers will be coming in the months to come. Also, let's look at how the offer price was and what the current price is. That's also very important. And you see the pricing from the IPO, that is also in a main contention when we look at these new big large startups who come to the bourses. Cure Pharma, not much, just 38% gains coming in. But the leader of the show by far is Dipinder Goyal's Eternal. Look at the returns. That's 363% of returns coming in. But there is a trail, and Ghazal Alag's company Honasa, that's coming in at 9%. That's the parent company for our viewers to understand. And of course, Dalal Street will be looking at these two sharks as well as and when their companies comes and their numbers come in. But let's look at the timeline. What actually stands out? Namita, she came in at 2020 for her company. Dipinder is the oldest in the class of 2021 of startups. It came in at July 23rd, 2021. And Honasa also in 2023. And recently, it's November 2025. We are seeing Lenskart from Piyush Bansal. But nevertheless, we can expect in the next 1 to 2 odd months what the street is expecting for Boat also for Aman Gupta. So we can see at least 5 sharks have already made their debut, in the Dalal Street. 2 of them IPO will be coming, and maybe a couple of more on the offing.
Sharad, this is the most interesting thing I have seen in a very long time. And one can also argue that Zomato was one of the first which came from the startup world with the IPO, and the company is not necessarily what it had listed as. And therefore, the gain that it has got because of Blinkit acquisition. And definitely, the market is also looking at the kind of return value that these sharks are giving. And that's the picture that Sharad has really presented. All right, moving on then, the government recently gave a fresh push to India's electronics manufacturing ambitions by approving the first tranche of projects under the Electronics Components Manufacturing Scheme. Amongst the companies receiving the approvals in this round were Pharma, SGS, Kines Tech and also Amber Enterprises. We spoke to the Managing Director of Pharma's SGS, Jasbir Singh Gujral, on what this scheme is about and also what it means for the company and the growth prospects.
I think this ECMS policy is one of the biggest turning points in the long journey of the electronics industry in the country. And the industry has been sort of asking for it for a long time. And thanks to this government, they have announced the first set of the thing. Now, if you see on the macro level, the scheme, government has received 249 applications with a cumulative investment of 1,15,000 crores. Typically, in a component industry, the asset turnover ratio is 1.5, max 2. So on an average, if we take 1.5, it means the annual import bill saving of about 1,75,000 crores when the scheme is fully implemented. This is just the beginning. And I think once this component scheme is sort of fully mobilized and the industries put up capacity, the next phase will be when the materials which go into the making of the components would get a kickstart. Currently, only the low-hanging fruits like the copper-clad laminates and other things are being sort of pushed. But the piece parts which go into the making of the component, they would receive a big push 2 to 3 years down the line.
All right, time now to take a look at the biggest movers of the art before we get your daily dose of profit intelligence. Ixigo, Sgility and BHEL are in spotlight on the back of their Q2 results. In fact, Anushi joins in with more details. Anushi, dismal quarter for Ixigo.
Yeah, so that is what we are looking at. It's a steep correction in price also that we are looking for Ixigo, and a couple of reasons as to why we are looking at this kind of a reaction on the back of its second quarter results. Firstly, there were losses due to one-offs and ESOPs leading to a doubling of employee costs which impacted the margins. Along with that, even if you look at the gross transaction value, the growth here came down to about 23% as compared to 55% which was seen earlier. The quarter was also impacted by capacity constraints. Even if you look at the train segment, the growth was impacted by various operational changes as well, which kind of impacted the overall performance in the second quarter as well. So we are looking at a correction of more than 17% right now for Ixigo. So that's in focus. But what worked out well, on the other hand, is something like a Sgility. Now this is seeing a strong up move, and this is on the back of its performance supported by continued traction across both its player and provider segments. Along with that, even the margin saw a decent uptick. This was on the back of operational efficiencies as well as Gen I-led productivity is what we are looking at. The company also raised their revenue guidance in constant currency terms to 21% plus. So the street also took this in a big positive, and hence we are looking at this kind of a strong reaction in trade today. Again, if we come to BHEL now, here if you look at the growth, that was led by robust execution and recovery in its power equipment product. But the main takeaway in the results was its margin levels as well. Here they have seen a significant improvement in terms of where the margin levels were concerned. In fact, if you just look at the order book as well, that inched upwards to about 2.19 lakh crore or so, while the order inflow stood at about 35,000 crore. So these are a couple of movers that we are seeing reacting on the back of the second quarter numbers.
Right. Thanks so much, Anushi, for giving us those details. Of course, Ixigo stock should be on our radar. It is really beaten down and punished in trade because of the kind of performance that Anushi just elaborated on. Another important sector to watch out is telecom sector. Bharti Airtel is the biggest dragger on Nifty 50 today. And also take a look at Indus Tower. That's also down over 3% in trade. Now, telecom stocks are back in focus after the Supreme Court AGR verdict has really come out, and it was made public just recently, and the order offers limited relief, and it's mostly for Vodafone Idea and not the other telcos. So Somit joins in to help us understand what this means really for Bharti Airtel, Vodafone Idea as well as Indus Tower. Somit.
So the ruling had come in a few days back, but the judgment order copy was uploaded on the Supreme Court website
yesterday post-market, and what we are understanding from the judgment order is that this benefit that everyone was talking about is quite limited. In fact, the amount it would be limited to is close to around 9,500 crore only. So couple of points that we have noted from the judgment order that was uploaded. Point number 7. Now it clearly says that any relief package can only be provided to Vodafone Idea, given the fact that Government of India owns close to 49% stake and 20 crore users are on Vodafone Idea's network, and it will not be provided to any other player. Now this is against market expectation, which was factoring in that there could be some benefit coming in for Bharti Airtel also, given the fact that they have close to 40 to 50,000 crore of the AGR dues on their balance sheet, and this amount of 40 to 50,000 crore is close to 4% of Bharti Airtel's market capitalization. So that is negative coming in for Bharti Airtel, given the fact that they won't receive this relief if at all there is any relief that comes in for Vodafone Idea. The point number 6, or the second point that we have witnessed here or seen here, is that it clearly says that the claim will be restricted only to the additional AGR demand raised for FY17. Now this amount, as per analyst, is just 9,450 crore rupees. This is literally 12% of the total AGR dues and just 4.9% of the overall debt of Vodafone Idea. So this clearly shows that even if this amount is waived off for Vodafone Idea, it's not going to make much of a difference for Vodafone Idea going forward, because their annual payout due is more than 16,000 crore rupees. The company has been reporting negative cash flow, and even if this amount of 9,450 goes out of the balance sheet, then the overall repayment or the annual payment would come down by just 400 odd crore rupees. So it won't make a much difference for Vodafone Idea. And given the fact that it's negative for Vodafone Idea, the indirect impact comes on Indus Towers, and that's the reason why we are seeing such kind of a downtick even in the share prices of Indus Towers.
That's right, Soumit. Thanks for pointing that out. Indus Towers and Bharti Airtel, but Vodafone Idea, that particular counter is also down over 6% in trade on the back of limited relief that has been offered by the Supreme Court judgment. Now, as investing platform Groww becomes a household name and also gears up for their mega IPO, in an exclusive interview ahead of their highly anticipated D Street debut, welcoming straight from the Flipkart playbook, they shared their journey of democratizing investing for millions in the country. Get ready to hear why their customer-first focus and also search for perfect product market fit is what sets them apart in the highly competitive space. Listen in from Groww founders.
Let's just start with the origin story. 2016 is when both of you got together and did Groww, but you've worked together before. At that point, met each other at Flipkart. Where did the whole idea come from?
Yeah, so we know each other since like 2005, right? Our first jobs together. And then at Flipkart, when he joined, so I joined earlier, and then after a year he joined. We started brainstorming. By the way, we have two other crazy folks with us who are not here right now, but they got added to the team later. But when we started, the idea was 4 of us. We worked at Flipkart and we saw how e-commerce kind of disrupted overall commerce in the country, right? And passionate, like we were very passionate about financial services, especially investing. I started investing when I was studying here at Bombay, at IIT Bombay, and I started around 2001 or something. And I still kind of remember like how tough it was to open an account and start investing. And guess what, in 2016 it was similar. And when 4 of us started brainstorming, we thought, can we democratize this process of investing? Can we build like a platform, like how Amazon or Flipkart happened in e-commerce? Can we do something similar in investing space and wealth? Can people come? Can we make it very simple, delightful, transparent, and let people build their wealth?
No, so just hang on a minute. This is interesting. So you've taken the experience of selling phone, laptop, clothes, etc., XYZ, everything on Flipkart, and said, let me apply to financial instruments.
So I think a little differently, Tamanna. I think we've taken all the learnings of how consumer think, how consumer decide, what is important for the consumer, and use that learning into a different place, solving a different problem. So investing was a different problem. Buying a phone or a t-shirt or a shoes is a different problem, but consumers, humans are same. So the thing that helped us and translated from our experiences of not just Flipkart, even before that, we have been part of a couple of startups. We did our own startups before.
Together or separately?
Separately.
Okay.
Both.
For the full conversation with Groww founders, tune in to NDTV Profit at 6 and 9 p.m. tomorrow on The Disruptors, only on NDTV Profit. All right, with that, it's a wrap from me right now, but do stay tuned to NDTV Profit. Thanks so much for tuning in.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Proam, India's #1 golf proam, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Proam. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much. You're starting golf. We want to thank you.
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. I'm Heeral Tatia. You're watching Profit Buzzers, and with me is Mahima Vachujani. Mahima, good afternoon. Interesting times in the markets because there is that little bit of uncertainty which has continued, but it's the primary markets which are in focus right now.
Absolutely.
In fact, in an investing platform, Groww has cemented its status as a household name. Let's quickly listen in to what they have to say ahead of the mega IPO.
For us, I can't comment on a lot of, I don't know which company you're talking about, but Groww is like, if you look from that perspective, it's very simple. We have earnings, right? We have been kind of profitable for last, operating profitable for last 3 years. Of course, FY24 because of restructuring there was this thing. But so so you have earnings, and then you can you will have all the multiples. You have all the peers, a lot of listed peers like in the capital markets across segments. A lot of internet companies that are listed and so on. And you have multiple. You know the growth rate. You know the leadership. You know the profitability, ROC and everything. And then I think it becomes easier for somebody to evaluate a company like ours.
Right. Also, lastly, since there's I know I said this was my last question, but since there's a lot of chatter about the kind of multi-bagger returns that we are expecting for selling investors through this IPO, so what you held once was valued at around 100 crores. Now, while you are exiting a part of that, it's valued at around 5,000 odd crores. So that's true for all the founders and investors who came in at an early stage. So any comments on that multi-bagger return for a company which is just getting listed?
No, return to tab hota hai na when you sell. The real returns are when you but I think in general, this is, India is, I think entrepreneurship is like India, right? Like I think all the enterprises that will be created, they will become large. A lot of small caps today will become large caps. Large caps will become mega caps. Mid caps will become large caps. And a lot of startups now, like India is I don't know the number of startups in India compared to the world. I think we are third, I guess, right? And that is a lot of them will become very large companies and so on. I think this is spirit of India, Indian entrepreneurship. And I think it will be good for everybody.
Whether it will be good for everybody or not is anyone's guess basis the valuations that get assigned to it, because right now we're already talking, Mahima, about a Lenskart where the valuations are up the roof, right? What is it that Lenskart is doing differently that it should be valued at this level, number one? And two, likewise, if you see in terms of subscription data, listing day gains, post that what happens, it's a key question that we need to figure out. And I think Groww is going to be in the similar boat.
Absolutely. And, I read a very interesting thread also on Lenskart valuation that per store, per year, as per the FY25 profits, they make 11 lakh profits. And for that, coming in at a valuation of 202 times 1 year forward is, not cheap at all.
The key was, when Lenskart actually became a unicorn, when they spoke about the idea that why Lenskart should be popular, the business model was online.
Yeah.
But because people were not buying really any numbers with power from Lenskart, he shifted the model to a brick and mortar store, which was already prevalent. And right now, if you go to see a lot of your other locations or mom and pop stores right now, do the same in 10 to 15 minutes at a much lower price range.
Yeah.
So people are finding products of Lenskart expensive versus your normal retailers who are into the same business. Now, whether people will find a similar trend when it comes to the stocks of Lenskart or not is what we need to wait and see. But this is going to be an interesting dilemma that we are watching out for. But very quickly, Sharad has been putting out these interesting notes in terms of why markets are cracking, what's happening across. Clearly, there is uncertainty when it comes to Fed's December rate cut. The anticipation was a 25 basis point rate cut that was priced in.
Yes.
If the tone was dovish, that's what people were watching out for, then we could see some bit of benefits that could flow into India. But now we're talking about an uncertain amount or an uncertainty with regards to whether another rate cut could come in December or this would be a pause from here on. And I think that's what is spooking the markets today as well. Apart from that, there has been no major announcement that's coming from Trump-Xi Jinping meeting so far, though Trump has said that he slashed China tariffs by only 10%. So I think the trade deal, Mahima, when it comes to India, US as well, a lot of expectations that are building up. And what's happened between Trump and China, if another 10% slash is only what you're looking at, the expectations get narrowed down for India as well.
Absolutely. And I think that is also that the street has never liked, right? So the uncertainty coming in is something that the street has never liked. And the other factor, I think, is also that, we've always touched at 26,000 levels and then come back. Yesterday, after over a year, we closed beyond that 26,000 levels. But today we opened with a gap down, and that technical pullback is seen after a recent up move as well. Of course, FI shorts remain at higher levels as well, so that's still a concern. FI is not coming back. In fact, Samira was saying that rather than selling, if they stop selling, even if they're not buying, just stopping selling would also make sense for the markets going forward. So that's with regards to what's happening with the market and why probably markets is taking bit.
And let's just pull up Nifty 50 and see what's happening, because it is a choppy day of trade that you're witnessing in the markets right now. There you go. I mean, 25,900, we're still below that 26,000 mark yet again in today's session. Let's pull up Bank Nifty on the screens, and then we'll just quickly have a look at the heat map of Nifty 50. 0.4% lower on Bank Nifty as well in today's session. Let's quickly look at the heat map. L&T again on the back of earnings. Coal India reacting to what brokerages are making out of the earnings as well. Adani Ports, BHEL. These are a few of the names which were actually beaten down in trade yesterday, which are seeing some bit of buying interest, but absolutely a sea of red is what you could see. Very few greens coming in there. Dr. Reddy is the top loser. HDFC Life trading under pressure. Bajaj Twins continue to trade under pressure for a second consecutive session. And you have the Pharma pack, which is out and about in trade. In fact, Canara Bank has just reported numbers. Let's just quickly address that. Your profits have seen a growth of around 18 to 19%, around 4,774 odd crores is what that number has come in at. Your gross NPAs, in fact, your asset quality has improved. Your gross NPAs have come in at around 2.35%. Your net NPAs have also improved marginally at 0.54% versus a 0.63%. So asset quality improvement. Your NII, though, has seen a dip of around 2% this time around. That the street is not really factoring right now, but a good growth in terms of profitability and improvement in terms of asset quality right now is what the street is looking at, on the back of which, if you see the stock price, it's actually zoomed in at the day's highest levels with gains of 2% coming in there. In fact, let me get in Lancelot Dicuna to talk to us more. Lancelot, good afternoon and welcome to the show, and always a pleasure to speak to you. Before we get across to markets, Canara Bank has just reported numbers, and improvement in terms of where asset quality goes. The NII has actually seen a marginal dip of around 2%. Your operating profit has seen a growth of around 12%. What do you make of these initial readings? And the profit growth has seen an uptick of around 19%.
So I think definitely this is a positive sign for Canara Bank, that we've seen a profit growth and uptick, as well as we've seen the net NPAs also has been stable. So that's a very good sign. Also going forward, since the interest rate outlook is going to be on the lower side, you can expect the net interest margins to remain maybe at the same levels, or probably see some slight improvement in net interest margins going forward. So that also should augur well for the stock as far as its performance for even this end of this financial year, and maybe the beginning of the next financial year as well.
All right, so that's the view with regards to where Canara Bank stands. And of course, the stock is still zooming in trade as we speak. And as Hiral mentioned, at its day's high point, and the numbers that are flashing on your screen, probably justifies the kind of move that the stock has seen. But moving on, pharma stocks have been in focus today, kind of spooked in the street today, and there are a couple of reasons as to why that has happened. First one, of course, Dr. Reddy is being hit by the semaglutide delay that is kind of impacting the counter, the top loser on the Nifty 50 as well. There's weight loss drugs that are under scrutiny and under scanner for efficiency. That is also one of the reasons as to why the counter is facing that kind of profit taking. There is of course overhang on tariff imposition, which has been the case for a lot of these sectors that are exposed to the US markets. You also have a soft quarter expected in Q2. That's with regards to where the Q2 earnings are concerned. But lastly, there's also profit booking in select counters. We already saw Dr. Reddy's down by about 4%. If we can try to pull up the Nifty Pharma as well, because that will give us a picture as to what are those counters that are actually seeing pressure or pain in trade today, and what's what are those constituents. Nifty Pharma down by about 0.5%. There you go. These are the constituents. Dr. Reddy is of course the top loser, followed by Zydus Life, Sun Pharma, Ipca Labs, all down by about 1% each. And there's also Lupin, Alchem Labs, and Aurobindo Pharma, which are also down by about 0.5%. But Lancelot, I'll quickly come to you on the entire pharma space. Anything in particular that you're liking there, and how are you viewing the entire sector?
So, I think as far as the pharma space is concerned, definitely the pharmaceutical companies are where there's going to be a lot of volatility, as well as the business models will have to evolve given the changing scenario in the US. So while, the impact of tariffs on the pharmaceutical drugs could create a situation where, many of these companies would be forced to do contract manufacturing overseas so that they escape the tariffs. And some of them would probably try to go to the generic route in order to boost their sales. The things are changing so fast in the US that it's very difficult to really predict, stability of earnings or revenue growth for these pharma companies. So I think the way to look at investing in the pharma sector is to focus on the areas which are more domestic, focused, like, for example, the hospitals. So hospital area will be, which doesn't have much of an impact on the US tariffs, doesn't have much of an impact on domestic hospitals. So those are the entities where one can look at, because of the weakness in the pharma sector per se, you are getting some of these companies at reasonably good valuations, and growth over the next 2-3 years is strong for the hospital segment. Similarly, the diagnostics.
Lancelot, just stay with us. I'm just going to address the flashes at the bottom of your screens before we go ahead, where China has gone ahead and said that they've reached a consensus with the US when it comes to expanding agricultural trade. And this is a commentary coming in on the back of the US-China bilateral deal. They've said China will be working with US to properly resolve the issues. And secondly, China has suspended the rare earth related measures for the next 1 year. This is going to be a key positive development that we are seeing so far when it comes to halting the export controls that were announced back then on the 9th of October. In fact, on the back of this, Mahima, what we need to understand is the moment the exports of rare earth is controlled from here on, and they've halted it at least for the next 1 year, it becomes a major relief for a lot of industries.
Absolutely, and especially your EVs, where a lot of this content is being used. But as Hiral was addressing, China has reached consensus with the US on expanding, of course, the agricultural trade. That's the one part, and the rare earth metals is the other part. And China is to halt export controls announced on 9th of October for a year from here on is what the news flash is suggesting. But China's, I think I'll quickly take this up with Lancelot as well. Lancelot, you heard about the development taking place, and this is between, of course, the US-China bilateral that's taken place. Your view with regards to this development, and how does it, provide relief to a lot of companies that, will kind of benefit from this?
So I think this development is positive because the tension that was there between US and China, both from the US side wanting China to reduce the trade deficit, and hence they imposed tariffs on Chinese exports to the US, and then China in retaliation, put in export controls on the rare earth magnets, which again would have impacted a lot of industries based out of the US, especially in the electric vehicles and green technologies, as well as to some extent on the the data centers which require battery storage facilities. A lot of them use some of these rare earth minerals in their batteries. So to that extent, this particular tension is now moved off, or at least for a year there would be some relief for these companies, and that would mean that US companies engaged in the space can focus on actually growing their businesses. As far as India is concerned, it really doesn't make too much of a difference unless they also agree that we will get a higher allocation of the various magnets and these rare earth materials that are required for electric vehicles, because a lot of Indian two-wheeler manufacturers in the EV space were struggling to increase their production because of shortage of these rare earth magnets. So if that also is a corollary to this transaction being accepted for the US, I think that would be good for the Indian two-wheeler manufacturers in the EV space as well.
Okay, Lancelot, I'm going to reiterate this. So basically, what they've said is that China will be suspending the rare earth related measures for the next 1 year. Secondly, they will be halting the export controls that were announced on the 9th of October for 1 year as well. And they've reached a consensus with the US, and this is on expanding agricultural trade. China will be working with the US to properly resolve TikTok issues, and US will be suspending 50% entity list export controls for the next 1 year. Now, what is the kind of impact this could have on the Indian markets is the key question that we have over here. And to understand that, first up, let's just pull up Nifty 50 on the screens and see the kind of reaction that our markets are having on the back of the consensus that US and India have reached. No major reaction. We continue to see that flattish move, 0.5% downtick where we were so far ago. Apart from that, let's just pull up the auto index, because that's where we will see some bit of a reaction. Maybe defense is a space where we could see some bit of a reaction coming in there as well on the back of the rare earth magnets. There you go, auto. That pressure continues. Defense is seeing some bit of positive move. It's pretty mixed. Names like MTAR Tech, BEML, Unimec, Astra Micro, Zentech are a few of the names which are seeing a positive momentum. But names like Data Patterns, Mazgon, Coach and Ship are trading under pressure. Lancelot, my question to you is the commentary that's coming in from the meeting that Trump and Xi Jinping have had. China has said they will be suspending the export curbs when it comes to rare earths for the next 1 year. They've said that US will be suspending the 50% entity list export controls for 1 year as well to support China. And they've reached a consensus when it comes to US on expanding agricultural trade. What would this actually mean for the Indian markets according to you?
So I think it does not really generate anything directly for the Indian markets. But, when you have two of the world's largest economies in a mode where they are trying to fight each other on trade and tariff issues, the fact that they've reached some kind of consensus means there'll be a lot more stability in the global markets, and between these two economies, which are the largest in the world, they will have stability over there will obviously mean some positive fallout for India as well, because if inflation is kept low in the US, and trade deficits are lower, then you will see the US economy growing faster. And if there's a faster growth in the US economy, obviously companies which are exporting to the US will have better opportunities to sell their goods, services in the US. Especially from a service perspective, a lot of the IT companies depend on the US economy. So the economy is doing well. Definitely it'll be a positive for the Indian economy, but it's not a one-to-one or a direct correlation. As the US economy does well, we will also do better.
Lancelot, I'm going to come in on this one. GMDC, that was one of the counters which actually saw a strong surge on the back of rare earth imports that were curbed, right? Now, this probably will become slightly negative from a GMDC, at least from a sentimental perspective. Would you agree to that, number one, though the stock is up nearly 2% in trade? But is this a candidate which could then start seeing profit booking from here on?
So I think, there are two things that have happened in GMDC. One was that the government has decided to make an investment of almost 7,000 crores plus another 1,500 crores through GMDC to increase the domestic production of critical minerals and rare earth magnets. Now, this is a longer term investment that is being made to increase their capacity to produce these critical minerals. So this should be positive for GMDC. So that is not going to change with the US, with the US-China agreement, because anyway, there is a shortage of rare earth minerals and magnets, and India wants to be self-sufficient and not dependent on China over a period of time. So I think it's not going to have a major impact. Yes, GMDC, the share price had moved up, on the back of this news, mainly on the fact that, there's going to be a huge investment there, and so it's positive for them. But I think that may cool off now that is there.
Got it. I think so. A cool-off could be on the cards for a GMDC as well. Lancelot, stay with us. We have Jonathan Bharat, CIO at ETO Markets joining in. Jonathan, welcome to the show, and always a pleasure to speak to you at NDTV Profit. we're talking of the communication that's happening between Trump and Xi Jinping. Firstly, with the meeting, they've agreed to cut tariffs on China by 10%. That is what we're picking up. And this is in return for Beijing's commitment on soybeans, rare earth exports, and fentanyl. Your initial comments?
Look, I think it's quite positive, but I think the most important thing is we're dealing with Trump. Everything seems to be great, or everything seems to be nice and rosy. He does report that there's lots of good things happening. I think the devil will be in the detail as to what the market actually feels. It's very good, I think, and very positive that the two are having talks, and I think that is a feather in the camp of Donald Trump to be over there and talking to Xi Jinping in order to try and resolve some of their differences. I am encouraged on a few fronts, particularly the rare earths, and I do think that it's positive. But as I said, the devil will be in the details. When you do look at the markets, you can see that they're taking them with a little bit of positiveness. So let's see what happens. But overall, I think the consensus on the trade issues are quite positive.
Jonathan, with regards to one particular update coming in that US extends suspension of 24% reciprocal tariffs for the next 1 year. What does this exactly mean for Indian markets or global markets as a whole?
Well, I think the one thing is that if you're suspending those types of discussions, the market is a little bit concerned. But it is a way forward. I think we really have to see that Trump, as he said, would visit China in April next year. So I guess you'll take it from there and take it from that lead. But I do think that the fact that they are talking, the fact that they're talked a lot about a lot of things, in my mind suggests that there's open communications, and to me that's a positive thing.
Okay, so Jonathan, let's understand now. What everyone in the Indian markets or even the FIs are waiting out is the overhang that tariffs would have when it comes to the Indian markets, and hence we've been in a consolidation phase over here. Now, what is that key message, according to you, that investors should read between the lines when it comes to the commentary that we've seen what's happened between US and China? Is that commentary suggesting that probably when it comes to the tariff deal with India as well, we will settle down at what the street is talking about, that 15-16% kind of tariffs, or the overhang still looms? What is the message that you're picking up?
Look, I think the most important thing across the board are the deals that have been done. Trump is a deal maker, and I think that to me is a positive thing. I think one word of caution across the board, which the market will be focused on, I certainly am, is I still haven't seen the impact of the tariffs feed directly through to inflations in various economies. I think once we see that, we'll get a big picture as to see how the Trump administration will react. If we do start to see, and of course we did get movements on interest rates yesterday, and I think this is interesting because that will probably be the last one for a while. But if inflation starts to pick up as a result of the tariffs, then I think you'll find more deals will be done a lot quicker.
Okay. Jonathan, one more question I have for you is, they've said that the US will suspend its Section 301 investigations against China's maritime, logistics and shipbuilding industries for the next 1 year. And following the US suspension of these measures, China will also go ahead and suspend its countermeasures against the US for the next 1 year. Now, this does come in as an interim relief if you're just talking about the next 12 months. That's one. And number two, when you're talking about even with both the sides, what they've said is they've affirmed the results of the Madrid trade consultations, with the US making positive commitments in areas such as investment, and China working with the US to properly resolve issues related to TikTok. So, the give and take is very different over here, number one. And two, you're just talking from a 1 year perspective. Do you think this is just an interim, and after 1 year this overhang will still remain?
Oh, look, I think the fact that they're talking about their differences is the important thing. 12 months is a short time in the markets, as we know, and there's a lot of water that needs to come under in terms of general economics. I think we've got to really look at the fact of where the Chinese economy is and where the US economy is, and China's economy is spluttering. So I think deals will be done that will be pro, but as we know, Trump is a deal maker. And I think for everyone suspending certain parts and coming to the table, you scratch my back, I'll scratch yours, I think it's positive for the general consensus for the global economy, where you've seen two of the superpowers getting together and actually coming up with an arrangement that hopefully will work.
Okay, Jonathan, thank you so much for bringing us those insights and, of course, taking out the time and speaking with us at NDTV Profit. The general consensus suggests that overall this development is good for the global markets as a whole. But Cipla numbers flashing on your screen, and I'll immediately go across to Varsha because she tracks this very closely. Varsha, what do you make of the Q2 numbers for Cipla?
Yeah, well, overall, when it comes to EBITDA and net profit, those are in line with the, Bloomberg estimates that we have seen. But overall, though the press release is not out, but the steady quarter which you're seeing, or the inline number that we're seeing is maybe led by, India and South Africa business, because that's where the growth lies when it comes to Cipla. US was expected to face headwinds. This is because of loss of share when it comes to the Revlimid or cancer drug. This was, this happened with Dr. Reddy's also, and with a lot of other companies who are into Revlimid. Because of the Revlimid loss, US is expected to face pressure, and of course the pricing erosion that's happening in the overall base portfolio of the US, and that's a key reason for Cipla as well. The stable margin that you're seeing is because of the operational efficiencies that the company was onto, and of course the favorable product mix that the company has been highlighting in the last few quarters. Now overall, here key things to watch out for con call would be, one is commentary on the US outlook, the other is the product pipeline when it comes to US to offset that Revlimid impact, and of course the new product launches and regulatory approvals in US, and progress of the complex generics and the peptides or GLP-1 portfolio for Cipla.
Okay, Varsha, thank you so much for bringing us that first cut for Cipla. Let's try to pull the chart up. The stock not doing much, though down by about 0.6%, almost at the same level as it was trading at. But Lancelot, your quick view on Cipla if you've had the chance to look at the numbers.
So I think the initial numbers are quite encouraging, that we are seeing growth from India as well as from Africa. Yes, the US growth was supposed to be slow and was not supposed to have a positive impact. So to that extent, yes, it is understandable. But I think the numbers are broadly in line with expectations, and stock is trading at about 25 times earnings, so it should be fairly reasonable for the company like Cipla.
Okay, so yes, you're right, Lancelot, per se. It's largely in line with what the street was estimating, and it was helped by sustained demand in the respiratory drugs as well. I mean, it's the third largest drug maker by sales, reported around 3.7% of rise in terms of where the revenue stands. Sticking with the same space, Dr. Reddy's Laboratories has also hit a brief regulatory speed bump up, and this is on account of Canada's regulator that has returned the company's application for a generic version of the diabetes drug Ozempic, citing deficiency in that particular drug. Now, Varsha joins us with more details on what brokerage's views are with regards to this update.
Well, on to that, company is planning to respond soon, though timeline have not been shared. And analysts overall, if you see, are seeing this as a temporary setback, but are positive for FY27 earnings when it comes to semaglutide, that is your obesity portfolio. Now, on to the brokerages, let's see what brokerages are saying. So for BofA Securities, if you see, is expecting $160 million from this semaglutide in FY27, not in FY26. And Morgan Stanley is expecting $198 million from this portfolio by FY27. And what they're saying is that timely approval essential, rising competition is a risk, because every other pharma company is actually going into anti-obesity portfolio. Now onto the Elara, if you say, they see this setback as temporary. Estimates remain unchanged as far as Elara is expected, and they are expecting company to remain among the first few players when it comes to global semaglutide markets, because overall if you see, company is among the first movers in semaglutide markets for India, Turkey and Brazil. So overall, if I were to conclude, analysts are expecting this as a temporary setback, nothing for FY26, but yes, they are expecting earnings from FY27 as well.
Okay, Varsha, thank you so much for bringing us those details. The stock down by about almost 4% as we speak. But viewers, it's time to slip into a very short break, but we'll be right back. Lots more lined up on the other side.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Proam, India's #1 golf proam, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Proam. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golf.
Welcome back. You're watching Profit Buzzers on NDTV Profit. Now, one stock that is in focus is L&T, and this is on the back of the second quarter numbers. The numbers came in line with expectations, but let's head across to Anushi to understand what has worked, what has not worked, because the stock has also cooled off from the day's highest levels. Over to you, Anushi.
Right, Hiral. So if you see, a couple of factors did indeed work out for the company. If you just look at the broad line numbers, the revenue, margins and the EBITDA, all were in line with where the expectations were concerned. Margins in line with expectations were flat, and this was on account of hydrocarbon business, wherein they were expecting some bit of that pressure on the back of those 2 to 3 year old contracts being priced aggressively. So that is one aspect that we are looking at. Other than that, what remains in focus is order inflows, seeing about a 39% of an uptick in first half, which has worked quite favorably, because if you look at the guidance, that's about 10% of a growth for the year. So it is so the management does say that it may surpass this order inflow growth that we are looking at, while revenue for that they remain on track with the 15% of guidance given. What is also interesting is the Hyderabad Metro Rail for phase 1 project transaction conclusion, which is expected in the next 1 to 2 quarters. So that would also favorably impact the balance sheet as well. So we'll see some bit of that, better profits going forward for that. Other aspect, and the final aspect, is most of these brokerages house remain bullish on the stock. In fact, they've hiked the target prices, with Investec seeing about a 21% of an upside at this. This is the highest target price that we are looking. So overall, a decent set with order inflows being in focus for L&T.
Okay, so that's what L&T is looking like so far. Interesting. Thank you so much for sharing those comments as well. Let me get in Osho Krishnan, Chief Manager, Technical and Derivative Research at Angel One, also joining in. Lancelot is already with us. Osho, good afternoon and welcome to the show. My question to you is, L&T actually hit a 52-week high on the back of earnings. Are you seeing any further value in terms of charts from here on? Is there any further upside potential?
Very good afternoon, Hiral. Firstly, thank you for inviting me at the show. Well, no doubt we have seen a very positive traction in L&T from the past 2 trading months. The counter has seen a very strong movement from the zone of nearly 3600 and is now hovering near to 4100 odd levels. On the technical front, there has been multi-week breakout in the counter, approximately around the zone of 3900. So I'm expecting the momentum should be on the higher end. Any dip or any cool off from current levels towards 3900 can be seen as a buying opportunity. By looking at the technical setup and a kind of a breakout that we have seen after the elongated period of consolidation on a higher time frame, the upside target, potential immediate target comes around the zone of 4200 to 4250 on the technical setup. And once it even breaches the zone of 4250, then we can even have a longer bullish view. But for now, 3900 is on a support side and 4250 on the resistance side can be seen for L&T.
Okay, so that's with regards to L&T. Coming to you, Lancelot, from the commentary that we've heard from L&T, it usually sets the tone with regards to what the government capex is going to look like. Anything that you're picking up? Because currently the concern is going to be, is the government going to really spend on capex, taking the consumption boost into consideration? And if that is the kind of conversations we are going to have ahead of the budget as well, what are you actually setting it up, and would you be an investor in infra?
So I think, if one looks at L&T's order book composition, almost 56% of its order book comes from overseas. The balance 44% is from domestic. So you will see the overseas order book will continue to grow. I think from the domestic side, yes, there may be a little bit of tapering off of the government expenditure, and probably closer to the end of the year, there may be a spate of orders when the government wants to complete its allocation from the current year's budget. So that would be good for the stock. But the overall outlook is that government will continue to invest in infrastructure, over the next couple of years, and as well as defense and any of these sectors where there's a higher allocation from the government, L&T will be a significant player in the space. So from a longer term perspective, I think L&T will be a major beneficiary, and I do not think that government expenditure, both on defense or in infrastructure, will really slow down considerably.
Okay, so that's with regards to where infra and capex themes go. But moving on, some of the stocks that are buzzing in trade on the back of strong earnings are PB Fintech, BHEL, and HPCL. Anushi is back with us with all the details. Anushi, over to you.
Well, I'll start off with PB Fintech first. Now, if you're just looking at the core platform insurance, now here the revenue surge that we're looking at was aided by slightly better premiums as well as slight improvement in take rates as well. Total premium growth also was aided by new online business premium that we are looking at. And even the contribution margins, they were better. They were aided by higher renewals as well. So that's a positive that we are seeing for PB Fintech. While coming to BHEL, another strong set of numbers is what we are seeing. Of course, growth led by execution along with recovery in power equipment segment. In fact, even in terms of margins, we've seen some bit of an improvement in that aspect as well. Power segment saw about a 46% of an uptick in terms of revenue, while industry segment saw about 18% of an uptick. Even the order inflow was interesting at 35,000 crore, taking the order book to about 2.19 lakh crore is what we are seeing. Last piece is HPCL. While if you look at the numbers did see a degrowth in terms of the sequential performance owing to weakness in marketing segment. However, earnings were much better than what the street estimates were concerned. If you just look at the EBITDA, they were much ahead of the estimates, and this is due to the higher than expected better gross refining margins, which inched upward to about $8.8 per barrel is what we are seeing versus about $5.7. This is driven by strong diesel spreads as well. So this is the overall picture that we have so far. HPCL much better performer in the space also that we are looking at. So these are the three stocks in focus.
Okay, Anushi, thank you so much for bringing us those details. Osho, hi, very good afternoon to you. I'll quickly come to you on BHEL and PB Fintech as well, because both of these counters are actually doing pretty well in trade today. Anything that you're seeing on the charts where momentum is there to stay?
Very good afternoon to you. Well, yes, I expect the momentum can be seen in BHEL, because on the technical front there have been very strong developments in the last two trading sessions, and especially today there has been a breakout in the counter from a cup and handle pattern on the daily time frame chart. So overall, I'm expecting the target to be seen around the zone of 280, 285 from a short-term point of view. So one can look for opportunity in BHEL. Overall, the counter is looking very positive. Although in this week, the counter has already seen a very strong movement from the zone of 240 towards 260 now, but overall I am expecting that the momentum can be seen on the higher end, and one can look for buying opportunity if any dip comes towards the zone of 245. That will be an apt zone to start accumulating, but even at higher levels one can look for buying opportunity in this one.
Okay, all right. So that's with regards to where BHEL is concerned, and of course PB Fintech as well. But Sgility India is the other counter that's in focus, and this is on the back of strong Q2 numbers, up 10% as we speak. Not at its day's high point, but still has seen a steady, movement throughout the day in trade today. The company has, of course, reported strong Q2 numbers, as I said, and the stock is also doing very well. And Sharad joins us to give us more details as to what's actually caused this rally in the counter. Sharad, what's worked this quarter?
Well, Mahima, this counter has done exceedingly well, especially in the IT space, in the product category. We saw yesterday Newgen Software coming out with good numbers, and now today Sgility is also hitting its lifetime high levels and a very strong Q2 numbers coming in. If you look at the details, the management has stated in the con call that their H2 numbers will be significantly better than the H1 numbers, and the company itself works in the IT's healthcare segment department. The outlook is very important, and one by one I'll put out the important triggers. The deal counters, they are changing to from their traditional orders, and the debt market is cheering that important commentary is coming in is that the debt will be fully repaid by FY27, and if that happens, interest cost comes down, we can accept a significant up move in the PAT numbers going ahead in the coming years. They deployed 25 AI based use cases for 9 clients and are very bullish on their recent acquisition from Broadpoint as well, though this is a low margin business, but nevertheless there are some efficiencies happening, and because of that they will be able to hold that 26% margin mark as well. And in KYC also today in our show, they had stated earlier that they will be using their cash for mergers and acquisitions, and there won't be any share buybacks or any kind of gift to the shareholders. They'll be focusing only on the growth aspect.
From the rating that you had given Sgility on KYC, post the conversation, does it really change? Do you think it then deserves something lower or higher? Would you look at that aspect?
Well, to be honest, we were very strict with it, and still the number came 6 out of it in our KYC show itself. Management is bullish, but the tone itself they have spoken about is the business which they work in. That itself is a kind of an insulated business. So not a lot of volatility would be coming in, but yes, they are getting new clients in new areas as well, which are on the higher margin side. And AI specific commentary also has been there, not a lot, but a limited one, but it's auguring well for the company as well. And I would like to say, Hiral, that the product-led companies are actually doing well in this second quarter.
That's what the trend is seeming like. In fact, FIs have also doubled their stake when it comes to Sgility, so there is some bit of confidence coming in on that front. In fact, Sharad did speak with SG Srinivasan from the group CFO of the company, who said that AI has helped them in profitability by more than 100 basis points. Let's quickly listen into that comment.
The synergies that we worked with Broadpath, the improved operational performance. In the last few years, the company has been consistently investing on new gen technologies, and AI has helped us improve our profitability significantly by almost 100 plus bips in terms of the operational performance. What we do is core to our client's operation. So it's not a discretionary spend, which means we are fairly in a, I wouldn't say a risky, but in a recession-proof sector where our revenues are stable. We are not a fast-moving company. We are a slow, steady, gradually moving up company. You can expect sustainable results. And from a margin perspective, the new wins that we have done gives us the confidence to have a better set of numbers going forward or in the near term. So in our business, H1 is fairly softer in the sense like though it has grown year on year healthily. What we see is the open enrollment season that comes up, and with the acquisition of BroadPath, Q3 we expect a lot of work on the open enrollment season. So Q3 is likely to be significantly a good quarter compared to Q2.
So that's the commentary coming in from the management. In fact, Lancelot, how would you look at Sgility, at any other product-driven, AI-driven IT companies that you would put your bets on? Because there is still a little bit of uncertainty when you talk about the likes of an Infosys, Wipro, TCS. But if you're talking of pure product plays, what would your top picks be?
So I think Sgility definitely would be one of the companies to look at in pure product plays, because it is in a niche sector which is, like you said, recession proof, in a sense that even in a weak period, one needs healthcare, and healthcare is important, and so the healthcare spend as a percentage of person's wallet will always be high. So from that perspective, their clients all being in the healthcare sector, they will have a good run going forward. The management has also indicated that they will be able to increase their revenues by almost 20% year on year and maintain the higher EBITDA margins which they have been exhibiting in the last quarter. So all in all, I think it's positive, and maybe one should look at building good position in Sgility, which will give long-term appreciation going forward.
All right, so that's the fundamental view with regards to where Sgility India stands. But three counters that are in focus on the back of their earnings in the second quarter. Before we get you more details on the buzzers, on the back of order wins as well, Varsha joins us to take us through the earnings fine print for MGL, SAIL as well as United Breweries.
Yeah, starting with MGL, a weak set of numbers that the company has seen, and that is reflected in the stock price. So now this was on the back of higher cost and higher employee, expenses which impacted overall financials, and this reflect company's consolidation and related integration adjustment. The Q1 numbers, if you see, were also boosted by reversal of 110 crore earlier provision for OMC's trade margins. Next on the list is sales. So overall, if you see, there was a pretty good numbers that the company has posted, but there's only net profit decline of 45%, which is, I think, upsetting the street, but that was in line with what was expected. But overall, if you see, the decline in prices this was led to decline in NSR, which was offset by product mix and volume growth. Overall net debt, if you see, declined quarter on quarter due to efficient working capital management. Last on the list is United Breweries. There if you see the beer volume, if I were to talk about the key highlights, the beer volume fell by mid-single digit, and the quarter was impacted by unusually high, rather strong monsoon season. The price mix, if you see, expanded by high single digit, which was supported by pricing in key states, and the premium volume grew in the low teens, which was led by Kingfisher Ultra Max. So overall, there was a volume impact, beer volume impact, which was seen in United Breweries. So these are the three stocks which are in focus on the back of Q2 earnings.
So, couple of names over here. Osho, anything that you like on the charts from a Sgility to a United Breweries, and the other names that Varsha mentioned?
Yes, from the names that just has been mentioned, I expect the momentum, bullish momentum, to be continued in United Breweries, because after a very brief time of consolidation, the counter have now started gaining some traction from the lower end, and even the technical parameters has been into a sideways terrain. But from past 3 trading sessions, there has been some kind of momentum coming back in the counter. So I expect that United Spirits is having a very decent technical setup, and from here onwards, one can look for buying opportunity in United Spirits. On the higher end, the immediate resistance or immediate target that one can expect is approximately around the zone of 1440, and once it breaches the zone of 1440, then from there onwards we can see a bullish reversal on a weekly time frame chart. So overall, it's a bullish setup with a favorable risk reward in United Spirits.
Okay, all right. So that's with regards to where UBL stands, of course, down 3.2% on the back of volumes not picking up, and of course this entire quarter being impacted by early monsoon and of course unexpected monsoon season as well. But moving on, Dilip Bilkon and NBCC are the stocks that are buzzing on the back of order wins, and Jasmeet joins us with more details as to what these orders are for. Jasmeet?
Well, right, thank you for that. Starting off with Dilip Buildcon. While the company received an order worth 307 crore and the order is from ISC projects. While the order is for the construction of railway projects and track, and it's supposed to be completed in next 24 months. If we look at the second counter, I have NBCC, while the company receives an aggregate order of rupees 79 crore and the order is from ICAI, that's Institution of Chartered Accountancy of India, and the order is for construction work. These are the counters buzzing in trade on the back of order wins.
Interesting names. That was quick. NBCC, and you're talking about the other one, Dilip Buildcon, which is buzzing on the back of order wins. Lancelot, anything that you would like from both these counters? Smaller orders for these names, but good moves today.
Yeah, I think, but the other thing is, while there is an order win, the margins generally on these orders are what is important in terms of driving the profitability. And, the margins generally in the EPC business would be much on the lower side. So, it might look at it, if you look at it from a earnings multiple basis, both are, fairly highly valued at this point in time.
Okay, so that's with regards to Dilip Buildcon and NBCC. Another stock, Mahima, that's in focus is ixigo. Very interesting counter. Actually, the company slipped into a loss this time around. What has not worked? Because I don't think so anyone expected a 16 to 18% decline on the counter. You did speak to the management as well. Anything that came to your radar that, yes, there could be troubles brewing in future as well?
It's three things, I think, Hiral, that's not worked particularly for this quarter and could be, also one of the issues that could be carried forward to the next quarter as well. First one, of course, as you rightly mentioned, there has been a loss this quarter, and this is largely on account of one-off ESOP. So this is not a concern that will be carried forward to the next quarter. But the other part being, there are a lot of ecosystem changes when it comes to the train segment. For example, the overall decision by IRCTC to just book your advance tickets before that 2 months period has kind of shifted things for ixigo as well. So that's a structural change that has happened. So this is one of the capacity constraints that the company will be facing from here on, and that's one of the reasons as to why the train segment GTV, that is gross transaction value, was also overall impacted. There was also a headwind with regards to waitlist, number of waitlist also bringing down. So that is also one of the reasons that could impact ixigo's train segment going forward, which is one of the biggest segment for ixigo. Overall, they also mentioned capacity constraints with regards to where airlines is also concerned. So all in all, probably all of these reasons factored together is something that the street has not liked, and that is why the stock has been hammered in trade today, down 15% as we speak. But, I did speak to the management about what are these capacity constraints, how this employee cost has impacted the quarter, and what's led to the losses. I spoke to Alok Bajpai, listening to what he had to say.
That's right. So there is a one-off ESOP expense of around 26.9 crores. Which has come this quarter because of certain milestones that were defined in this ESOP plan being met, which were market cap linked milestones. So I think we've met them earlier than we thought we will. But essentially, that cost has come in, which is a non-cash, non-recurring, one-off. But if you look at the adjusted EBITDA, which is more a cash metric, cash EBITDA kind of metric, it's a 28.4 crore, which is a 36% growth YOY. So we're pretty sort of happy about that.
Okay. Osho, I'll quickly come to you on the charts with regards to where ixigo stands. Already hammered by around 15% in trade today. Last quarter, it had posted a very strong set of numbers and the stock rallied quite significantly. But this time, there has been a reversal to that. What's the view like where charts are concerned?
See, overall, as you mentioned that in the last quarter, there has been a very stellar run from the zone of nearly 190 towards 340, 345 odd levels on the higher end. So there is some possibility of further correction. But today being the first day of drastic correction in the counter, it will be advisable to stay sidelines, because if the counter consolidates around the zone of 235 to 245, then it will be a decent levels to start accumulating. But because such kind of movement, similar kind of movement has already taken place in the month of September, but from there onwards, we have seen a very strong recovery in the counter as well. So one should wait for some kind of stability or regain of some kind of strength at lower levels. I assume 245 to 35 as a decent consolidation period for the counter, and those levels can be seen as buying opportunity from medium to long term point of view.
Got it. So that's with regards to Ixigo. But very quickly, let's pull up our IEX on the screens as well. That counter is in focus today because the Electricity Appellate Tribunal is set to hear the company's plea over the market coupling norms. Now, on the back of this, if you talk about the hearing, the previous hearing, they had said that you can come back on the 30th of October and, you know, probably put your plea again. And that's the reason why you're seeing this kind of pressure that is coming in today's session, 3.5% downtick. If you talk about the dispute as well, in February 2024, CERC had announced a shadow pilot for market coupling. From there, the government reportedly considered coupling across power exchanges in the month of September. And then when you talk about June 2025, the government IEX shares actually fell 10% on the back of renewed coupling concerns. In fact, the CERC had approved market coupling and IEX shares had then crashed almost 30% then. From there, we've already reached a stage where on the 30th of October, the hearing was set and IEX was down and the tribunal was set to review the responses, and they had given another date for hearing, for the 30th of October. So currently, if you're talking about what's happening, IEX is awaiting whatever comes in from the appellate tribunal in terms of the, in terms of the hearing. Very quickly, Lancelot, anything that you would want to add when it comes to IEX? Because now the stock is down nearly 3.5% ahead of, the hearing outcome.
So I would think that, this is a very, it's a regulatory issue that immediately changes the business operating environment, right? So as an investor, you would like to be invested when you know that what is the business environment in which the company is going to operate, and that gives predictability to its earnings. So if the coupling is mandated by all companies, then definitely IEX valuations at this level would not sustain. So as an investor, one should say that it's better not to take that risk at this point in time, because this has a binary outcome. Either it will be
Lancelot, I'm just going to interrupt over here. In fact, if you see the stock price as well, after seeing that dip, it's recovered slightly, and the reason being is because the IEX hearing has been deferred to the 28th of November, and that's the reason why probably what you're seeing in terms of the stock price correction right now. So I think we'll have to wait and understand as to what are the further updates on this one. But very quickly, Oshif, I have to come and ask you, what would you do with an IEX? What are charts indicating?
See, overall, this counter is into a very strong stagnation phase at the lower level. So I better to stay sidelines from the counter. If someone is already holding the position, that at current levels, it won't be advisable to exit from the counter, because it is having a very strong support near the zone of 125, 128 kind of a zone. So for those who have positions, for them only it will be advisable to stay invested. But for fresh lookout, it's better to stay sidelines. If it breaches or some recovery ground can be seen in the counter above 168 or 170 kind of a zone, then one can look for buying opportunity in IEX. Till that time, better to stay away from this counter.
That's technical view with regards to where IEX stands. But with that, Osho as well as Lancelot, thank you so much for taking out the time and taking us throughout the show and giving us your insights. With that, we are completely out of time on this edition of Profit Bazaars, but do stay tuned. Small Cap Bazaars on the other side.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपका काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you.
Good afternoon. You're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Anushi. Anushi, if you look at the market, it's a clear sign of profit booking that we are seeing. When it comes to the benchmark, it's trading near the day's lowest point, down, in fact, below the 25,900 level, which is a crucial level for the index.
Right. So that is what we are looking for Nifty 50 so far at the levels of 25,900 or so. It's below the 26,000 mark that we are seeing as of now. 0.6% of a downtick is currently what we are looking for the Nifty 50 index. But even if we look at the Bank Nifty as well, we are seeing some bit of a downtick there as well. About 0.3% of dip is what we are seeing for Bank Nifty as well. In fact, let's pull up the sectoral index because it's across these key indices that we are seeing a sea of red, barring the Nifty PSU Bank, which is almost flattish right now. Apart from that, what we are looking at overall index, Nifty Metal is seeing about a 1% of a downtick, and this is after a strong rally that it has seen in the previous few sessions. Nifty FMCG and IT also not doing particularly well, seeing about a 0.7% of a downtick there as well. But coming to the broader markets, let's see how the advanced decline ratio is faring currently. Now, if you just look at the declines, I'm pretty sure that would be on the higher side, about 1,500 declines versus about 860 advances is what we are seeing. Of course, in the favor of red is currently what we are looking at. Nifty small cap, in fact, if you look at that, let's see how that is doing. Nifty mid-cap 150 seeing cuts of around 0.4%, while small-cap 250 also mirroring some of those moves in terms of where the mid-cap 150 is. So overall, if we're seeing the market kind of breadth is in the red is what we are looking at. Let's also see how the stock-specific action is going on with BSE 500. So if you just pull up BSE 500 as well. Now here what we are seeing is that Vodafone Idea right at the top, about 7% of a downtick there. LIC Housing, again a 4% of a cut, and this is on the back of its second quarter results. Dr. Reddy's, we've already discussed in the previous shows also what's happening with regards to its semaglutide in the Canada market, about a 4% of a decline there as well is what we are seeing. But what's working well on the other side is something like a Web of Global. 11% is the kind of an upside that we are seeing, while PB Fintech also buzzing on the back of its strong numbers, 6% of an up move over there. Other stocks in focus include the likes of BHEL, and this is seeing a 6% of an uptick. So this is the overall breadth that we are seeing for the market so far. But let's talk about the company in focus right now, and Capital Small Finance Bank is in focus after its second quarter numbers. If we just look at the key highlights here, asset quality has remained steady. Slight moderation was seen in terms of where the net interest margins were concerned, while strong loan and deposit growth was also what we looked at. But let me go across to Vansh for more details on what's happening with this particular counter and what we should be watching out for.
Thank you for that, Anushi. As you rightly mentioned, a decent set of numbers coming in from Capital Small Finance Bank for their Q2. If we talk about the key takeaways, we saw asset quality that remained largely steady. There was slight moderation for the net interest margins, and if we talk about the loan growth, there was strong loan growth and deposit growth from the bank. Lastly, if we talk about the credit cost, it has also improved on a sequential basis as well. If we talk about the financials, the net profit was at 35 crores versus 33 crores. The NIMs have inched down to 4% versus 4.1%. The return on assets stood at 1.3% versus a 1.2% on a sequential basis. And in fact, if we talk about the CASA ratio, now it has inched down at 33.9% versus 35.9%. However, if we talk about the advances and deposit, we have seen a healthy growth coming in for advances and deposits, with advances up 18% at 7,900 crores and deposits up 20% at 9,300 crores as well. Lastly, if we talk about the gross NPAs and net NPAs, they have largely remained flat at 2.7% and 1.4% as well. So this is how the overall picture is panning out for Capital Small Finance Bank.
To understand more about this future of Capital Small Finance Bank, let's welcome in Sir Vijit Singh Samra, MD and CEO of Capital Small Finance Bank. So firstly, to start off with, I believe the loan growth in the first quarter came in at close to 18%. But this is slightly below compared to what the guidance that you had given of 20%. Are you still confident of meeting that guidance in the second half?
Sumit, if we see for the if we take the 6 months, the first 6 months, the loan growth is, we have slightly crossed 10%. So we are very much aligned with the guidance of 20%, which we have given for the financial year 26. And definitely, I'm very confident that we will not only achieve, but we'll cross this. Yeah, because always you see the Q better, say, pickup of loans and otherwise also the business numbers in the second half of the financial year, historically also. Yeah.
Okay, even if I look at the net interest margins now they stood at about 4% in comparison with about 4.1% on a sequential basis. Just want to understand the kind of outlook that you have for this. What's the kind of, for FY26 and 27, what's the figure that you have in mind?
And Anushi, you would appreciate that in spite of all these cuts we have been able to more or less maintain our margins. So like the reduction in the loans, especially the floating loans, it has already been accounted for. Whereas for a deposit, say the fixed deposit, where the tenure is 12 months to 15 months. So we see some favorable impact from this deposit repricing coming in, especially during, I would say, Q4, and more of it coming in next financial year. So otherwise, I'm confident that from here we'll improve our NIMs, but we'll go back to the previous trajectory in the next financial year for sure. When these the advantage in the reduction of the cost of deposits, that will be because since the maturity period is for us is about 12 to 15 months.
Right. So you're present across various segments: agri loans, MSME, large corporate, mortgage, consumption. Which of these segments are seeing a higher growth in the second quarter, and what's your outlook? Which segment would report the highest growth in the second half of the financial year?
Even if we see for the current quarter also, the maximum growth has come from MSME. It is followed by the mortgage and then followed by agri and other segments. And similarly for the second part of the half year of the financial year, which is the next 6 months, I see the similar trend, where the maximum growth we are targeting will come from MSME, followed by mortgage and agriculture. And of course, we are mainly into these 3 buckets. Yeah.
That we are looking in terms of where the MSME or agriculture is, would that sustain going forward, or are you expecting a change in the subsequent fiscals?
No, actually, we'll be able to sustain this. Yeah, that is.
Got it. Apart from that, even if you look at the asset quality, now you're targeting a below 1% of a ratio in terms of where NNPAs are concerned. So just want to get your outlook in terms of the timeline of when can we expect that below 1% of level. I believe in second quarter you clocked in about a 1.4% of a number. So just want to get your trajectory on that.
So with by closing these Q results, finalizing these Q results, we have given a guidance for next 3 financial years. Whereas, as you rightly mentioned, we want to take this number of net NPAs below 1%. So and we are moving towards it. So if you see, it's a continuous improvement that is happening. And since we are into secured lending, we don't sell off our NPS. It is historically also we have exhibited that whatever we have lent, we are able to recover it back. And similarly, I'm quite hopeful that with the recovery mechanism, strong recovery mechanism, and of course, the strong underwriting that we have, so we'll be able to bring it down our target figure of below 1% net NPS.
So earlier you had mentioned plans of opening 20 to 25 new branches and also expanding into new states. How is that going through? Any details on that front if you could share?
Yeah, of course. Today we are 200 branches, but there are 28 branches which are in the pipeline, which is the current pipeline. Out of which majority of the branches are coming in the say out of Punjab, like in the states of Haryana, we are deep deepening, and even in Rajasthan. And the new state, as you mentioned, we are going to venture into it is Uttar Pradesh, where we'll be starting with the first set of 2 branches. These are part of the remaining 28 the branches where the work is in progress. So we'll be adding UP to as our next state. We are presently in 5 states and 2 union territories. So we'll be adding Uttar Pradesh, and there's 28 branches which are in the pipeline.
Okay, well, thank you so much, Mr. Samra, for joining and sharing that outlook for Capital Small Finance Bank. But with that, let me also go across for a guest who's joining today to solve all our stock-related queries, and that's CA Tapan Doshi, research analyst of catapan.in, who joins us. Tapan, you heard the management's commentary in terms of where the key metrics are concerned, as well as the expansion plans going forward in new geographies as well. What's your outlook for this counter?
Yeah, thanks, Anushi. Good afternoon. Yeah, see, the valuation of Capital Small Finance Banks look good. No, it's below 1 price to book value. And even if you see, they told that no ROA, they are going to increase it from here, which is below 1, maybe around 1.2, 1.3. We are going to expand to 1.6 plus. Branch expansion is there. Again, no, they are going to double their loan book in future. See, the NP is around 1.38, which is on the higher side, but they are working on bringing down to below 1%. If they are able to do it, I think there will be a good jump in the profitability. Of course, the most of their books are much more secure. And no, advances is around, yield on advance is around 11%, which is historical high, and cost of fund is around 6%. So overall, the valuation perspective, even I feel no, this stock is available at a much, much better valuation. I think it's a safe bet. If someone wants to invest, they can invest. Hopefully, if the way the guidance management is given, I think 1 or 2 years a decent return, you can get it through this stock.
Shifting focus to Vaibhav Global, that stock is up in trade after reporting a strong set of Q2 numbers. The revenue growth is exceeding the company's guidance in the second quarter and in the first half. Let's get in Mahima with more details on the same.
So as you rightly mentioned, the overall revenue growth has been ahead of the kind of guidance that the management has given, and that's something that the street has liked, and that's why we're seeing the stock up in trade today. Overall margins uptick was driven by productivity gains, as well as there was operating leverage that played its part, and execution has remained strong across regions, and they've maintained their FY26 guidance to that 7 to 9% growth as well. In terms of the overall numbers, revenue growth came in at around 10%. EBITDA growth at 29%, margins improved to 8.8% versus that of 7.5%, and net profit also saw an uptick of around 71%. In terms of where operational metrics are concerned, overall unique customers saw an all-time growth of around 5% and stood at around 7.14 lakh. New customer acquisitions was at around 3.8 lakh, and customer retention rate was sustained at 41%, and repeat purchase was also around 22 pieces per customer. So this is the overall view as to what's worked and of course why the stock is buzzing in trade today.
Tapan, any view on Vaibhav Global here? Would you recommend your clients to go ahead and buy this counter? It's up around 12% in trade now.
See, Weber Global, no, after a long time, no, they're starting giving a good profitability. If you see, the main reason is, their in-house brand contribution is gone to almost 45%. And again, digital sales is almost up by, 50% B2C. The omni-channel presence slowly and gradually they are getting it. Again, the gross margin, no, it's been on a higher side, almost 63.5%, no, after 130 BPS uptick. So that shows then the company is working on the profitability, and that is why you can see a steep jump on the price also. And see, this is a stock now which in last 1 or 2 years now, the profitability year on year was not increasing so much, but hopefully now I think it is getting traction. So yes, I think one can be positive on this. So hopefully the things will be settling down, but not at this level. I think little bit down, maybe 5-10% you are getting. I think one can start investing slowly and gradually into this stock.
Okay, so that's a view that we have for Weber Global for you viewers. Apart from that, even PDS is another counter which is in focus on the back of its second quarter results. In fact, we are looking at about a 6% of an up move right now. What's leading to this up move? Mahima, talk to us about this as well.
Right, so Anushi, the earnings of course came on 27th, but the stock has seen a good rally. In terms of where the highlights are concerned, overall order book stood at around 5,308 crores. This is of course early of October. Net working and capital days has improved from 17 days to 6 days, and this was 17 days in March 25, and overall gross merchandise value saw a growth of around 18%. Existing business registered a growth of around 11%, and new businesses saw a growth of around 60%. Overall, if we talk about the numbers, revenue growth was at around 3.4%, EBITDA growth at 28.3%, margins came in at 3% versus 4.3%, and net profit did see a downtick. Of course, that was because of a one-off. In terms of where other metrics are concerned, the overall net debt to EBITDA stood at around 0.24 times, and overall normalized ROC stood at around 28%. So this is the overall view as to how Q2 has panned out for PDS.
Okay, well, thank you so much for that, Mahima. Tapan, your view quickly on this one?
Yeah, this stock looks okay, and now suddenly now if you see there also margin slowly and gradually getting up, gross profit has gone up. That's a good sign. No, again they are leveraging on the global sourcing network and all that. Working capital efficiency and cash generation is slowly coming back to this company. See, global apparel sourcing and all that, it's quite a competition there. So one has to keep that in mind because a lot of competition is there in this segment. Of course, their net debt position is much more now in a healthy position, and ROC is almost 28%. So that's good. Yes, one can start thinking about this stock, but no, they can have a small position at here, and quarter by quarter one has to review because this is where the competition lies. So little bit carefully but cautiously one can start investing in this stock.
Okay, so that's the view for PDS as well. Before we talk about more small cap stocks in focus, quickly just want to address what's flashing right now is Donald Trump's his post related to all the developments that are taking place with the meeting with Xi Jinping with China, wherein he said that there's enormous respect between the two countries. It's a positive outcome that we are seeing between the two countries so far. And with that, he also said now that China will begin the purchase of massive amounts of soybeans and other farm-related products is what we are looking at. Apart from that, even China has agreed to continue the flow of rare earth, critical minerals as well as magnets. So of course this would bring focus back on sectors like auto as well. So that's what he's saying regarding that as well. Also what they are addressing is on the fentanyl prices which have been there. So both the parties are addressing that issue as well. They had an agreement, they had a chat related to this. So China agreed that they will begin the process of purchasing American energy. In fact, a very large scale of transaction may take place concerning the purchase of this oil and gas from Alaska is what we are looking at. So it's a positive outcome that we are seeing between these two countries as of now. So again, that's on the macro side of picture that we are looking at. But coming back to what's in focus on the small cap side is Zilio e-mobility. And this is after Param Capital just a few days ago bought a significant stake in this company. Puneet joins us to give more details.
Well, thank you for that. It's definitely a very interesting company in the electric two-wheeler space, a landscape which has been dominated by a few players, especially the legacy players like Bajaj, TVS, as well as Ather and Ola now. The company actually listed very recently on 8th of October at 154 rupees per share, a premium of almost 14%, but then has just zoomed through. It's almost up 80 to 90% from those current prices as well. But let's look at a little bit about the company as well. Largely operates, as a business of manufacturer, assembler, and a key manufacturer of the electric two-wheeler and the electric three-wheeler space. It sells the scooters under the Zelio brand. It has multiple other variants as well, but it's a key one for the company as well. When you look at the growth in revenue, that's almost been 3x since FY23, and that's been considerable for the company. While the recent news, as you rightly said, Anushi, was that Param Capital, through its partner Mukul Mahavir Agarwal, acquired roughly 14 lakh shares. When you look at the revenue profile as well, 172 crores of revenues in FY25. This was roughly 94 crores in the same time in FY24, with a margin profile of over 12%, which is quite comparable to the listed players. Something like Ather and Ola do margins are roughly 16 to 18% on the EBITDA side only, but are not profitable on the bottom line. But this company is at 16 crores of profit. So we will have to continue to monitor the progress, because they have a capacity of only 72,000 units, but definitely a company you need to watch out for.
Right, a big news coming in is Cipla's Umang Vohra, the managing director and global CEO, has resigned from the company. In fact, he has not accepted his reappointment. Now, he was appointed, and in fact, he joined Cipla back in 2015 and has been the MD and global CEO since September 1st, 2016. He was reappointed back in 2021, and his reappointment was till March 31st, 2026. So most likely he will serve his term, and post that he has not accepted the reappointment as the MD and global CEO. So interesting move. The stock is down more than 4% in trade on the back of this announcement that has come in. Other than that, if you look at the numbers are pretty much in line. In fact, slightly better than what the street was estimating. But on the back of this news, we are seeing this kind of a down move on Cipla. He has been part of Cipla since 2015 till now, and right now he has said that he will not accept his reappointment. Tapan, coming to you, any view on this? Obviously, this should not impact the company on a fundamental basis, but sentimentally, the street has taken this news quite negatively. The stock is down 4% in trade.
Yes, Sumit, I do agree with you. This will have a sentimental impact, because Umang Vohra, he's been there for a long time. He was one of the catalysts, to grow Cipla over the time, and Cipla has done very well under his leadership. And I've been from Gujarat, so I know better. So yeah, of course, this news is will have a little bit of impact, but hopefully reappointment will be there in future, and things will be settled. But otherwise, I am quite positive on the Cipla. They had a very good turnover in the US also. I think one of the highest, even in other countries also going well. Good patents are coming, some of the patents which will have increase their profitability. So if any type of dip is there, I think the management is quite professional. I think it will be settled down. It will be a good opportunity to start investing in Cipla.
Good opportunity to start accumulating Cipla is the call coming in from Taman. Let's get in Varsha also to give us more details on the news that has come in on Cipla.
Well, Somit, Umang Vohra is the man behind Cipla, I would say. He's the managing director, and he's been associated with Cipla since October 2015 as global chief financial officer, and he joined Cipla in 2015 and has been the MD and CEO of company since September 2016. So he knows nook and corner of the company, but now because of his, he's been resigning, and company has been appointing Achin Gupta as MD and global CEO effective from 1st April 2026 for 5 years. So yes, the man behind Cipla, that is Umang, now because of his resignation, of course the growth prosperity of the company or the growth prospects will be questioned, and that's the reason why investors are concerned, because you have trade generics for Cipla, you have GLP-1 products which are there, they are going into, or some of the biosimilars. So overall, the strategy which was put by Mr. Vohra now that strategy maybe will be realigned, or changes in the strategy is what is concerning onto investors. But overall, if I were to talk about the numbers were pretty much in line when it comes to Cipla. Although the US the company has seen degrowth in US because of the loss of Revlimid sales, but overall if you see an inline set of numbers.
Thanks for that, Varsha. We've started seeing some bit of recovery there for Cipla. 2% of a downtick is what we are looking at right now. But thank you so much for that again. See Tapan as well, who's joined us on the show and solved all the stock-related queries on this. But viewers, with that, it's an end to this edition of Small Cap Buzzers. Do stay tuned. India Market Close coming up next.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Pro-Am, India's #1 Golf Pro-Am, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Pro-Am. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who is doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you very much for starting golf. We want to thank you.
That's very sweet of you. Thank
I
you.
think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपका काम क्या आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language.
Welcome, you're watching India Market Close here at NDTV Profit. I am Mahima Vajrajani and with me is Sharad Dubey. Well, it's probably raining outside in Mumbai and it's raining red on the markets as well because the Nifty 50 almost at its day's low point, down by about 0.7 odd percent. The Bank Nifty also down by about 0.4 odd percent. If you can try to pull up the Nifty 50 chart once, before I go on to the heat map of Nifty 50 and see as to what are the counters that are putting pressure. There you go, almost at its day's low point right now, almost 170 points lower on the Nifty 50 as we speak. Let's try to pull up the heat map and see as to what are the counters that are actually putting pressure on the Nifty 50. There's Dr. Reddy's that has continued to be, on the lower end of this chart. Cipla, after announcement of Umang Vora not being reappointed, the stock has tanked and down by about 2% as well. There's Bharti Airtel, there's HDFC Life, Bajaj Finance, both the Bajaj twins, second or third day in a row that are seeing profit booking. There's also Interglobe Aviation down by about 1.5%, Powergrid, Infosys, Bajaj Auto, as well as Tech Mahindra and Tata Steel, Reliance, Sun Pharma, Trend, all of these counters down by about 1% each. There's also on the flip side, Coal India, which is fairly doing well after the brokerage's view on the earnings, up by about 1.2%, followed by L&T. L&T has cooled off quite a bit, now about 1% higher on the back of earnings. BHEL up 0.5% and Maruti Suzuki also up around 0.5%. Some other counters in the green includes Nestle, Ultratech and Geo Finance. But let's try to pull up the Nifty contribution because that will paint a picture as to what are the counters that are heavyweights and putting pressure on the Nifty. You have counters like HDFC Bank, which is down 23 odd points, Bharti Airtel down 24 points, Reliance also down 22 odd points. Let's try to pull up the sectoral heat map. Everything's red there, right? Except for something like a Nifty Energy or Nifty Realty, which is slightly down. A lot of counters under pressure. Your Nifty Healthcare and Pharma down by about almost 1% each. Nifty Metals also now seeing profit booking after the kind of crazy rally that we saw on the entire index. Nifty IT also down 0.6%. Nifty Finance also down by about 0.6 odd percent. Nifty FMCG also down by about 0.6% as well. Let's try to pull up the advanced decline ratio. That advanced decline ratio paints a picture as to how the bears today have taken a charge because that gap has widened throughout the day and you have around 1535 odd declines versus 852 odd advances. So it's exactly an almost a 2:1 ratio and of course bears being the charge, taking the charge. In fact, let's try to pull up the mid cap 150 and the small cap 250 as well because the broader markets are also not doing that well. The mid cap 150 is down by about 0.4 odd percent, slightly doing better than benchmark but still almost at its day's low point, and the small cap 250 also down by about 0.3 odd percent and at almost at its day's low point. Let's try to pull up the BSE 500 quickly because before I go on to Sharad for the market setup, you have certain counters that have done fairly well. Vaibhav Global up 8%, PB Fintech, all of these on the back of course, the numbers, Q2 numbers that have come out. India Cements, second day in a row seeing good gains. Blue Dart, second day in a row seeing good gains. Credit Access and AB Realty, up by about anywhere between 4 to that 8% mark. But on the flip side, you have LIC Housing on the back of earnings, Dr. Reddy's on the back of the kind of regulatory scrutiny that has come in, IDBI Bank, V-Guard, JSL and as well as Vodafone Idea, all counters under pressure. But Sharad, what is the market setup indicating right now?
Mahima, the muted sentiment is there in the market, and technically this is healthy also, because there was an up move as well, a little bit of profit booking coming in. But interestingly, there is a consolidation theme, which something which I'm looking at. These numbers are suggesting, the charts are even suggesting that Nifty has come below the 25,900 mark. Nifty support levels, that number has increased, and that's why I've put it between 25,500 to 600 odd levels. Resistance, not much. Already it has touched 3 times the 26,000 mark over the last 1 week itself, and just 250 points away from its lifetime high levels. And we expected that in coming weeks or even days we can see that level as well, but currently it's on a pause. When there is a pause, there's a consolidation. Same thing applies for Nifty Bank. The numbers stay between 57,600 for support, and resistance comes in at 58,400 odd levels. Trump has taken the main stage globally again. He has become important. Street has spooked on the US rate trajectory already. We saw that earlier in the session. We discussed that in IMO, and after that market is absorbing global cues, earnings, especially US China announcements which are coming in as well. Broader indices are bleeding more. Last 3 sessions we saw, out of the last 3 sessions, 2 sessions ended in days high levels, mid cap and small cap indices. But now the bleeding is more, and India US trade deal, that's one of the main next triggers for the market, and when it will come, when the timeline will be there, that'll be very important to actually check. But let's move on, and let's welcome our guest, Kush Bora, founder of kushbora.com. A very good afternoon to you, Kush. Markets are giving a way of consolidation vibes, and there is a saying that, no trade strategy is also a trade strategy. Are we moving towards there? Because the consolidation levels is something which we are looking at. Kush, how are you looking at Nifty and Nifty Bank?
Hey, hi, Sharad. First of all, very good afternoon. Did you get a sneak peek at my Excel, whatever I've written down?
Well, no, not yet, but I will definitely do.
No. The reason I say that is because I had something similar in mind for Nifty. Now, let's just take a quick recap. So yesterday we discussed how being nimble and booking profits partially on the Nifty above 26,000 is a good idea, because 26,200 is proving to be that glass ceiling, right? We are seeing some profit booking today as well. Now, mind you, there are no immediate signs of trend reversal on the daily setup, but on the weekly setup, there is a negative RSI, developing, which I did mention on Monday's India Market Open show while I was in the studio. Hence, I've been a little cautiously optimistic on the Nifty. While the near term looks good, the medium term perhaps, warrants some caution. Even the PCR, if you see right now, is at 0.7, the 7.7, I beg your pardon, which suggests that, close to 0.7, there will be some support kicking in. Also, the main support level, or at least the immediate support level for Nifty, for me, is at 25,700, 25,800. So I wouldn't rule out some more downside. However, all of this put together, I think the buy on dip strategy till 25,700 is held, still remains intact. The only reason I wouldn't go out and buy right now is because we're at the low point of the day, and we can't really be sure if the fall will stem here or maybe another 50, 100 points from now, right? So give it one more day. No hurry to trade in the Nifty. Give it one more day. Tomorrow, if the dust settles and the Nifty shows some sort of a rebound, that's when you can cash in. Bank Nifty, similar view, but again, like I have been for some time, more optimistic on this one. 5,800 immediate psychological and technical support, but a bigger one for me comes in at 57,500. That's the support zone that I'm looking out for. Constructive on Bank Nifty. Here too, I would have suggested a buy, but since we're trading closer to the low point of the day, I would again here suggest just a wait and watch approach. I remain constructive from a near-term perspective on Bank Nifty and Nifty both, but I want the dust to settle before I go out and pick one.
So that's with regards to where the benchmark is concerned. But quickly, something that's flashing on your screen down there, Exide Industries is where there is an income tax department survey that's been happening on companies' offices as well as manufacturing units in India since October 29th. The verdict has come in saying that they did not find any material impact on operations due to search by IT officials. Of course, it has postponed the board meeting that was scheduled today to consider its Q2 earnings. So that means that Exide Industries earnings will be postponed because the board meeting will not happen today. Although the good news is that there is no material impact on operations due to search by these IT officials. So nothing constructive could have been has been found with regards to where the IT search has happened. The stock is kind of trading around 0.7% lower. Not much of a move there, but it is kind of moving back to the positive territory from, of course, its day's low point. So that's with regards to where Exide Industries is concerned now, seeing a tad bit of cooling down as well. But Kush, quickly, your view on the charts for Exide Industries, would you be a trader here?
Hi, Mahima. No, I would not, because we've seen the stock attempt, a jump multiple times and face negation from that 400 odd levels. The averages have also seen a death cross. So I would wait and watch. The only silver linings, 375, 370, that's been the medium-term support zone for the stock. And right now it's struggling to hold around that 200-day moving average. So maybe it could just go sideways. So the bias could remain sideways to negative. And hence, when the markets are trending and the stock's not your best, staying away from a stock, which is in such a pattern. So Exide right now is an avoid for me.
Okay. And what about your picks for the day, Kush?
Sure. Going with a mix of a long and a short. Been constructive on Realty for, the last week, 10 days. So Oberoi Realty also is one of the stock that gets added to the list, stands out, has had a good move, golden crossover of the 20 and the 50-day moving average, volumes picking up on the upside. And the stock performing in the negative market is a very clear indication of relative strength. So 1770 and 1805 are your targets on the upside. 1720 is where you place that stop loss. So one more addition to the Realty pack. The other one, and it may not be music to your ears, is a short sell on the Hindustan Unilever. We've seen the stock fall off the cliff after that result announcement and has been facing those supply pressures, at higher levels. So yes, from a near-term perspective, you could still go short on Hindustan Unilever for targets of 2430 and 2400, stop loss at 2495.
That's pretty interesting. Sell call coming in for HUL. Just mentioning AB Capital before we go to Varsha. The numbers are largely decent, but a net profit that has come down. This stock was in the news also. There was a block and it was absorbed properly with the DIs as well. But on to our bull versus bear segment.
It's stock of the day segment.
Oh, okay. Sorry, there's an error. On to our stock of the day segment, and the stock in focus is Dr. Reddy's. And Varsha is going to give us all the details as why there has been such a big crack in Dr. Reddy's.
Well, thank you so much for that. The Canada regulator has returned company semaglutide, that is your anti-obesity drug. So they've returned the application for the company citing deficiencies. Now they're saying that this is a notice for non-compliance and ask for more data and clarification. Company is expected to respond soon, but no timelines have been shared. Now the analyst, overall, if you see, they're expecting this a temporary setback, and approvals are likely expected before March 2026. Now let's talk about the opportunity. What kind of opportunities this semaglutide has for Dr. Reddy's. So one is the Canada market, if you see, opens to generics in Jan 26, and Dr. Reddy's is likely among the first or the early entrants once approval comes through. Now also FY27 forecast, now this is an average forecast that analysts are expecting, includes $100 million for this product from FY27, and the company is among first movers in semaglutide. Semaglutide is nothing but an API for anti-obesity. So companies first movers in this product for India, Turkey and Brazil. Now let's see what brokerages are saying. So overall, if you see, they are expecting this as a very temporary setback, and they're expecting company to have this approval before 2026. Now what BOFA is telling, so they expect some SEMA opportunity down in Canada, but not out, and they're expecting almost 160, rather SEMA approval pushed out, but still a FY27 opportunity according to BOFA, and they're expecting almost $160 million contribution in FY27. That is 15% of FY27 EBITDA. This single molecule will contribute almost 15% to the overall EBITDA. Now let's see what Jefferies is saying. Semaglutide being a key contributor to North America's revenue for FY27, and timely approval essential, rising competition is at risk according to Jefferies. Let's see what Elara Capital is saying. So Elara sees the setback as temporary, and the estimates according to Elara remains unchanged, and they expect the company to remain among the first few global players when it comes to semaglutide market. So overall, what is the conclusion, when it comes to the semaglutide market for Dr. Reddy's is this is a temporary setback, though FY26, for FY27 all the analysts are expecting this product to contribute almost 15 to 17% of EBITDA in overall EBITDA for Dr. Reddy's. So this is just a temporary setback, and though Dr. Reddy's is planning for the approval for semaglutide in near term.
All right, thank you very much, Varsha, getting us all the details for Dr. Reddy's. Kush, I just have a question. Bhav 1200 ka hai. Is it a good buy the dip strategy? Stock is down 4% and it's a temporary setback. What would your view be on this?
Well, if that's the only stock that you want to consider in the pharma space, then yes. The reason I say that is because अगर recent rally देखें which happened in April, वहां से अगर हम एक retracement draw करें तो 1160 का जो level है वहां पे 61.8% retracement support आता है, and the stock has rebounded multiple times from 1180. So यहाँ से risk reward ratio तो बहुत ही effective है. तो अगर कोई एक aggressive trader हो और एक buy opportunity चाहे in Dr. Reddy's, I think this could be a good opportunity. 40 rupees का stop loss लगाइए. I think on the upside you've got about 80 to 100 rupees upside which the stock could very well see. So for an aggressive trader with an 1160 stop loss, I don't think it's a bad idea. But as I said, for an aggressive trader only, and a stop loss of 1160 is a must.
Sure. You said if DR is the only counter that you're looking at in the pharma space, what other counters are you looking at then?
Yeah, I had a feeling either you or Sharad would pick this up. No, so two stocks on my radar. First is Laurus Labs. I know how valuations on this one are stretched, but from a technical standpoint, it's still attractive. It's got some momentum going for it. It's had a brief round of consolidation and then back to its winning ways. So I think from a near-term perspective, 980, 995 are good targets. You could place your stop losses around the 945 mark. So yes, there is still some strength in Laurus Labs. I think one other stock which was just in the news, and I don't recommend this, but I have this on my radar, which is Cipla. Now the management change seems like a big one, but what you're seeing is that the stock's already rebounded from those intraday dips or the intraday low of 1500. So I'll keep this on my radar. Maybe this dip could well be an opportunity. So I'd perhaps give it a day and look at Cipla as well more constructively, but Laurus Labs constructive from here as well.
So Laurus and Cipla are the two counters that Kush has on his radar. In fact, viewers, we are also going to do a profit intelligence piece on the Nifty Pharma and as to what is causing the pain in the entire sector. So do stay tuned to watch that. But moving on, as investing platform Groww becomes a household name and gears up for their mega IPO, NDTV Profit's managing editor Tamanna Inamdar sits down with the founders in this exclusive interview ahead of their highly anticipated listing. Coming straight from the Flipkart's playbook, they share their journey of democratizing investing for millions. Get ready to hear why their customer-first focus and search for perfect product market fits and why this sets them apart in this highly competitive space. Listen in to that conversation, and of course, for the full interview, you can stay tuned on at today at 6 p.m. as well as 9 p.m.
Let's just start with the origin story. 2016 is when both of you got together and did Groww, but you've worked together before. At that point, met each other at Flipkart. Where did the whole idea come from?
Yeah, so we know each other since like 2005, right? Our first jobs together. And then at Flipkart, when he joined, so I joined earlier, and then after a year he joined. We started brainstorming. By the way, we have two other crazy folks with us who are not here right now, but they got added to the team later. But when we started, the idea was four of us. We worked at Flipkart and we saw how e-commerce kind of disrupted overall commerce in the country, right? And passionate, like we were very passionate about financial services, especially investing. I started investing when I was studying here at Bombay, at IIT Bombay, and I started around 2001 or something. And I still kind of remember how tough it was to open an account and start investing. And guess what, in 2016 it was similar. And when four of us started brainstorming, we thought, can we democratize this process of investing? Can we build a platform, like how Amazon or Flipkart happened in e-commerce? can we do something similar in investing space and wealth? Can people come? Can we make it very simple, delightful, transparent, and let people build their wealth?
No, so just hang on a minute. This is interesting. So you've taken the experience of selling phone, laptop, clothes, etc., XYZ, everything on Flipkart, and said, let me apply to financial instruments.
So I think a little differently, Tamanna. I think we've taken all the learnings of how consumer think, how consumer decide, what is important for the consumer, and use that learning into a different place, solving a different problem. So investing was a different problem. Buying a phone or a t-shirt or a shoes is a different problem. But humans are same. So the thing that helped us and translated from our experiences of not just Flipkart, even before that, we have been part of a couple of startups. We did our own startups before.
Together or separately?
Separately.
Okay.
Both of us failed. Not in
different ways.
In different ways.
Yeah, and that was also helpful, by the way, because now you are not from the financial industry. You are not from that, so you can think like a customer. So there's something called curse of knowledge, right? If you know everything about that, then you can't think about somebody who does not know anything. So when we think about Groww, we think it more like a consumer problem than like a financial problem. Of course, there are financial products, but you need to know how customer is thinking about that product.
Right, viewers, just a quick correction. The full conversation will air tomorrow at 6 p.m. as well as 9 p.m. So do stay tuned, and of course tune in to watch the entire Disruptors show and hear as to what founders of Groww have to say about their company just ahead of the IPO as well. So that's with regards to where Groww stands. But with that, we have Neerav Ashar, Head of Equity Research Analyst at Latin Manharal and Securities, joining us as well. Neerav, hi, a very good afternoon to you. Thank you so much for taking out the time. I'll take up the first question with regards to the pharma space. We talked about where technicals stand, but lots happening otherwise as well. We talked about Dr. Reddy's and the regulatory concerns that are, kind of an overhang on the counter. There's Cipla also that's come out with its earnings. What's the view like on both of these counters, and anything other that you like in this space?
Good afternoon, and thank you for the invite. I think the pharma space has been going through a lot of challenges and headwinds in the recent past. We've seen a lot of players, frontline players, face challenges, especially in the overseas markets, especially in the developed markets. And this could be on account of the regulatory issues, US FDA related issues, or the concerned regulatory agencies. Plus, we have the pricing pressure also as far as the generics are concerned. There is a need for investments on specialty drugs, and a lot of money needs to be pumped into R&D processes and specialty drugs. And introducing new products in the developed markets is a tough task at this point of time. So I think the business models are being reworked at this point of time. There are companies who are focusing on contract research and manufacturing, CDMO space, what we call it as. Then there are companies which are doing advanced research work. Companies like DV's Labs or Laurus Labs, which are working extensively in these areas. But the broad view is that the frontline companies have been facing a lot of challenges. Today, we've seen the numbers of Dr. Reddy's Laboratories as well as Cipla. I think in the case of Dr. Reddy's, they have received certain notices from the Canadian regulators. And I think there's been some delay in the launch of a drug, and that has impacted the performance as far as Dr. Reddy's is concerned. But having said that, I think the valuation, from a valuation perspective, the stock trades at very, very reasonable valuations. I think the stock has been trading in the range of 20 to 22 times trailing 12 months price to earning multiple. But we are not seeing any respite as far as the stock is concerned, and I think continue to see pressure. So I think it would be better to see some relief which comes to the company before taking an exposure over there. But having said that, I think valuations still continue to look very reasonable. And as far as Cipla is concerned, again, it's been a very an ordinary set of numbers. We've not seen any major sparks over there. The domestic markets or the emerging markets, the developed markets, I think very, very nominal growth as far as the performance is concerned. So again, Cipla 2 trades at very reasonable valuations, around 23, 24 times. So makes it compelling case, but I think growth is an issue which needs to be addressed before there is any meaningful correction on the upside.
Okay, all right. So that's with regards to where the Dr. Reddy's and Cipla is concerned. But the other FMCG giant that is expected to post its earnings today is Dabur. In fact, we'll also have ITC and Swiggy earnings also coming in. But specifically with regards to Dabur and as to what you can expect, Sharad, they came out with their business update where they've clearly said that consolidated revenue will be around mid-single digits. Overall operating profit will also grow in line with where the revenue stands, and consumption is expected to strengthen, of course, because of the GST cut. But so far, for the numbers that have already come in for FMCG, a lot of these FMCG staples have been impacted because of the inventory correction.
Inventory correction, and I think that the inventory correction was coming from the GST news flow rationalization. But Mahima, the margin segment, has this in the entire FMCG industry, this margin pressure, whatever was that, is that, kind of bottoming out, or we'll have to wait for a couple of quarters?
So I think we'll have to wait for a couple of quarters. Now it's started to stabilize a bit, maybe not bottom out, because we'll still have to see certain raw materials like cocoa, coffee, which are still facing inflationary pressure, right? So all of these counters, how they move will decide the overall inflationary pressure that is being put on margin. The other aspect with regards to where margin stands is they're going very high when it comes to promotional and advertisement spends, right?
This will be a seasonal, yes, and festive season is on, so higher AP spends.
Right. So overall, that's also putting pressure on margins, and this is there to stay. This will be decided on the back of companies and their decision at the end of the day. And companies have strongly come out and said, companies like HEL, in fact, have come out and said that they will be, spending the same as they were earlier also when it comes to promotion and advertisement spends. But overall, key monitorables for this, of course, will be how volume growth is coming in for Dabur, and of course, what's the commentary on demand for urban versus rural. And of course, beverages portfolio will be something to watch out for because extended monsoons will have impacted that as well. So that's with regards to where Dabur stands. But Kush, quickly, your view with regards to where charts are concerned for Dabur?
Yeah, well, I think in line with what most of the other stocks are doing, not going anywhere, sideways consolidation, there was a minor bump. So right now, the 200-day moving average is being tested, in fact, for the last 7 days, but without any meaningful direction. So I would wait and watch. And in any case, like I've done in the past, I don't recommend a trade just on the eve of results. So I wouldn't suggest a trade even now. For now, as I said, consolidating, I would give it a miss. The two stocks that I like in this space are Tata Consumer and Britannia. And even Britannia is starting to show some weakness. So maybe, by default, the only choice for me in this one is Tata Consumer Products. Showing strength, continues to hold on. A break above the 1180-85 zone will push the stock higher. So I remain constructive on only Tata Consumer in this space.
Kush pick is Tata Consumer Products in the entire FMCG space. Before we slip into a quick break, US President Donald Trump described the meeting with Chinese President Xi Jinping as a 12 on scale of 0 to 10, and that's a very interesting scale, meaning it was way better than what we had expected. Let's listen in.
We're going to issue a statement on some of the details. But overall, I guess on the scale of from 0 to 10, with 10 being the best, I would say the meeting was a 12. Okay, I think it was a 12. I think, very importantly, just the whole relationship is very, very important. And I think it was very good.
let's call upon stage the man himself, Chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20, 25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian.
Good afternoon, welcome and welcome back. You're watching India Market Open. I'm Alex Matthew, with me here. I haven't gotten used to that yet. Okay, it is India Market Close. I will eventually get used to this. I might say it a couple more times, but you know what this show is all about. We are, in fact, just about an hour away from the close of market, even though I'm excited for the start tomorrow, and I started India Market Open early. But let's take a look at where the markets are right now. You have the benchmark Nifty 50 that is down about 0.6%, and it is below that 25,900 mark as we speak right now. And the broader market's also losing a tad bit of ground. By the way, the benchmark at the low point of the day. We'll look at the constituents in just a bit, but before we do, mid-cap index down about 0.25%, small cap index also down about 0.2%, and now let's pull up the constituents of the Nifty 50 just to tell you what is moving where. You have the benchmarks, you have Reliance Industries, HDFC Bank, which in the recent past have actually contributed on the upside, which are now pulling the benchmark lower, and you have L&T on the upside that is contributing just a tad bit. Pull up the heat map for the Nifty 50 very quickly just to see how much red is on screen, and there is quite a bit. In fact, 38 constituents of the Nifty 50 at this point trading with cuts, the worst of which are with Dr. Reddy's Laboratories. We've already told you about that, or rather Sharad would have told you about the reasons why Dr. Reddy's Laboratories is getting beaten down, and so is Cipla, by the way, after the results that it posted not too long back. But
the interesting comment over there is Umang Vora is stepping down, and that will probably change some things in terms of strategy as well. Let's see, it's anyone's guess, but that's going to be an interesting one to watch out for as well, Alex.
On the flip side, Larsen & Toubro has lost out a little bit from the start that it had. Pretty good set of numbers, and in fact, more than anything else, the order book that it has announced and the incremental orders that it has won during the quarter are what is enthused the street, but it's off the high point of the day. Coal India is the top gainer at this point, up about 1.5%. But you know, there are a lot more stocks in the broader markets, and before we go to Sharad for a very interesting piece that we've lined up for you, I'm going to go across to Hiral to take you through some of the newsmakers. Earnings front and center once again.
Earnings front and center as well, but you know, Chennai Petro, yesterday we did discuss this on the show, it was the top loser. Today you see the kind of pullback a Chennai Petro has seen. It's at the day's highest.
Right?
Yeah. Like 7 to 8% up move coming in on a Chennai Petro. Policy Bazaar is another one. 5-star on the back of the con call commentary. Very strong commentary on a 5-star. And that's the reason why you're seeing gains of around 6 to 7% on that one. Vaibhav Global cooled off slightly, but strong moves on Vaibhav Global as well. Shelly, has been losing out. Shelly Engineering, 10% downtick on that one. Sharda Crop trading under pressure. You have all your, telecom players from an Idea to an Indus Tower, Bharti Airtel. And this is on the back of the fine print in the AGR dues. That's what is putting pressure when you talk about all the telecom players as well. South Indian Bank, LIC Housing Finance also on the back of earnings, seeing cuts of little over 4% in trade. So a lot of movers and shakers, but the sharks have actually made it to Dalal Street, and that's the conversation. In fact, one by one, they've been making their dips, and the last one, has taken the boat already.
Taking the boat. I like that. That play on words.
Yeah, I mean, the last one has taken the boat, and I think it's Sharad who's going to come back to us and tell us, what are the sharks actually doing? Because you have all of them who are on Dalal Street now, Sharad.
Well, it's very interesting, and to start with, startups अगर tank है, तो Dalal Street एक दरिया है. Now let's get the sharks. They are arriving on Dalal Street, and there are 5 sharks currently whose listed companies are already there, and 2 of them are about to get listed as well. Let's get them one by one. What's their actual journey been and how they have performed? This is the result report card. It's there. Namita from MQ Pharma, her IPO size company was roughly 1950 odd crore rupees. Eternal, that's the first class of 2021 the startup had come in, almost 9,375 crores fundraise coming in. Ghazal's Honasa Consumer, that's around 1,700 crore. They both had fresh issue as well as OFS component, and the much talked about IPO Lenskart. Piyush Bansal's 7,300 crore IPO size coming in, and Hiral had pointed out at last Aman Gupta also has come with his board, but he has reduced his IPO size, almost 3,000 odd crore. That number has come down to 1,500 crore rupees. That'll be very interesting to track as well. Now let's see how the performance has been. The sharks are, all of them are under my lens, and we see the listing price and the current price, how we have taken these numbers. Honasa is the only company, Ghazal's company, where there has been a 15% downtake coming in. If we compare it from the listing price itself, there was a bumper listing, but a volatility in Eternal's counter. But look at the numbers, 54% gains coming in. MQ and Pharma, nothing has happened yet, and it's flattish right now. But the street will be looking at these 2 counters going ahead in the future, especially from Lenskart, what the listing price is. As per my channel checks, the grey market premium is roughly 15 to 20 odd %. Let's take in another parameter, and that's the IPO price. From the IPO price itself, we see Amita Thapar's company has just got 38% returns, but the one who has delivered the most is Zomato, 363% return. Institutions turning bullish. But on the other side, of course, there was a change in the business model also for Honasa Consumer. That has come down at 9 odd %. And these 2 numbers will be watching out for. So this is the entire report card, what the sharks have delivered in Dalal Street. And lastly, let's look at the date lines, how it has started. From 2021, the class of 2021, Eternal started coming in earlier. It was called Zomato. And then MQ Pharma, Honasa, they also came in the last 2 odd years. And right now, the current lot is Piyush Bansal's Lenskart. That's around 10th November. The listing date is expected to kick in. And next 2 to 3 odd months, Aman's boat will also be floating in Dalal Street's water. But what will be the numbers going ahead for all these shares, all these sharks and their companies? Will be something to watch out for. But abhi ke liye mera itna hi expertise hai. I'm out.
You're out.
Well, the Lenskart IPO valuation is going to be one of the key concerns. What happens on listing day is what we need to see. Secondly, you have Groww, which has entered also, not as a part of the sharks, but if you talk about Groww, where the valuations stack up, that will be closely watched out for.
Whether it's adjusted.
Yeah, adjusted or not, and whether it continues to grow or not.
But let's speak about a stock that is already listed not too long back, Hyundai Motor, posting its numbers for the second quarter, and the revenue is coming at 17,461 crore rupees. It is a tad bit below what was expected, and that number that was penciled in was at about 17,638, but the margin is actually better than expected. 14% is where it's come at, and the expectation was 13.4%. Puneet has been looking at those numbers as I speak to you, and he's joining in now to tell you about the details. Puneet, seemingly a beat on the margins, or at least better than expected, and that's having a bearing on the PAT number, if not a beat slightly above expectations. What are you picking up?
Well, thank you for that. It's definitely a good set of numbers from the company because in this quarter, the volumes actually fell by 1% for Hyundai, while someone like Mahindra & Mahindra as well as Maruti actually reported 3 to 5% growth, at least on a minimum level. So the margin number was the most important number for Hyundai. And right now, we're seeing a slight positive impact, not so much in terms of a runway share price reaction, but it's largely on the number of the margins, which is coming at 13.8 to 13.9%. Now, we were going with a number of 13.4%, which was almost a 40 basis point increase from the same time last year. So definitely a big beat has come on that. A couple of factors that could have played in favor of the EBITDA is one is, of course, the share of higher premium models, which has increased the average selling price of the company and in turn has a positive impact on the margins. And the other key aspect is also that the other expenses haven't inched up as materially as expected. So despite this being a heavy quarter for marketing that all auto companies do, it seems to be having a limited impact, at least for now. And the advantage was that Hyundai had limited launches in this quarter. What I'll be watching out for in this, from the press conference also that's scheduled at 3:30, and we'll get you all the highlights, will be what are the expectation on launches, because one of the major models, the Venue, is expected to launch on the 4th of November. That's almost 1/4 of the company's volume. So a relaunch of, or at least a refurbish of the second model essentially of Venue will be the one to watch out for. But in terms of the profits, also it's largely come in line with the number that we are going with. But the EBITDA margin number is the most important in this results. And that has come much ahead of the expectations that we were working with, at least with 13.4%.
But thanks, Puneet, for that. The stock not reacting too much. Yes, it's trying to make its climb right now. Let me go to Nirav. Nirav, what do you make of the numbers that Hyundai has so far posted? Because after TVS, this is the first four-wheeler that has posted numbers so far. And you will have auto sales numbers that will start trickling in over the weekend as well. But your first reaction to the numbers?
Well, I've always believed that Hyundai is basically a silent performer, and I think a good set of numbers from the company, and always impressed with the product mix. I think the focus which is there towards premiumization, the positioning of Creta, the kind of market share which they have in the SUV segment, the 72% share which they have over there. And I think apart from that, they are trying to enhance their presence in the rural markets as well. There is a focus on exports also. So I think a very, very strong presence in all the right segments at the right time. And recently they've done a presentation also where they are talking about very big expansion plans. They plan to invest around 45,000 crores from 2026 onwards till FY30, which will give them an incremental revenue of around 1 lakh crores. So I think the future seems to be quite exciting. And as far as the EBITDA margins are concerned, any EBITDA margin which is 14% or above generally falls into a positive reaction as far as the markets are concerned.
Okay, so that's a pretty comprehensive view. It has moved off the low point of the day. It's had a pretty choppy session and it's moving higher as we speak. As Nirav has been speaking about all of the positives for Hyundai, it has been moving higher. Kush, the question to you then, it's moved from negative to positive, trading with gains of 1%. Would you buy at this juncture though?
Hi, Alex. So from a positional standpoint, this makes a good bet. The reason is that, if you look at the entire rally that started from those 1,500 odd lows all the way up until 2,900, this is very close to the 50% retracement around the 2,200 mark. So if you want to enter for a very favorable risk-reward ratio, these are good levels. The downside seems rather limited from here on. So yes, with the stop loss around the 2,200 mark for higher levels of about 2,600 and the recent swing high of 2,900 as well, makes a good bet. You're starting to see early signs of revival with the price moving higher, crossing the 20-day moving average today, and also accompanied by very healthy volumes.
That's pretty interesting. Hyundai Motor by the dip kind of a situation coming in here as well. Stock trading at around 2380 odd levels. Moving on top stocks on Profits radar are Lemon Tree Hotels, Dilip Buildcon and NBCC. Jasmeet joins us with all the details. Jasmeet, what we are gathering from these mid-cap, small-cap names?
All right, thank you for that. Starting off with Lemon Tree Hotels, well, this is big, where the company signs in 600 plus rooms alongside the RG Corp. Well, this particular properties, the two properties based out of Guwahati and Ayodhya, both are tourist friendly, and this particular property falls under the premium chain of the hotel. And since 2004, from the first property, the company currently has 240 plus properties all across India. Well, the next one is Dilip Buildcon, where the company secures an order from ISC projects, and the order is worth 307 crores, and the order is in the space of construction, while the order is for the railway construction and track joints. While in terms of the next one, I have NBCC, and the company again receives an order in terms of construction itself, but the order is worth 79 crore. There are two orders in this particular split, and the aggregate value is 79 crore, while the order is from the ICAI, the Institution of International Chartered Accountancy of India. So these are three other stocks buzzing in trade today on the back of order win as well as deal signings.
Yes, thanks Jasmeet for that. In fact, Kush, what are charts indicating for all these three names? Some bit of an upside today. Would you be a buyer?
So I'd park Lemon Tree for just a while because, it's facing that falling trending resistance, the 50-day moving average also. So 170 is a bit of a resistance. While the uptake is healthy, as I said, I'll just park that for now. I find the other two names rather interesting. NBCC has had a good move, not just today, two good moves. Yesterday and today, healthy volumes. The stock is breaking out above that 116 zone. So yes, the momentum could persist here. 121, 124 are your targets. Now that resistance around the 116 mark will act as a stop loss. So a healthy move on this one. Dilip Buildcon also, the move is not as encouraging as NBCC, but yes, the stock's tested the 200-day moving average and starting to spike higher. I would suggest more of a hold approach. So if you have a position, you could continue to hold with a stop loss at 480, but things starting to look constructive for Dilip Buildcon as well.
Okay, so that's with regards to the view coming in from on a Dilip Buildcon that we're looking at. And, this is very, in fact, this has been a stock which was actually at one point in time at levels of 900 as well. And from there, it's actually very much close to where its IPO price is. Let me get a Nirav's view as well. Nirav, anything with regards to a Dilip Buildcon or a NBCC, if you have to look at infrastructure as a space?
Well, I think as far as infrastructure is concerned, I think I will stay away from Dilip Buildcon because the stock has been a disappointment. They had some very good orders, but I think execution somewhere did not meet the expectations, and of course the cash flows were not sound enough. So I think would stay away from Dilip Buildcon. And as far as NBCC is concerned, yes, it's on a rising trajectory. It's starting to get good orders. So I think can definitely accumulate with a medium to long term view. Overall, the view on infrastructure remains very, very positive.
Positive view on infrastructure. All right, it's that time of the day where my colleague Soumit Sarkar brings you all of the chatter from the dealing rooms in our segment called Heard on the Street. Soumit joining in now. Soumit, what are you picking up?
Well, markets might be on a downturn today, most likely because of profit booking, but multiple stocks that bullish trends as what dealers have indicated for multiple stocks. Firstly, it's Siemens Energy. There are buy flows on institutional desk is what dealers are indicating. Both FI and domestic institutions have been buying this counter. The two key triggers that would come in for Siemens Energy now going forward is a strong second quarter number, and the second one would be potential MSCI inclusion. Now, the names for MSCI would come out on November 5th. So keep an eye out for Siemens Energy. For Religare, there are buy flows on PMS desk, and dealers are indicating that the demerger announcement could happen soon for Religare. For Star Health, there are buy flows at lower levels on DI desk. Dealers believe that the worst seems to be priced in for Star Health. Now, yesterday the stock was down around 5% odd in trade. Warren Beverages, now that counter was up 10% in trade yesterday, but today it's down around 2.5 to 2.5% in trade. Now, dealers believe that yesterday's move was largely because of short covering, and they also say that the beer opportunity in Africa is quite limited, and hence we are seeing this some correction in the share prices today. When it comes to Kalyan Jewellers and Titan, again buy flows is what dealers are indicating on HNI desk for both these jewelry names. They're expecting the commentary to be quite strong for sales or demand going forward coming in, that could come in from both these names.
For Shell Engineering and Ixigo, both these counters are down because of their own problems. Shell Engineering is down because Dr. Reddy's semaglutide drug in Canada got delayed and Shelley was one of the suppliers. So Street believes that Shell Engineering numbers could be impacted. For Ixigo, the stock is down because of the Q2 numbers. But dealers are indicating that prominent HNIs who are already holding shares in these counters have accumulated some shares at lower levels in trade today in Shell Engineering and Ixigo. And lastly, AB Capital was part of our segment on October 28, where we did indicate that there are strong buy flows on institutional desk on expectations of strong Q2 numbers and potential MSCI inclusion. The company has reported strong Q2 numbers and the stock is up nearly 5% in trade today. Very interesting. Thanks so much, Somit, for that. A couple of stocks that stand out to me, Ixigo as well as Shell Engineering. Ixigo on the back of those numbers, that one-time cost on ESOPs having a bearing on the stock, on the performance in the second quarter, and posting a loss compared with a pretty decent performance in the previous quarter. And you probably remember this, when the numbers got posted, it was overnight, it was in fact post-market hours, and the next day onwards there was a pretty one-way rally in the stock price. Around July is when that started. 17th odd of July was when the numbers came in for the first quarter, and then it had a one-way run. It's of course dropped quite considerably from the high point. The question is, Nirav, if smart investors are buying more with these 15% drops, would you say that that makes sense? Do you have coverage, first of all?
We don't have coverage, but definitely it does make sense because when you have such exceptional events and you have one-off events which put pressure on the profitability or which result in a loss in a particular quarter, and when you know that the business model is established, then definitely it warrants an investment. It's an investment opportunity.
I just very quickly wanted to get a view from Kush. Kush, if you have a view on Ixigo specifically, would you say that there is a possibility of further declines, or would you say that a bottom could have been hit?
No, in all likelihood, it will be the latter, Alex, because, the 265 levels being tested a few times already. We are seeing a rebound from those levels today as well. So yes, yet again, I seem to be repeating myself, but again, for an aggressive trader with a 265 stop loss, favorable risk reward ratio, Ixigo also, like some of the other stocks we've discussed today, seems like, a decent buy at these levels.
Okay, so that's the view coming in terms of where Ixigo goes. But moving on, we're just one day away from November, and after a stellar October, I think this is the best October that we've been discussing since 2022 or 2023 as well. Nifty clocked its best monthly gain since March, and all eyes are now on how November is expected to look like. It seems historical data is telling you probably it will be directionless, but what is one going to watch out for in terms of benchmarks, mid caps and small caps? Somit is going to tell us in terms of what the seasonality tells us.
If you look at the October month, it has been quite strong. More than 5% return is what we have seen so far in the month of October, which is the highest monthly gain for the Nifty index, which is the benchmark index, since March 2025. But what's in store when it comes to November 2025? Now, if you look at the Nifty 50, in the last 10 years, it has managed to close in green 5 times with an average return of 1.6%. Now, there have been nearly 4 instances where the index has managed to give more than 4% return, and that's in 2018, 2020, 2022 and 2023, while more than negative returns of 4% has been seen only once in 2016. Now, when it comes to Nifty mid-cap index, in the last 10 years, it has closed in green nearly 8 times. Average returns is close to 2.5%. The 2 instances where the index closed in red was in 2016 and 2021, and nearly 7 times the Nifty mid-cap 100 index has outperformed the benchmark, that is Nifty 50. When it comes to Nifty small-cap index, in the last 10 years, it has closed in green 8 times. Average returns of 2.6%, and negative instance has been seen yet again in 2016 and 2021. Apart from that, if you look at the sectoral indices, Nifty Bank has been the best performing index in the month of November so far. 10 out of the last 10 times, 8 times it has managed to give positive returns. Average return has been 3.5%. Real estate, IT both have closed in green 7 out of the last 10 times, and the average returns have been anywhere between 2 to 3.3%. FMCG index closed in green 6 times, average return of 1%. Nifty metal, Nifty Auto, Nifty Pharma, if you look at these indices have closed in green around 3 to 5 odd times, while the average returns have been anywhere between -1% to +3% so far. Now comes the most interesting part, that is the stock rated part. Now we have included those stocks that have managed to close in green nearly 8 or more times, and the average returns have been more than 5% for these individual stocks. So which are the stocks in the list? Firstly, Uno Minda closed in green 8 out of the last 10 times in the month of November. Average returns have been close to 16%. Vodafone Idea, KEI Industries, Union Bank and CG Power have closed in green 8 to 9 times in the month of November, while the average returns have been anywhere between 8 to 10 odd %. For Biocon, Fortis Health, APL Apollo and Phoenix Mills, average returns have been close to 7 to 8%, while these stocks have also closed in green 8 to 9 times in the month of November. Now on the flip side, we have taken stocks that have closed in red more than 7 times or at least 7 times, and the average returns have been more than -2% in the month of November. Limited list, Suzlon and Cipla, average returns of -2.4%, and these stocks have closed in green 7 or 8 times in the month of November. Thank you very much, Soumit, for giving us the November trends. And Alex, there is a song also. I think you track a lot of songs. Is the song correct? Wake Me Up When October Ends?
No, you got the number wrong.
Okay.
What? It's No Shave what?
November?
No Shave November.
Well, for us also there is no shave.
So, but it's neither October or November. I was just tricking you. It's actually September.
September.
Oh.
Got it?
Yes.
Anyway.
No, I think
Okay, we obviously are not specializing in songs. Instead, let's go across to Kush. Kush, you've heard the entire list and you've looked at the seasonality chart as well. It's not really proven accurate this year because look at July, right? July has been an incredible month for years together, but we saw the July that panned out. What is your anticipation for November, though, for the benchmark? And did any of the stocks that we discussed stand out to you?
So, Alex, whenever the seasonality analysis comes up, one line that Tamanna had mentioned in the morning show comes to my mind, that we were discussing seasonality analysis in times of climate change. So yeah, doesn't really hold ground. It doesn't really hold ground. But for whatever it's worth, I think one stock that I do like at the moment, irrespective of the seasonality, is Phoenix Mills from that list. The stock's done well, continues to lead the pack, in the realty space. I think the stock has momentum. There is mild consolidation right now, that's going on in the stock, but that's understood because it's had a good run. I won't be surprised to see the stock head to 1775 and 1800 plus levels, in the months or maybe months to come. And the positional stop on this one is at 1640.
Phoenix Mills becomes your favorite as well when it comes to seasonality. But apart from that, your telecom players have been in focus as well in terms of today's session. And this is on the back of the fine print that we've picked up on the AGR dues. Soumit is still with us to tell us what's happening. What are the key highlights that he's picked up and what's the kind of impact it could see? Soumit, over to you.
The ruling related to Vodafone Idea was announced a couple of days back, but the Supreme Court judgment order was released yesterday post-market. And 2 points because of which the stocks are reacting. Firstly, the point number 7 out of the judgment order that has come in that clearly states that any relief package can only be provided to Vodafone Idea and not to any other player. Now, this is happening because Government of India owns close to 49% stake in the company and nearly 20 crore users are still using Vodafone Idea as their mobile network. And this is negative for Bharti Airtel given the fact that Street was expecting that whatever relief comes in for Vodafone Idea will also come in for Bharti Airtel, but that might not come in and hence it's negative. Now, if you look for Bharti Airtel, it has AGR dues of close to 40 to 50,000 crore rupees on its balance sheet, which is nearly 4% of its market capitalization. The second point, that is the point number 6, and this is negative for Vodafone Idea and Industars. Now, this clearly says that the claim will be restricted only to the additional AGR demand that was raised for the period up to FY17. Now, analysts believe that this point indicates that the AGR relief might come in only for the amount of 9,450 odd crore rupees. Now, this is a very small amount compared to what the debt of Vodafone Idea is. Now, 9,450 crore is just 12% of the total AGR dues of Vodafone Idea and 4% of the overall debt. So, even if this amount is waived off for Vodafone Idea, the annual benefit for Vodafone Idea will not be more than 400 to 500 crore rupees. So, that will not actually help the company much more. more, and hence we are seeing this kind of a negative reaction in the share prices. And given the fact that Vodafone Idea is down, Industars is also seeing the indirect impact of this, and hence Industars is also trading down in trade today. Thank you very much, Soumit, for giving us the entire view on the telecom sector. All the stocks are down in trade. Bharti Airtel down 2%. Industars, that's also significant downtick of almost more than 3%. Nirav, I have a question for you. Telecom space. Soumit mentioned about the negative outcomes coming in this sector, and we are seeing also a profit booking in Vodafone Idea. Perspective-wise, if I had to choose between all these three stocks, which stocks would have a better risk-reward ratio? Because we have seen a strong run-up in Bharti Airtel as well. Industar Street is very bullish on, especially from what happens on Vodafone Idea. What would be your view on that?
Well, the crux of this entire episode is that Vodafone will continue to remain under pressure. The benefits are not that material. So initial euphoria which was there has worn off. As far as Bharti Airtel is concerned, it's seen some very strong positive up move. The stock has been silent since the last 1 year, and finally it started to move. And there could be various reasons for this. Of course, this relief was expected, which did not come. But the African operations seem to be doing quite well. And as far as the domestic markets are concerned, they have the best quality ARPUs. There is a focus towards premiumization, 5G, data centers, etc. So I think Bharti should continue to do well. And this is especially also in the light of the fact that Jio Platforms has filed for an IPO. This is slated sometime in mid of 2026. They are in the process of appointing the bankers to the issue too. So I think Telecom will continue to do well in all probability. And as far as Indus Towers is concerned, the stock is also trying to move out of its problems, and the stock has given a meaningful up move, but it should sustain from the current levels because its price movement generally tends to move in tandem with Vodafone Idea.
Well, that's pretty interesting. Kush, your take on Vodafone Idea. Initially, the start of the trade, the stock tanked 9% but we are seeing some buying happening. I know it's a very risky trade. But in case, is there any hope here for any buy the dip strategy for Vodafone Idea, or you will stay away from this counter? Historically, you have been away from this counter.
Absolutely, and I'm so glad you remember. Also, you went from mind optimism to is there any hope here? No, Vodafone has been on my avoid list, continues to remain so. For anyone who wants levels, I think 8 is a good support zone, and on the higher side, you're looking at 9.5, perhaps 10, rounding it off as some sort of resistance. Vodafone is a very clear avoid for me. I still prefer Bharti, but right now the setup suggests that there could be some declines closer to 2000 levels, and that's where it will become an interesting position.
Thank you very much, Kush, for giving your views, and it's an avoid when it comes to Vodafone Idea. Let's take a quick break. On the other side, we get you top buy today's sell tomorrow picks.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys democratize information, and I think first you seeded the market, now
Welcome back. You're watching India Market Close. Let's quickly just look at what's happening to the markets right now as we speak. Nifty 50 cuts of almost 180 points coming in there. We are near the day's lowest levels. 25,867 is what you're tracking. Let's pull up the Bank Nifty as well and a quick view on the sectoral heat map to understand, which are the sectors which continue to put pressure, which are the ones which are being resilient in today's day of trade. It's only energy which is pretty much on the borderline, but apart from that, Nifty Midcap Select, all the other sectors are in red. But one stock that is in focus today, BHEL. Let's pull up that one on the screens. Bharat Heavy Electricals at the day's highest levels, gains of little over 6% coming in there. Now, is there a bull case or a bear case scenario that is building up for this counter with the kind of gains that have come in on the back of earnings? Varsha brings us all the details. Varsha, over to you.
Well, thank you so much for that. The stock is buzzing on the back of Q2. Numbers, strong numbers that the company has seen. There's been revenue growth of around 14% with EBITDA margin of around 8%. But this growth is, the growth quality is actually weak, which is led by Forex or mark-to-market gains. So typically not because of execution, the growth that you're seeing is the, bare point for this company. Right, now talking about the order book is strong at around 2.2 lakh crore, which gives a solid or rather strong visibility ahead when it comes to revenue. But the order inflows, there's been fall when it comes to order inflows, and execution delays is a risk that the company has seen. Right, talking about the UBS. So UBS has retained by with giving a 15,000 crore of order lifts, considering FY26 outflows, but margins are under pressure from low margin product. But this, the bull side for this, the FY26, if you see, is a clean slate year for the company, and in FY27 you will see the margins will rebound, considering 14 to 15% of margin. That's a huge spike you will see in margin when it comes to FY27. But Nuvama had cut EPS by 22% for FY26 and 16% for FY28, considering the various reasons that they've given in their analyst report. But a power cap, we have been seeing the capex revival. So power capex revival and diversification add upside for the stock. But overall, if you see, the re-rating depends on timely execution if company will see, considering the 2 lakh order book that the company has. But overall, if you see, considering the today's price, we have seen a good start, rather a strong Q2, which the company has seen. But this Q2 is not on the back of execution, but on the back of Forex gain and mark-to-market gains that the company has seen.
Points that you're raising. It is at the high point of the day. Varsha, thanks so much for that. Nirav, I'll come to you on BHEL. You've said that infrastructure is a theme that you like, but specifically within that, would you say BHEL is something that you would prefer? If so, why? If not, why?
BHEL is a great company, but an inconsistent performer. So I think every time there's been there are some quarters of disappointment, then there is one enticing quarter, one or two enticing quarters, and then the whole thing falls apart. To put the things into perspective, BHEL is into so many exciting spaces. It's into nuclear power, it's into boiler, turbine, generator, which are most vital parts as far as power generation is concerned. They are into the defense space. They are suppliers of some very critical equipment, super rapid gun mount to the Indian Defense Forces, nuclear power. All these spaces are very, very exciting. They are also catering to the railways in a very meaningful way. But still, I think margins have been lagging behind. Execution has been lagging behind, and I think inconsistent performance is one of the main reasons why the stock has been an underperformer, and I think it will continue to remain so until we see a couple of straight quarters of good performance with good execution and good margins.
All right, let's cut into the Cipla press conference, which is ongoing, stock under pressure on the back of Umang Vohra's exit. Listen in to what the management has to say.
With passion at the center of the heart, and always, running with the theme of caring for life. And I believe where Cipla is today, 11 years later, I think it's reached a stage where it's ready for the future. and it's a solid organization that can continue to grow sustainably. And we've developed a very good talent pipeline that can help take the company forward. So I just think that from my perspective, what the task I had set out to do through my 2 terms is achieved, and Cipla is now in good hands of the rest of the management team and Achin to take this forward.
So I assume you're not retiring from the pharmaceutical space.
Well, not really. I'm not going to retire, but my own view on that is that we probably should not retire till we're 65, 70, or whatever the age that we can work till. So I'm not retiring as yet. No.
Just about Cipla now, there was this sort of stability when you came in for the past 10 years that even if the promoters are not actively involved, there is Umang to sort of steer the ship. There seems to be now a vacuum amongst a couple of analysts and investors that I've spoken to. What is your sense in terms of what the future for Cipla would look like, and would a possible stake sale now be back on the table?
No, my own view is that, and I say this always, Ekta, and with humility, that Cipla is today an organization that is completely professionalized. And I think the promoters, and my due credit to them, they have enabled this. And the organization today is truly run by professionals. The promoter insight and guidance is always there. The board takes a very active role. I don't think there is a vacuum. I think Cipla has enough talent to continue to guide it. And there have been people in Cipla who've worked, who are lifers in Cipla and continue to be there. And I think it's, I don't think there's a vacuum, and I think the stability will be there, right? Every 11 or 12 years, management teams change. And I think the change sometimes is for the good in order to take the company to the next level. So I think we're going through that change here. Yeah.
Sure. But just before I hand it over to the next person to ask the question, just wanted to understand the tie-up that you have, announced with Eli Lilly for Mounjaro, which is obviously going to be branded differently. But is there a revenue share? If you could just spend more time giving us more details in terms of the revenue share, whether it's exclusive, and what does this do to, say, a semaglutide launch for Cipla? Would that be still on the cards, considering that you are selling a competitive product in the market?
So maybe I'll add, there's not too much that we can speak about in the agreement, Ekta. We're very, we have a confidential agreement with a very strategic and long-term partner with Eli Lilly. We practically sell most of Eli Lilly's range today in India. But what I can share with you is that this is a trusted partnership, right, between Lilly and Cipla to service the India market. There is obviously, you're aware that Eli Lilly's brand is already selling, and Cipla will supplement that. I think the other thing that I can say is that, you can expect margin structures to be very similar in the past transactions that we have done with Lilly. And we can't exactly divulge what the margins, etc. are. We believe that tirzepatide is a product with superior science and has the ability to firstly create the type of outcomes that people want. We kind of see it's superior to semaglutide as well. And on sema, depending on how our product gets approved, and how soon we are ready to launch, at some point in time, we'll have more clarity on that as well.
Okay. You also have a $1 billion guidance for the US. Does that still stay?
Directionally, yes, it should. Obviously, when we gave that guidance, we said we would have launches which would come in to substitute what we would potentially lose with Revlimid, and I think directionally that guidance stays even today. This year we may not be at $1 billion, right? But at the same time, we're not going to be so off the $1 billion either.
Okay, all right. I'll join back. Thanks very much, Umang.
Thank you, Ekta.
Next up, we have Vishwanath Pilla from Money Control. Promoting you to a panelist.
So that was the management of Cipla clearly talking about his tenure and what his plans are moving forward, and the tie-up that Cipla has with Eli Lilly when it comes to semaglutide as well. But the stock seeing some bit of pressure, mild recovery that's coming from the day's lowest levels. We've already spoken about the pharma stocks overall, but let's quickly shift focus to what's happening in the AI space. Now, India's proposed AI labeling rules, they may have headed for a rethink. In fact, sources do tell us that the government is weighing minor relaxations, and this is to its draft mandate, which could actually reshape how platforms like Meta, Google, and X are handling AI-generated content. My colleague Rishabh joins us with all the details. Rishabh, over to you.
Right, a very interesting development, what we're seeing coming in from the Ministry of Electronics and IT on the AI labeling mandate that they very recently put out. There has been somewhat of some concerns that are coming from the industry with regards to this being a blanket mandate that has been put upon large platforms like the likes of OpenAI, Meta, Google. All of them will have to comply with this, including the likes of AI platforms such as OpenAI or Google's Gemini or Sora or X's Groww. All of these stand affected. And what we're picking up on this is the fact that despite these concerns, the government may not fully roll back the 10% AI labeling mandate, but what it might do is it might soften this burden that's put on companies. It might pull down the mandate from 10% of the audio or video screen length or size from to about 5 to 7%. That is something that we're picking up. Remember, the government is not keen on rolling back on any of this, given the fact that they have cited deepfake as a major threat. There's been various instances of videos coming out of senior leaders also in deepfakes, and that has caused a lot of concerns. What we're also seeing is that public consultation for this is open till November 6th. And we will hear from the government officially on what they plan to do with the consultations that they've received.
All right, thanks so much, Rishabh, for getting us those details. Very important deliberations that will take place on that. Regulations have to be formulated for technology that is moving incredibly fast. Let us know what you think in the comment section. In the meanwhile, let me introduce to you Rajesh Palvia of Axis Securities joining us now for the last few minutes of trade. Rajesh, thanks so much as always for taking the time. It seems for the benchmark, it's 2 steps forward, 1 step back. But that 1 step back is par for the course, especially if you've seen 5% plus increase or return so far in the month for the Nifty 50.
So definitely. So looking at the rally in the month of October itself, some profit taking is happening at higher level, and looking at the call concentration, which is very well placed at 26,000, 26,100 strike, which is creating some bit of pressure for Nifty at, a higher level. But looking at the broader market, we believe that, once we able to take out about 26,000 level, there is a high possibility that, in November series itself, we may see a new all-time high trajectory for Nifty. Bank Nifty is comfortably trading around 58,000 level. So any breakout above 58,300 can take this Bank Nifty further higher to 58,800 also. So both indices are looking, bullish for near-term to short-term perspective. For Nifty, we are keeping our stop loss around 25,700, 750 kind of zone. So till these levels are intact, I think there is no as such, damage in terms of near-term trend. So buy on dips is the strategy for Nifty as well as for the Bank Nifty.
Interesting on the chart, benchmark indices, the view coming in from Rajesh. Now moving on to the small caps. We have Anushi joining us with the small cap buzzers. Anushi, what are you picking up?
Right, so a couple of stocks on the radar now. I'll start off with Web of Global. 45 times is the kind of volume that we are looking at if we just take the 1 month in context. While other stocks like PDS and Shriji Shipping is also seeing higher volumes on account of the recent second quarter numbers that have come out. Firstly, starting off with Web of Global, a strong quarter is what we are looking at with revenue growth exceeding the guidance that the company has given. Even margin uptick was driven by productivity gains as well as operating leverage. The company, however, despite the strong performance, maintains its FY26 guidance of 79%. Coming to PDS now, just a couple of days back, they have also reported a strong set of numbers, and this is the order book climbing to 5,308 crore, up 15% on a year-on-year basis. Even the net working capital saw an improvement. In terms of gross merchandise value, that saw a growth of around 18%. Now, what's also interesting is Zilio e-mobility. If we just see the past few sessions, the stock has been on the radar. This is especially after ace investor Mukul Mahavir Agarwal, he picked up about a 6.7% of a stake in this company, and this is by acquiring about 14.24 lakh shares through its Param capital is what we are looking at. So that's in focus. And lastly, coming to Shriji Shipping, again on the back of second quarters, it's buzzing. Here, if you just look at the numbers, while that was on the mixed side, margins expanded sharply by 460 basis points in the first half at around 37%. So overall, a strong number is what we are seeing. H2 is also expected to be better than H1. So how that would pan out is also something that we should be watching out for. So these are the 4 stocks on our radar for small cap buzzers today.
Interesting, and quite the list there. Just goes to show that there are a lot of movers in the broader markets. And even if I look at the Nifty 500 at this point, despite the fact that you have the breadth that is favoring the declines at this point, with 313 declines on the Nifty 500, you still have some stocks that are moving quite considerably higher. Something like a Chennai Petro is up about 9.8%. Something like a 5-star Sgility up 7.5%, close to 7%. PB Fintech on the back of results is moving quite considerably, up about 7% or thereabouts. BHEL, we gave you the bull and bear case as well, is up about 7%. And then you have Credit Access Grameen. It had a pretty bleak reaction to the numbers, where despite an improvement in asset quality, it had a decline in the PAT number and it was beaten down, but it's recovered quite considerably in trade today, up about 5% or thereabouts. So there are a few stocks from the broader markets that are doing well. I do want to also pull up the advanced decline ratio if we can, just to showcase how that has moved through the day. And it has more or less been pretty wide for most of the session, favoring those declines. And that just reinforces what I've been telling you about the broader markets. But you know what? It is also that time of the day where a guest gets you a buy today, sell tomorrow call. Just winding down, last 8 minutes odd. Rajesh, anything that you have in mind?
So I think a couple of stocks which are in our radar at this juncture to carry forward trade. First one is UPL from agrochemical basket. Stock is showing sign of consistent buying action, and the way weekly charts are shaped up, we believe 740 would be the target for the stock. So one can buy and accumulate this stock with stop loss of 709. Another stock where we are focusing is NBCC. If we look at the daily structure, stock managed to give breakout of falling trend line, strong buying action in last couple of trading session. Stock is comfortably holding about to all its near-term, short-term moving average. So I think NBCC can be looked at for BTST as well as for positional perspective also. We are projecting target of 125 to 126. On the downside, one needs to keep stop loss towards 115. And another stock where we are focusing is from metal space, Hindalco. Stock is enjoying its all-time high trajectory, series of higher top, higher bottom formation. So Hindalco, we believe that furthermore continuity of uptrend would be there, and possible target towards 884 we may see in the continuation of this up move. So one can buy Hindalco with stop loss of 849.
That's pretty interesting, choices coming in. But earnings previews are also very important. Some of the stocks that will be reporting their Q2 earnings post-market hours are ITC and Swiggy. Mahima joins us with what the street is expecting. Mahima, these two counters are retail favorite as well, and also they're in the consumption space. What are you picking up from this?
Sharad, I'll start with ITC. Overall, the expectation is that the cigarette will see a steady demand, and overall a mid-single digit cigarette volume growth is expected from ITC this quarter. Of course, revenue may rise around 14.5% as per Bloomberg estimates. EBITDA may rise around 1.5%. Margins, of course, may take a hit because of the kind of inflation that tobacco leaf has seen, and profit may rise around 4.3%. Overall, gradual improvement in FMCG business is expected, but of course, the FMCG business again here also will be impacted by the GST rate rationalization because inventory correction will take place. And overall, the pointers or the key things to watch out for in the entire earnings will be, of course, demand normalization both in FMCG as well as cigarette business, margin trends amidst the kind of input cost inflation that we have seen, and of course what are the early festive indicators that are being seen. In terms of where Swiggy stands overall, revenue is likely to see an uptake of around 46.5%, but EBITDA losses are expected to widen by around 14% as per Bloomberg estimates, and net loss also is expected to widen by around 46%. And this is largely on account of a couple of things. First one being them burning cash with regards to where discounts are concerned, because the competition is very high in the quick commerce space, plus their aggressive expansion on dark stores as well. So all of these factors will kind of impact the profitability, and plus food delivery growth has been facing headwinds as well. Steady growth in the food delivery, however, could be expected because of Bolt. We'll also have to see as to how execution this quarter has been for Bolt, which is a 10-minute delivery. Rising order volumes, improved monetization, and early signs of operating leverage could be expected from a Swiggy. Instamart to outperform food delivery, and EBITDA losses from quick commerce to remain elevated. We'll also have to wait and watch out for the commentary with regards to how they are seeing EBITDA profitability path from here on. Key things, of course, the new business performances that they've recently launched, be it toying or be it snack, scaling up of Bolt, of course, and lastly, what is the kind of cash burn that has happened this quarter as well, because they were at around 5,000 crores of cash last quarter. How much of that has burned, and what is the runway left for them?
So that's with regards to what is expected. In terms of Swiggy, and tomorrow will be a good day to do a comparative analysis between Swiggy and Zomato once the earnings come in. But Neerav, very quickly, any expectations that you have as to what the street should be watching out for from all these names?
Well, I think both ITC and Swiggy and as well as Dabur are likely to post very ordinary set of numbers. Swiggy is likely to disappoint a bit. And as far as Dabur and ITC are concerned, it's going to be a very, very lackluster set of numbers.
Lackluster set of numbers. Specifically on ITC, if I remember correctly, Rajesh, it's been hovering around that 420 mark for quite a while. Is there any possibility of a breakout on the charts, or do you think that it will continue to remain range bound?
So if you analyze the weekly structure, stock is still in down sloping channel, and stock is struggling to cross this upper sloping trend line resistance zone. 420, 424 is the key hurdle for the stock for this pullback action. Yeah, so looking at the last 3-week price action, this is third consecutive week where stock is making higher high-low formation. So I think, yes, stock is poised for giving breakout above 424. And if it happens, then rally can extend to 445 to 460. So those who are already long side of trade can hold the position with the stop loss of 414.
Okay. All right. So that's the view on ITC and on the charts at that. By the way, you have the banking index that is seeing cuts of about 0.5% and not too many big movers there. If anything, HDFC Bank was one stock that was pulling the Nifty higher in the recent past, but it's proving to be a bit of a drag today. The worst performer on the Nifty Bank, down about 0.8%. Quick view, Rajesh, on this one, and on Reliance Industries. Would you buy into these?
So I think both stocks are, showing same kind of behavior. Reliance again, fizzled out really again, which we have witnessed. 1500, 1520 acted as a supply zone. So, but looking at both stock, I think Reliance is looking much better compared to HDFC in terms of large cap space. So Reliance can extend its gain if it's able to give breakout above 1510, possible rally towards 1560 we may see in the near term. So one can buy Reliance with stop loss of 1470.
Neeraj and Nirav and Rajesh for your time and giving both the technical as well as fundamental perspective. But let's go back to the closing of the markets. It's been a session where we have seen downticks coming in both the benchmark and the broader indices as well. Let's focus on the numbers. Nifty closing below the 25,900 mark, and Nifty Bank also near that 58,000 mark. We see it's almost down 0.6%, 300 points cut happening. Let's pull out the heat map for the Nifty earnings and see what's happened. Sea of red coming in, Dr. Reddy's and Cipla taking the major hits. In the green, we have, of course, L&T trying to reduce its kind of up moves coming in, but FMCG, certain names are still in the green as well. This is the entire picture for the Nifty heat map. Let's pull up the advanced decline ratio, how things have moved out. And overall, if we see, the declines are actually almost double, you could see, and there's a wide gap coming in between both these indices. Also, let's look at how the Nifty Small Cap 250 and the Nifty Mid Cap 100 index has tracked. And this was, of course, a recovery attempt being made, but still faring better than even the benchmark indices. That is an important trend which we'll be watching out for. Let's pull up the BSE 500 index and see what the key contributors are, what they have been doing. PB Fintech, that's up almost 7% on the back of earnings. BHEL has done well, and also we could see AB Capital and Five Star Finance doing wonderfully in the day's trade. Largely, these are earnings-specific trades, AB Realty as well. In the losers, Vodafone Idea, we have spoken about the telecom stocks which are under pressure. Dr. Reddy's coming in, and names such as Industars and IEX on scuppling news flow also making it to the list. So largely, this has been the day of the bears, but let's see how the preparation actually pans out. And the cues for tomorrow, this includes ECP International rate decision. This is likely to be withheld. That means there won't be much changes. That's what the expectations is. And the speech coming in from spokesperson from Fed as well. US GDP growth rate and initial jobless claims will always be there. And Fed rate cut we saw yesterday, but the tone overall has turned hawkish. Phenotech's chemicals bonus would be there. That's a key 4:1 ratio announcement to be looked at. An interim dividend, these stocks you could see on the screen where the action is. But another place where the action will be the earnings. Earnings is very important as we're in the middle of the earnings, and largely 20-odd Nifty companies have reported their earnings. ITC today, post-market hours, ITC and Pidilite and United Spirits, largely consumption names would be in focus. Also making it to the list is Dabur and DLF, Swiggy as well. So these are the important stocks which we will be tracking post the market hours. But for tomorrow itself, that's also an earnings heavy day. From auto space, we are having Maruti Suzuki, BHEL, and even BPCL and Vedanta making it to the list. Also looking at stocks such as GAIL and Godrej Consumer also making it to the list. Also other stocks in focus would be very important, but primary market, that's something to look at. And the sharks have arrived at Dalal Street, and Lenskart IPO opening will be there tomorrow as well. So a lot of action in the secondary as well as primary markets would be there. But that's it for India market close today. Keep watching NDTV Profit, and the next stop is the Market Express, where Himanshi gets in all the key details of whatever has happened throughout the day.
let's call upon stage the man himself, Chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20, 25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Proam, India's #1 golf proam, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Proam. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot.
Thank you.
Hello and welcome. Good afternoon. You're watching Market Express and I'm Malika Mishra. Let's get straight into the show. First up, markets end choppy day of trade in the red as cuts deepen towards the last leg of trade. While Sensex dips almost 600 points, Nifty struggled to settle below 24,900. HDFC Bank, Reliance and Bharti Airtel contribute most of the Nifty's fall, while counters to the likes of L&T, Coal India and Bharat Electronics showed marginal gains. Although positive, no solid consequence from Trump's meeting, rupee depreciation and pressure in pharma stocks affected overall investor sentiment. Let's take a closer look at the sectoral picture now. Most sectors ended the day in the red. Finance, bank and consumption were the top laggards. Pharma and FMCG were also on the back foot. Energy and realty remained resilient and ended the day with a tinge of green. Let's now look at some earnings buzzers. Cipla posted strong sales this quarter, but the financials reveal significant operational pressure. The pharmaceutical major delivered robust revenue growth, jumping over 7% year-on-year and topping 7,500 crore. However, converting those sales into profit proved difficult. Cipla saw its key operational profit margin squeezed down to 25%. This drop meant that operational profit, or EBITDA, was virtually unchanged, climbing by less than 1%. Net profit managed only a modest gain of just under 4%. The company has officially announced a major leadership transition. Long-serving global CEO Umang Vohra will step down at the end of his term in March 2026. Let's keep it going with earnings then. Infrastructure heavyweight Larsen & Toubro delivered quarterly revenue and margins perfectly in line with street expectations, but the real story here is the future pipeline. L&T's order inflow surged an incredible 39% in the first half of the year, signaling massive momentum across their businesses. This performance has management confident they will easily surpass their initial annual order inflow target, and they remain firmly on track to achieve 15% overall revenue growth for the year. The strong execution and bullish guidance are clearly resonating with the street. Major brokerage houses are unanimously maintaining their buy ratings and have moved quickly to hike their target prices. Mahanagar Gas delivered a very weak set of numbers for the second quarter with massive margin pressure, raising significant questions about operational stability. While the company's revenue slipped only marginally, the real pain came on the profitability front. Operational earnings, or EBITDA, plunged by over 32% year-on-year, and this severe drop annihilated the margin, which collapsed from 24% last year down to just 16.5% this quarter. This operational squeeze hammered the bottom line, with net profit taking the biggest hit, crashing by nearly 40% in fact. Let's keep it going with earnings then. Steel Authority of India, or SAIL, managed to prevent a major financial setback this quarter by executing a smart operational strategy. Falling steel prices were a headwind, leading to a direct decline in their net sales realization. But management successfully counteracted this loss. Strong volume growth combined with a better product mix pushed total revenue up by 3%, narrowly surpassing last year's figure. Despite this operational success, the price pressure was evident in the profits. The operating margin fell to 9.5% and net profit took a major hit, declining over 43% year-on-year. On the balance sheet side, the company continues to focus on financial health. Efficient management of working capital helped SAIL reduce its net debt quarter-on-quarter, a key positive in the current soft pricing environment. United Breweries, the parent company of Kingfisher, delivered a disappointing second quarter, largely due to external headwinds. The top-line revenue was down 3%, a direct result of a mid-single-digit drop in beer volumes. The company directly attributes its drop to an unusually strong and extended monsoon season, which kept consumers away from celebratory outdoor drinking occasions. Despite the volume slowdown, UBL's strategy is holding up. The company managed to expand its price mix by a high single digit, showing they are successfully increasing prices. Crucially, their premium volume segment surged in the low teens, signaling that consumers are actively trading up to higher-end brands. However, the relentless rain meant the volume losses were too heavy, cancelling out the pricing gains and dragging overall revenue into the red for the quarter. Sgility India delivered a strong second quarter. The company reported continued traction in its core business. Critically, Sgility successfully converted those sales into better margins, with the reported EBITDA margin reflecting significant operational efficiency during the quarter. Management did clarify that this adjusted EBITDA figure excludes other income and forex gains, confirming the strength is purely operational. Now, this solid performance has led management to adopt a very bullish outlook. Sgility has increased its revenue guidance in constant currency terms to 21% plus for the year, and we expect this strong business momentum to hold firm throughout the second half. State-owned engineering giant BHEL is reporting a strong recovery driven by a major upswing in demand for power equipment. BHEL's strong growth this year, this quarter in fact, was led by robust execution, showing that projects are finally translating into revenue. Now, the crucial power segment saw a massive jump in sales, rising over 45% year-on-year. Now, this power revival, combined with solid 18% growth in their industrial segment, signals a broad-based recovery for the company. Dilip Bilkon has announced a key contract win, securing a significant new order worth 307 crore rupees from ISC Projects. The contract is focused entirely on railway infrastructure and track construction, a high-demand area for the government's infrastructure push. The company expects to complete the entire project within a 24-month timeline. NBCC, the state-owned construction firm, has announced the win of a new set of contracts, bringing an additional 79 crore rupees into its order book. These multiple orders come directly from the Institute of Chartered Accountants of India, ICAI, and are centered on various general construction work. While the total value of 79 crore rupees is modest, securing steady construction work from a prestigious institution like the ICAI provides a reliable stream of business and further diversifies NBCC's already large project portfolio. Moving on then, let's talk about the travel tech firm Ixigo. That posted a challenging quarter though, where operational growth decelerated while costs surged. The biggest financial hit came from employee costs, which effectively doubled year-on-year. Management attributes this massive spike primarily to the allocation of employee stock options, also referred to as ESOPs. This sharp rise in spending comes at a time when top-line growth is slowing down for the company. Ixigo saw its gross transaction value grow by 23%, a significant slowdown compared to the previous quarter's 55% jump. Domestic manufacturer and seller of two-wheeler helmets in India, Studs Accessories, has been subscribed 84% on day one so far. The company has set the price band in the range of 557 to 585 rupees per equity share. The offer will be open for till November 3rd for investors to subscribe. Investors can place a bid starting from a minimum 25 shares and in multiples thereafter. The company is raising over 455 crore through an offer for sale of 77.9 lakh equity shares. Studs Accessories IPO is an offer for sale with no fresh issuance. Lift Capital Services and ICICI Securities are the book-running lead managers for the Studs Accessories IPO, while MUFG In Time India Private Limited is the registrar to the offer. Airtel, Vodafone and Indus Towers are in focus after the Supreme Court's AGR judgment was released today. The order restricts any relief package only to Vodafone Idea, not other telecom players, making it negative for telecom peers. The top court's written judgment stated that the order pertains only to Vodafone Idea due to peculiar facts and circumstances of the case. The order does not reference the telecom company's previous plea seeking a waiver of penalty interest and penalty dues, suggesting that the Supreme Court's consideration was confined only to the reassessment of the additional amount. The US Federal Reserve cut interest rates by 25 basis points on Wednesday, while lowering the target range to 3.75 to 4%. Now, this marks the second time the Fed has cut rates this year, having already issued a 25 basis points rate cut in September. US Fed Chair Jerome Powell said that December rate is not a foregone conclusion, which may have serious implications for the Indian market. Wall Street did not approve of the comment from Powell, with the Nasdaq falling almost 1% immediately after the announcement. Dow Jones also had a 0.75% negative reaction to the announcement and ended the day in the red. Big move in the bullion market. India's gold investment demand has hit a record $10 billion in the September quarter, according to the World Gold Council. Analysts say rising prices, festive season buying, and a weaker rupee all boosted investor appetite. The surge marks one of the strongest quarters ever for Indian gold demand. And global fast food giant McDonald's is betting big on India, launching its largest overseas innovation hub right here in Hyderabad. The new center will focus on technology, automation, and digital solutions to enhance restaurant operations worldwide. The move underscores India's growing role as a global tech and innovation powerhouse. And on to some news on Donald Trump. US President Donald Trump on Thursday said tariffs on Chinese goods would be reduced to 47% from 57% after what he described as an amazing meeting with Chinese President Xi Jinping in South Korea. The US has also extended the suspension of 24% reciprocal tariffs for 1 year. In response, China has agreed to adjust countermeasures. Trump also agreed to cut fentanyl-related tariffs on China to 10%. Trump said a lot of decisions were made during the talks, which he said ranged from trade and technology to even rare earths. The announcement marks the most significant easing of trade tensions between Washington and Beijing since Trump's return to office this time. And China has suspended rare earth-related measures and will halve export controls announced on October 9th for 1 year. This comes on the heels of the Trump-Xi meeting where the two countries struck a deal on rare earths. Trump said the rare earths issue has been settled and there would be no more roadblocks on them. Speaking about Air Force One, the US president said it was a 1-year agreement that would be extended. He also said he would be going to China in the month of April and that Xi would come to the US at some stage after that. This meeting marks the first face-to-face meeting in 6 years, seeking a truce to end a trade war that has roiled the world economy. Another outcome from the meeting is that China is going to be working with the US to properly resolve issues related to TikTok. Now, both the US and China have also agreed to expand agricultural trade and have further affirmed the results of the Madrid trade consultations, with the US making positive commitments in areas such as investment. A spokesperson for the Chinese ministry said that the results of the trade consultations were hard-won, and China looks forward to working with the US to ensure their implementation, injecting more certainty and stability into China-US trade cooperation and the world economy. And in a major policy shift, the United States has ended automatic renewals of work permits for migrants, a move set to significantly impact Indian professionals holding the H-1B visa and awaiting green cards. The Department of Homeland Security announced the change today, effective for all employment authorization document, or also called renewal documents filed on or after October 30th, 2025. Under the previous Biden administration rules, eligible immigrants could continue working for up to 540 days after expiry if their renewal was filed on time. That's now over, though, with the Trump administration citing the need for stricter vetting and background checks to combat fraud and bolster national security. US CIS Director Joseph Edlow called it a common sense step, adding that working in America is a privilege, not a right. And in a major twist in the Louvre jewelry heist, French police have arrested 5 more people, including the prime suspect believed to have masterminded the daring theft from the iconic museum. Authorities say the new arrests come after weeks of surveillance and forensic leads. The stolen jewelry, reportedly worth millions of euros, remains untraced for now, but investigators say they're closing in. The Louvre, meanwhile, continues to tighten security as the probe widens across Europe. Tragic scenes unfolding in the Caribbean. Hurricane Melissa has left behind total devastation, with dozens confirmed dead and thousands displaced. Entire towns have been flattened, power grids knocked out, and rescue operations are underway amid flooded streets and debris. Authorities are calling it one of the worst storms in recent years as emergency teams race against time to find survivors and deliver aid to those left stranded. The severe cyclonic storm Montha has caused widespread devastation across Telangana, with continuous heavy to very heavy rainfall. Continuous heavy rainfall overnight caused the Himmat Sagar and Osman Sagar twin reservoirs to reach near full tank capacity. The authorities from the Hyderabad Metropolitan Water Supply and Sewerage Board have opened multiple floodgates at both reservoirs to manage the massive inflows. A blanket of haze and fog enveloped Delhi on Thursday morning, trapping pollutants and pushing the city's air quality into the very poor category after remaining poor for the past few days. According to the Central Pollution Control Board, the national capital recorded an air quality index of 357 compared to 279 a day earlier. The IMD said Delhi NCR is experiencing multiple weather influences. According to reports citing experts, the cyclone Montha has made landfall in Andhra Pradesh, while a western disturbance is active over the northern hills. India flexed its military muscles on Thursday with the start of Trishul, a 12-day tri-service military exercise on the Pakistan border and its first war games since Operation Sindoor 6 months ago. Trishul will involve special forces commandos, missile batteries, warships, battle tanks and attack aircraft. It also includes the Rafale and Sukhoi Su-30 carrying out simulated offensive strikes into southern Pakistan to test the Indian Armed Forces' readiness in a post-Sindoor scenario. Brazilian giants Flamengo are through to the 2025 Copa. The Rio-based club powered fast racing in a thrilling semi-final clash, showcasing their trademark attacking flair. The win sends Flamengo into yet another continental final as fans erupt in celebration across Brazil, dreaming of lifting South America's most coveted club trophy once again. In the high-profile defamation case filed by IRS officer Sameer Wankhede against the makers of Netflix's Bads of Bollywood, the court has now posted the matter for final hearing on November 10th. Wankhede has alleged that the series directed by Arun Khan tarnishes his reputation by portraying him in a defamatory manner in connection with the 2021 drugs on cruise investigation. A single bench of justice had earlier issued summons to Aryan Khan, Red Chillies Entertainment and Netflix while directing the removal of the objectionable scenes from the platform. All parties have now been directed to file their written submissions before the next date. The case continues to draw sharp attention with legal and public scrutiny on artistic freedom versus reputational harm. And Diana Pandole, the Pune-based racer, is set to make history as the first Indian woman to race in a Ferrari in an international championship. The 32-year-old will be driving a Ferrari 296 Challenge car at the Ferrari Club Challenge Middle East. The championship is set to commence from November 2025 and will continue till April 2026. And that's a wrap on Market Express. But viewers, stay tuned to NDTV Profit as there is a lot more action right ahead waiting for you on the other side of this break.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Proam, India's #1 golf proam, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Proam. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf.
We want to thank
Well, that's very sweet of you. Thank you.
I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
नहीं बढ़िया आपके काम किया आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think you're trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributed to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
NDTV Good Times is something that we're supremely excited about.
We just don't want
Nifty closes lower to end below 26,000 mark to trail the broader market. Most sectoral indices finish lower. Mid and small cap indices end flat with a mild negative bias. Trump cuts tariffs on China by 10% to 47% after high-stakes meeting with Xi Jinping lowers fentanyl-linked duties to 10%, says the US will soon sign a trade deal with China. China agrees to hold off on rare earth export restrictions for 1 year. The Chinese Commerce Ministry says China is willing to work with the US to jointly safeguard and implement the important consensus reached at the meeting between the two heads of state. Government may relax the proposed AI labeling rule and bring down the disclosure requirement to around 5 to 7% from the 10%. Sources say the industry warned blanket labeling could disrupt creative post-production workflows. Alphabet's Q3 earnings beat estimates driven by strong cloud and AI growth. Cognizant raises growth guidance for CY25 to 6 to 6.3% from 3.5% to 3.8% organically. US ends automatic renewal of permits for migrants. Move expected to particularly impact dependents of H-1B or L-1 visa holders. Large number of Indians expected to be hit. Delhi's air quality nears severe mark as haze, smog blanket the capital city. AQI reading rises to 375, bringing it to the red zone. AQI in several areas crosses 400. Hello and welcome. A very good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour of this show, we'll bring you the latest on markets as well as national and international news. Like every day, let's check how the markets fared today first. Benchmark indices ended a choppy session in the red. The Sensex slipped nearly 600 points, while the Nifty struggled to settle below the 24,900 mark. HDFC Bank, Reliance Industries and Bharti Airtel were the biggest drags on the Nifty index. Most sectors closed in the red, with finance, banking and consumption stocks leading the declines. Energy and realty counters showed some resilience, ending the day with a touch of green.
Right, so overall, if we take a look at the benchmark indices, the Nifty 50 as well as the Bank Nifty have underperformed the broader markets. The Nifty 50 ending at around 0.6% lower, below the 26, much below in fact the 26,000 levels, below the 25,900 levels as well. Coal India has been the top Nifty gainer, but Dr. Reddy's and Cipla amongst the top losers on the Nifty 50 today. The mid cap and the small cap indices almost end flat with a mild negative bias. Nifty Energy outperforms and largely led by Adani Green. The Nifty Financials under pressure, dragged by LIC Housing Finance on the back of its Q2 numbers and SBI cards as well, because of for LIC Housing Finance because of loan growth not being as per what the street was expected. And Nifty PSU Bank snaps a 3-day losing streak. Bank of Maharashtra overall has been the top loser on the Nifty PSU Bank as well. The Nifty Auto also falls for third consecutive day, dragged by Bajaj Auto as well as MRF. Nifty Metal also snaps its 6-day gaining streak. Jindal Stainless and SAIL remain the top losers on the Nifty Metal. So this is the overall view as to how the markets have done in trade today.
Thank you for explaining the market action today for us, Mahima. Sharks aren't just hunting for startups anymore. They are swimming straight into Dalal Street. From Pharma to Boat, the Shark Tank stars are making waves with their market debuts. Let's dive into how these shark stocks are performing post-listing. Sharad is here with all the details.
Sharks are moving away from tanks to a sea called Dalal Street. The sharks have arrived at Dalal Street. But how is Dalal Street treating the sharks? Let's go one by one. IPO size, all the sharks are under my lens. Of course, these sharks have been active from 2021 itself. Namita Thapar, their IPO size of Pharma, that was roughly 1950 odd crore rupees. There was fresh issue aspect as well as OFS aspect. Eternal 2021, the IPO had come. Over here also we see it was a 9,375 odd crore IPO size. Honasa Consumer Ghazal Alag 1,700 crore IPO size. Of course, it had both the components of fresh issue as well as open for OFS. And Piyush Bansal recently almost 73 odd 100 crore rupees IPO size coming in, and this IPO pricing also is about the street is actually chattering about. But recently even Aman Gupta's Boat has filed a smaller size IPO, but a 1,500 crore IPO size coming in from Boat as well, which is called Imagined Marketing. Listing price and current price, let's see how the performance has happened over the year. Honasa is still trailing. That's the main important part. Not much data for Pharma, but nevertheless it's flattish here. But the one who takes the cake, that's of course 54% return coming in from the listing price as well when it comes to Eternal. But Honasa Consumer, there is a change in business model, and because of that the numbers have been on the lower side. That's coming at 15%, and two sharks are waiting, and these numbers will be coming in the months to come. Also, let's look at how the offer price was and what the current price is. That's also very important. And you see the pricing from the IPO, that is also in a main contention when we look at these new big large startups who come to the bourses. Pharma, not much, just 38% gains coming in. But the leader of the show by far is Dipinder Goyal's Eternal. Look at the returns. That's 363% of returns coming in. But there is a trail, and Ghazal Alag's company Honasa, that's coming in at 9%. That's the parent company for our viewers to understand. And of course, Dalal Street will be looking at these two sharks as well as and when their companies comes and their numbers come in. But let's look at the timeline. What actually stands out? Namita, she came in to 2024, her company. Dipinder's is the oldest in the class of 2021 of startups. It came in at July 23rd, 2021. And Honasa also in 2023. And recently, it's November 2025, we are seeing Lenskart from Piyush Bansal. But nevertheless, we can expect in the next 1 to 2 odd months what the street is expecting for Boat also for Aman Gupta. So we can see at least 5 sharks have already made their debut, in the Dalal Street. 2 of them IPO will be coming, and maybe a couple of more on the offing.
After that interesting report, let's take a look at a major international story today. US President Donald Trump and Chinese President Xi Jinping held their much-awaited meeting on the sidelines of the APEC summit in South Korea's Busan. Both leaders called the talks warm and constructive, marking a rare thaw after years of tension. While President Trump described it as an amazing meeting, rating it a 12 out of 10, Xi Jinping said both sides had reached consensus on key issues. The two countries announced a series of headline decisions. The US has agreed to cut tariffs on Chinese imports from nearly 57% to around 47%. China has announced that it will suspend the export controls on rare earth minerals for 1 year. The Chinese Commerce Ministry said that the country is willing to work with the US to jointly safeguard and implement the important consensus reached at the meeting between the two heads of states. Let's now go across to my colleague Jasmeet Singhai for a detailed report on the key announcements made after this crucial meeting. Jasmeet, please wrap this up for us.
Well, right, thank you for that. The long halting trade talk finally comes to an end. While if you look at the overall picture, the 10% rate cut from 57 to 47 is a positive move done by US on China. Secondly, we also make a note that given the Trump also announces that they will be negotiating and coming down to a new tariff rate soon. Now, in terms of this tariff rate, the discussion was done across various horizons, starting off from AI, where China to invest in US for the AI development, while China to also increase the corporation in terms of financial control going forward. While we also see the soybean news coming up, where China has ordered the soybean from US post the meeting which it had with the Trump. Well, we also make a note that the China to ease the rare earth export, which has been the major concern of talks all this while, China to ease the rare earth control over the open market further. While we also make a note that US-China signs a one-year deal with regards to the same rare earth matters. While we also see that going forward, they would like to work on even the national issues, the Ukraine issue, and get solutions for that. Lastly, what the major picture depicts by the discussion is that both sides called this talk to be constructive, and we look forward to see further talks and get the proper understanding where will the trade talks finally settle in going forward.
Right, Jasmeet, thank you so much for those key points from this crucial meeting between the two super houses. But moving on, Standard Chartered's Chief Investment Officer Manpreet Gill says the latest Fed's outcome is proving constructive for US-China trade relations. He notes that given the high degree of economic interdependence between the two economies, it remains in the interest of both sides to reach a deal. Listen in.
I think based on just the interview we all heard and what I read earlier this morning, it does look like the outcome is a constructive one when it comes to US-China trade. But to some degree, that's no surprise, right? I think we had the buildings of this going into the physical meeting. And to some degree, what a lot of us learned sort of ahead of this, the most recent bout of trade tensions is, high degree of codependence on several fronts. So it is the interest of both sides to reach a deal, and I think that's really what we're seeing to some degree, come to conclusion.
It was an earnings-heavy day for big tech with AI taking center stage. Meta, Alphabet, and Cognizant delivered strong Q3 results led by AI-driven growth. Meta's revenue rose 26% on a year-on-year basis to $51.2 billion, while Alphabet's hit $87.5 billion with robust cloud and AI momentum. Cognizant reported a 7.3% YOY revenue growth and raised FY25 guidance, signaling steady IT demand. Across tech majors, heavy AI investments continue despite rising costs, underscoring confidence in long-term returns. My colleague Jasmeet joins us back with more details on each of these companies. Jasmeet, how does the picture look like for each of these earnings?
Well, as rightly said, it has been an AI-heavy based picture given what the Q3 earnings indicate. Starting off with the first one, which is Meta. While the Meta gives a big push on AI, we see the revenue rose by 26%. On the other hand, the advertisement business, which nearly reports a 98% of the core of the business, saw a strong uptick. But the street still stands divided, given the heavy announcement made by the company in the AI. On the other hand, the AI arm of the company, which is the Reality Labs, saw a net loss of $400 billion. So this keeps the street divided between investment in AI and the loss reported on the back of AI. While we also make a note that there has been overall picture where even the CEO Mark Zuckerberg also comes in the picture and says long-term efficiency will be boosted on the back of AI. Going more to the next one, which is Alphabet Q3 earnings, we see that the revenue rose by 87.5 billion, while we also see that it beats the estimate. In terms of earning per share, it stands at 2.87 versus the estimate was at $2.63 per share. Now, in terms of the cloud services, the Google Cloud revenue surged by 33% on YY basis. When you look at the AI angle for this particular company, we make a note that AI-powered products revenue jumped by 200 times on YOY. So we have some firms where the revenue is still negative on the back of AI, but some firms like Google and Alphabet, we see the AI revenue jumping almost 200 times on YOY basis. In terms of the expenditure, company has raised the capital expenditure guidance from $91 to $93 billion for FY25. While lastly is Cognizant, which is generally an IT indicator where we take the readings of Cognizant result and see how it's going to impact the overall Indian IT space as well. Now, in terms of this particular company result, we make a note that the revenue is up nearly 7.3%, while we also make a note that the overall profit fell 53% because of one of the costs. Now, in terms of the guidance, which is a very key important aspect for the IT, has been raised for the entire year of CY FY25. Now, in terms of margin guidance, have also been raised to the upper end, that's 15.5 to 15.7 going forward. Now, this result implies a stable demand in the market, and we also make a note that BFSI segment sees stability going forward from here. While this also shows that Gen AI is being a tailwind instead of the headwind that was expected by the industry. So all in all, a huge investment in AI space, at the same time, mixed set of numbers for all the tech giants out there.
Right, Jasmeet. Huge investment in AI space, but a mixed set of numbers at the same time. Thank you so much for that wrap up. But big news for Indians working in America, viewers. From today, October 30th, the US is ending automatic work permit renewals. Now, this means no more 180-day extensions while your EAD, which is Employment Authorization Document, is being processed. This hits H-1B visa holders and their families the hardest. And as per statistics, Indians received 71% of all H-1B approvals in 2024. That's nearly 3 out of every 4 skilled worker visas. When you add China, that number rises to 89%. But here's the catch. The USCIS, which is United States Citizenship Services, often takes 3 to 6 months or even longer to approve renewals. And without the auto extension, a single delay means you can't legally work in America. That potentially could result in unpaid leave, job loss, or even being forced to leave the country. For families, it's worse. Spouses on H-4 visas get affected, kids' schooling gets disrupted, and health insurance can vanish. The US Department of Homeland Security says this move is about stronger security and stopping fraud. And listen close to their words. They say working in the US is a privilege, not a right. Now, while this new rule will not impact permits already extended before October 30th, for the request planned tomorrow onwards, which is after October 30th, USCIS advises to file your renewal up to 180 days early, not just 90, that won't be enough. And use the premium processing route if you can. Basically pay extra fees for the same purpose if possible. And moving on, as investing platform Groww becomes a household name and gears up for their mega IPO, we sat down with the founders in this exclusive interview ahead of their highly anticipated D-Street debut. Coming straight from the Flipkart playbook, they share their journey of democratizing investing for millions. Get ready to hear why their customer-first focus and search for perfect product market fit is what sets them apart in the highly competitive space. Listen in.
Let's just start with the origin story. 2016 is when both of you got together and did Groww, but you've worked together before. At that point, met each other at Flipkart. Where did the whole idea come from?
Yeah, so we know each other since like 2005, right? Our first jobs together. And then at Flipkart, when he joined, so I joined earlier, and then after a year he joined. We started brainstorming. By the way, we have two other crazy folks with us who are not here right now, but they got added to the team later. But when we started, the idea was 4 of us. You know, we worked at Flipkart and we saw how e-commerce kind of disrupted overall commerce in the country, right? And passionate, like we were very passionate about financial services, especially investing. I started investing when I was studying here at Bombay, at IIT Bombay, and I started around 2001 or something. And I still kind of remember like how tough it was to open an account and start investing. And guess what, in 2016 it was similar. And when 4 of us started brainstorming, we thought, you know, can we democratize this process of investing? Can we build like a platform, like how Amazon or Flipkart happened in e-commerce? Can we do something similar in investing space and wealth? Can people come? Can we make it very simple, delightful, transparent, and let people build their wealth?
No, so just hang on a minute. This is interesting. So you've taken the experience of selling phone, laptop, clothes, etc., XYZ, everything on Flipkart, and said, let me apply to financial instruments.
So I think a little differently, Tamanna. I think we've taken all the learnings of how consumer think, how consumer decide, what is important for the consumer, and use that learning into a different place, solving a different problem. So investing was a different problem. Buying a phone or a t-shirt or a shoes is a different problem. But consumers, humans are the same. So the thing that helped us and translated from our experiences of not just Flipkart, even before that, we have been part of a couple of startups. We did our own startups before.
Together or separately?
Separately.
Okay.
Both of us failed, not in
different ways.
In different ways.
Yeah, and that was also helpful, by the way, because now you are not from the financial industry. You are not from that. So you can think like a customer. So there's something called curse of knowledge, right? If you know everything about that, then you can't think about somebody who does not know anything. So when we think about Groww, we think it more like a consumer problem than like a financial problem. Of course, there are financial products, but you need to know how customer is thinking about that product.
And India's proposed AI labeling rules may be headed for a revision. Sources tell us the government is weighing minor relaxations to its draft mandate, which could reshape how platforms like Meta, Google, and X handle AI-generated content. My colleague Rishabh Bhatnagar is here with the key details on the same story.
Right, a very interesting development, what we're seeing coming in from the Ministry of Electronics and IT on the AI labeling mandate that they very recently put out. There has been somewhat of some concerns that have come in from the industry with regards to this being a blanket mandate that has been put upon large platforms like the likes of OpenAI, Meta, Google. All of them will have to comply with this, including the likes of AI platforms such as OpenAI or Google's Gemini or Sora or X's Groww. All of these stand affected. And what we're picking up on this is the fact that despite these concerns, the government may not fully roll back the 10% AI labeling mandate, but what it might do is it might soften this burden that's put on companies. It might pull down the mandate from 10% of the audio or video screen length or size from to about 5 to 7%. That is something that we're picking up. Remember, the government is not keen on rolling back on any of this, given the fact that they have cited deepfake as a major threat. There's been various instances of videos coming out of senior leaders also in deepfakes, and that has caused a lot of concerns. What we're also seeing is that public consultation for this is open till November 6th. And we will hear from the government officially on what they plan to do with the consultations that they've received.
The Ministry of External Affairs has confirmed that India has been granted 6-month exemption from US sanctions on Chabhar port, a key route for India, a trade route towards Afghanistan and even Central Asia. This announcement comes from MEA spokesperson Randhir Jaiswal amid trade negotiations between India and the US. Listen in.
I can confirm that we have been granted exemption for a 6-month period on the sanctions that were applicable, American sanctions that were applicable on Chabhar.
The Finance Ministry is ramping up preparations for the 2026 budget with early consultations. NDTV Profit reported yesterday that Revenue Secretary Arvind Srivastava has kicked off meetings with key industry bodies like FICCI and PHT Chamber of Commerce and Industry, signaling a broader push for stakeholder voices in shaping policies. The goal is to spot sector-specific gaps, especially in taxation. Let's listen in to some of the key suggestions made by 3 key voices at PHT CCI, beginning with CEO and Secretary General Ranjit Mehta, Chair Direct Committee Mukul Bagla, and former President Saket Dalmia.
Especially for the MSMEs, I would say that, Section 54B, where any person who sells his property and gets if he invests the property, the receipts to buy another house, they get a capital gain tax advantage. We have recommended that even the MSME, if he sells any of his factory and if he buys another factory with that money, we have requested the government if that benefit of capital gain tax can be given to the MSME, that will promote the MSMEs and all that will also give them extra liquidity in their hands. And mainly our focus was definitely on giving more liquidity and ease of doing business for the industry. And then, of course, we have talked about interest equalization scheme, which can be reintroduced, and also the tax audit for MSMEs, can be simplified.
We feel that India could come up as a big manufacturing hub. So for that, we have requested the Finance Ministry to reintroduce Section 115 BAB, which was a new tax rate of 15% for new manufacturing units. So we have suggested that that section should be reintroduced, and new manufacturing units should be given a lower tax rate, which will help in setting up of new manufacturing units, giving a growth to the country, in creating employment, and overall increase in tax relations.
Increase the tax slabs so that the middle income economy is able to spend more into the economy. The second point was, we are all talking about self-reliancy, and after US tariffs, everybody is talking about that we should be self-sufficient. So make in India for the world. We requested that the income tax exemption for new investment in industry should be reintroduced at 15% slab. I think that's very important. And secondly, that the most important other part is that we are seeing that the whole world is moving towards intellectual property. And for that, we need more spending of R&D to the economy. So tax exemptions for the same should be brought back so that we move up the value chain.
Well, viewers, that's all the time we had on this edition of Profit 360. But do stay tuned to the channel as we continue to give you a lot more news and updates.
Let's call upon stage the man himself, chairman of the Raymond Group, Mr. Gautam Singhania.
What is different about the opportunity that India presents right now in this decade versus what you may have seen over the last 20-25 years?
I think it's the emergence of the middle class. There's an aspiration. Every middle class individual has an aspiration to want more. The Indian consumer has a lot of trust and belief in Raymond.
The NDTV Profit has come a long way.
You are the new schools and colleges which people are getting access to education from.
ने बढ़िया आपके काम किया, आपके तो नाम में प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think what you're doing is also contributing to the Indian capital markets and Indian economy.
When leaders speak of markets, they speak to NDTV Profit.
We unveil NDTV Golf Proam, India's #1 golf proam, the course of champions, the conversation of leaders.
What a stellar lineup we have here on the stage of the NDTV World Summit to announce the launch of the NDTV Proam. Arguably India's greatest cricketer, one of India's most distinguished bureaucrats, a top international golfer, and also a top Indian pro at the moment. One administrator who's doing more to lift the profile of Indian golf than anyone has in the recent years.
All the top champions, the Tiger Woods, will all come from India in future.
It's great to be here. Golf is growing across the globe and here in India as well.
Whereas now the opportunities are increasing a lot. Thank you very much. You're starting golf. We want to thank you. That's very sweet of you. Thank you. I think that's very, very important.
The NDTV Profit has come a long ways.
You are the new schools and colleges which people are getting access to education from.
ये बढ़िया आपके काम किया, आपके तो नाम में ही प्रॉफिट लगा हुआ भाई.
In the world of money and markets, the real currency is clarity.
So you guys have democratized information, and I think first you seeded the market, now the market is seeding you back out there.
Decisive, discerning, distinct. NDTV Profit isn't just business news.
We are like visiting faculty occasionally who come and get a chance to share what we can, but I think it's a great service.
It's the new language of markets, and the voices that move markets know it. Understand markets, decode money through the masters who shape them.
I think we are trying to get knowledge to smaller cities and towns, making it simple for retail investors. I think
Hello and welcome to KYC. I am Sharad Dubey and with me is Varsha Chandani and you are watching NDTV Profit. Our special segment KYC is there and the company on the radar today is Sgility. Of course, on back of earnings, it's buzzing in the street as well. Brokerages are upgrading and interestingly, numbers have been on the stronger side. But the key questions in our segment we are going to be asking about the companies is what would be the margins triggers, going ahead. The street wants to know. Of course, the earnings is very important. But apart from that, there are other things also which we should be watching out for. The second question would be what led to the guidance? Of course, Varsha was hearing the con call as well, and there was a revenue and EBITDA guidance upgrade also. Outlook coming in on the broad path, the acquisition was there, and where the cash deployment would be. It's a product-based companies, whether this will be an AI acquisition or another inorganic acquisitions, that is something which we will be watching out for. Also the debt reduction plans, of course, from IPO itself, debt reduction has been there, but will that be complete by FY27? That's the street question which we are looking out for. The outlook on the US healthcare system, what are the important benefits or the impacts which could see, and the demand trends in client additions. A lot of moving factors going ahead for this company, Varsha, but what's the entire detail about the company itself? Where does the company actually stand?
Well, thank you for that, Sharad. Let me explain in a very easy way what does this company do. So basically, this company takes over complex or non-medical tasks that are essential to healthcare but are very, costly for US companies to handle. So, for example, for payers, that is health insurance. So there are two clients for Sgility. One is health insurance companies, and the other one is, hospitals and doctors and clinics. So for payers, that is health insurance companies, what Sgility does is they handle the claim process, then ensuring that claims are validated and paid accurately. They also provide data management services in onboarding and verifying their health providers in payer network. For hospitals, what they do is they manage end-to-end management of financial operations from pre-service insurance verification to post-service billing. So basically, all the back working is been done by Sgility Healthcare, and that's the product-based company that Sharad was talking about. So it's nothing but the non-medical task that doctors, clinics, all health insurance companies that couldn't do is hand over to Sgility, and that's the basic business model of this company.
Well, that's a very interesting and a very simplified way. Thank you very much, Varsha, for that. But our viewers are waiting for what are the key parameters that will be judging them, this company on the KYC itself. Let's just go through the parameters and then we will go into the income statement first. Of course, balance sheet, cash flow, return ratio, shareholding, street cred, and valuation and outlook. These are the 8 parameters where we will be judging the company in our show KYC. First of all, income statement. That's something to look at. Numbers are pretty good. Varsha has also picked up some numbers over here, and if you see the overall data itself, it's not very big because it was recently listed last year itself, but overall the growth numbers, the revenue jump, that's been significant. EBITDA margins, they have maintained. EBIT margins, you could say flattish, but on the higher side at 26% odd. But look at the PAT numbers, that's what the street actually likes. 590 crores in FY24, FY25 it was 810 crore rupees. And the main reason for the stocks buzzing in today's trade as well is the Q2 performances. The performances came overnight. There was a 25% year-on-year growth coming in. Revenue, EBITDA also the story remains same. Slight dip in margin, but still at a healthy levels of 26%. But here as well, second time, net profit takes the cake. Almost 84% up on a year-on-year basis, and the margin trajectory itself that has been good, and we could say it's kind of stable at 26% plus. So from my side, the income statement, this would be a thumbs up. Nothing much to be concerned about regarding this income statement. I'm sure there's something in balance sheet. What you're looking at?
So, a very interesting case when it comes to Sgility's balance sheet, and one of the reason, why the net profit, there's been huge spike in net profit is because of lower interest costs. Because if you see their balance sheet, look at their balance sheet, their borrowings from FY24 from 1,934 crore has been reduced to 690 crore. And they want to go debt free by FY26. So overall, if you see, the highlighting factor in balance sheet is nothing but the reducing figure of borrowings, and that's the reason why we have given a thumbs up. Nothing much to be added when it comes to balance sheet, because this is the only thing why we have given a thumbs up. And when a company had come with an IPO, they had clearly mentioned that they want to cut down their debt, and the IPO proceeds are being used to cut down the debt. And by FY26, by end of FY26, you'll see this company may go to debt-free status, and that's where from FY25 to FY26 you will see a huge spike in net profit because of the reduced interest cost only. So thumbs up from my side when it comes to balance sheet.
Well, that's a very interesting point Varsha made. But cash flows, Varsha, looks kind of optically very strong. Operating cash flows have jumped up from 973 crores to almost 1214 odd crore rupees. PAT has also been a good number, and Varsha had stated earlier that this number might go up as well as the interest costs come down as company pays out its debt. Cash flow to PAT conversion, that a slight dip has come in if you compare that with FY24 itself. Net cash flows, there is no clear trend as such, but interestingly I would just like to point out that in this FY25 itself, there hasn't been much in the net cash flow segment. So net it's neutral. It's not very superlative as what we saw in the income statement or even the balance sheet, but from my side it's going to be a neutral rating going ahead.
Right, talking about the ratios, let's see what that number pans out to be. From in FY24, if you see, the ROC was around 47%, which has increased to 55%. Now this is on the back of the strong financials that the company has seen. So again, because of the good, rather increasing income statement, you're seeing this number go up, and one of the reasons why we have given a thumbs up when it comes to return ratios.
Well, that's pretty interesting. So till now, I think we did 4 parameters, and I think 3 of them they have done really well. What matters is numbers, what matters is earnings, and the company is showing. But let's look at some other numbers also. It's very important. And shareholding numbers we crunched, me and Varsha together, and over here, not much history because it's just been 14 odd months since the company has been listed. But look at the numbers. Promoters, of course, they did sell their stake, but FIs lapped up. They have doubled their exposure from 3%, now it's at 6 odd percent. And interestingly, where the promoters did a sell, DIs lapped it up. Look at that, that's a double exposure going up. 7%, now that has gone up to 15%. We understand flows in the institutional part, but even the retail has not left behind in the race. They have also almost double, you could say, from 7% to almost 12% in the shareholding pattern, and this is just a change happening in just 6 months. So that you can see how important this important number is there, which is flashing on your screen. So from the shareholding pattern perspective, I would like to give a strong thumbs up as well for Sgility.
Talking about the street cred, there now, if you see, we have given a thumbs down because company has not given much returns to its investors. The year to date, if you see, the return has been mere 1%. The last 6 months, company has seen 21% of returns, and in last 1 month it's 19%. I'm not saying that this is a very bad number, but not exciting number to be said. So overall we have given a thumbs down considering not an exciting returns that the company has given.
Well, that's true. When the returns are not exciting, what happens? The valuations turn a bit favorable. And that's what's happening in this stock as well. The price to earnings, the EPS numbers, there have been, slight jump coming in, but the P numbers, that's what I'm looking at. FY26, the numbers state at 31 times its price to earnings ratio. And for FY27, this comes in at 25 times. It's largely net in line with what the peers are having in the mid-cap product IT space. And a strong up moves is coming, at least in this space as well, because there is a hedge if you compare that with big service IT company players as well. From my side, it's a neutral rating. Nothing much to talk about, especially regarding the valuations. Let's give it more time, and then maybe we'll have some more information on that.
Yeah, onto the outlook, which is the last parameter when it comes to the KYC ratings. Overall, if you see the H2 and Q3 and Q4 for this company will be very good. So they are expecting this strong momentum to continue in H2 as well. Now, the important point, and maybe one of the reasons why the street is excited, because that's showing into the stock price, because they've increased their guidance, their revenue guidance to 21% revenue growth from 20% in last quarter what they've given, and they've also increased their adjusted EBITDA guidance to close to 25%. Debt to equity, debt will be fully repaid by FY27, and synergies is also expected when it comes to their broad path clients. So overall, Q3 and Q4, considering a strong quarters for the company, they're expecting this strong momentum to continue. And overall, the outlook, considering the deal wins, considering the broad path synergies to the business, considering the revenue increase in revenue guidance, we've given a thumbs up when it comes to outlook. So overall, outlook, from an outlook perspective, it's a good one.
Yes, and we did have a problem while we were discussing that what are the negatives for this company, and of course most of the parameters actually stood out. And just to get in our viewers who are just tuning in now, the most important thing is let's just revise all the ratings which have happened in the KYC segment. 2 thumbs up coming in, income statement and balance sheet. Cash flows largely neutral. The information is also on a limited basis. Return ratios, Varsha had pointed out, they are on the positive side. Shareholding also, we have given a +1. Street cred, not much returns coming in for shareholders who are holding the stock, say after the listing. Valuations still on a neutral basis. And lastly, outlook. That is what the street is cheering, Varsha. That overall there is a strong momentum coming in. So from our side, 6 out of 10. That's on the higher side we generally give when we have a KYC rating, KYC right? Ratings. So I'm of course new to this show, but Varsha is quite helping me a lot in this segment. But there's another person who will help us a lot in this segment, and that's the management of the company. Joining us, we are having Sarvabhauman Doraiswamy Srinivasan. He's the Executive Vice President and the Group Chief Financial Officer at Sgility. Good afternoon, sir. So first question, of course, would be the street is asking, is the second quarter numbers, but more than that, it's the con call. In the con call, you had stated that there is an increase in the guidance for the revenue and EBITDA. There is a slight increase in both sides. What led to this? What are the factors that led to you increase the guidance going ahead?
Yeah, firstly, thanks for having me on the show. Like we said on the earnings call, the synergies that we worked with BroadPath, the improved operational performance. In the last few years, the company has been consistently investing on new gen technologies, and AI has helped us improve our profitability significantly by almost 100 plus bits in terms of the operational performance. What we do is core to our client's operation. So it's not a discretionary spend, which means we are fairly in a, I wouldn't say a risky, but in a recession-proof sector where our revenues are stable. We are not a fast-moving company. We are a slow, steady, gradually moving up company. You can expect sustainable results. And from a margin perspective, the new wins that we have done